Today we'll start revising the paper that was examined in April 2022. We're going to start with the case study, which is titled HGS Limited. I read, HGS Limited is one of the supermarkets that has a large market share in retail business in East and Southern African region. Established 5 years ago in Kenya, HGS has 21 outlets and over 5,000 employees. HGS generally generates slightly over 20 billion in revenue annually. Paragraph 2. The board of HGS is aware that in the recent past, 2 of the largest supermarkets had exited the market and the other one was struggling due to the financial challenges. Paragraph 3. Aggressive expansion to increase presence in the region seemed to have been their strategic mistake. These supermarkets seemed too big to fail from the expansive reach and penetration in the market. Their failures affected several businesses in the value chain due to their inability to settle their debts. Business analysts and the media have argued the supermarket which went under had weak governance structures and their boards were making poor strategic business decisions. The board of HGS was also aware that boards and management of these retail companies were not inherently bad or in some way set upon being part of these corporate disasters. I repeat, the board of HGS was also aware that the boards and management of these retail companies were not inherently bad or in some way set upon being part of these corporate disasters. Paragraph 4. These organizations remain a reminder, if one is needed, that corporate failure could occur if those in charge lose their way. The board of HGS is interested in understanding why the boards of these retailers failed to detect warning signs during the early stages of failure, and if they indeed detected warning signals, why they decided to remain passive. In addition to the board wishes to find out why some supposedly talented and experienced boards often fail to intervene effectively in failing organizations despite their strategic position. The next paragraph reads, to address these concerns and others in order to enhance corporate governance in the firm, the board has requested you as a governance professional to examine the dynamics and challenges that may have confronted the boards of directors of these failed firms as failure progressed from one stage to another. From an in-depth study of available data on these firms and from other credible sources, you obtain the following information. 1. Generally, failure starts with the initial or pre-failure stage and is often brought by management inability to spot or underestimate early warning signals that indicate a potential threat to the organization's future survival. Number 2, there is consensus in the failure literature that each state of failure raises different organizational challenges. 3, an effective handling of failure requires management to use appropriate intervention strategies targeted at the unique challenges faced at that particular stage of failure. 4. Weisel and Johnson's 5-stage model shows that failure typically starts with blinded management, then inaction, followed by faulty action, then crisis, and finally dissolution. Next point. While management behaviors, roles, and power vary across life cycle stages, several behavioral factors such as the power of CEO through social networks and relationships have profound implications on board decision-making processes. Next point. Boards and directors fulfill their fiduciary duty to the shareholders by overseeing and monitoring CEOs and management actions, vetoing poor decisions to protect the interests of shareholders, and advising management in their efforts to increase shareholders' wealth. Next point, From unbroken chain of bad decisions over a period of time, boards of directors are supposed to draw upon their collective wisdom to spot some of the bad decisions and break the chain of errors before they spiral out of control. Next point, the role of the board is to assess the risk of each strategy. Data from collapsed supermarkets showed the 4 stages of organizational failure, management action, and board dynamics as follows. 1 is the conceptual stage. Under conceptual stage, point number 1, management made a chain of mistakes that and there was no deliberate attempt to involve the board when it was decided to expand into areas in which they had little or no experience. That is conceptual stage. Number 2, boards of directors exhibited groupthink mentality, blind faith in management, and failed to execute their corporate duties. Number 3, key outcomes included destruction of shareholders' value. The next stage is known as the warning signal stage. Point 1, management had started taking high-risk decisions and CEOs had started deliberate attempts to hide the warning signals and influence the boards to approve high-risk strategies. Number 2, boards of directors were not aware of the magnitude of crisis. They ignored initial signals and continued to have blind faith in management as the shareholder value continued to decline. The next stage is the rebellion stage. Management was chasing high risks that had short-term impact, showed intolerance of dissent, and focused on marginalization and management of dissenting directors. The last stage is the collapse stage. Under that we read, management ignored negative feedback and ultimate result was business failure. Required: A, evaluate 6 common board inefficiencies that might cause failure of HGS, 12 marks. Evaluate 6 common board inefficiencies that might cause failure of HGS. We are first going to answer that part of the question. April 2022, question 1. This is the case study. I implore you to go through the case study one more time, understand all the aspects of the case study, then you can come back so that we answer the questions together. Part A, evaluate 6 common board inefficiencies. 6 common board inefficiencies that might cause failure of HGS. Now, one obvious common board inefficiency is lack of independence. Inefficiency is lack of independence. Lack of independence. If board members have a close personal or financial ties to the company's management, their independence may be compromised, leading to potential conflicts of interest and biased decision making. So it's important that the board members maintain independence by refraining from being too close in person to the management, or having financial ties to the company, financial ties to the company's management, because that can lead to compromised decisions. Their independence may be compromised, leading to potential conflicts of interest and biased decision making. Number 2, groupthink. Now, board members may fall into a groupthink mentality where dissenting opinions are discouraged and critical discussions are avoided. And that can result in poor decision making as alternative viewpoints and potential risks are overlooked. Groupthink is a common board inefficiency where board members fall into groupthink mentality, where dissenting opinions are discouraged. That is one common board inefficiency. 2, inadequate risk oversight. Inadequate risk oversight. Failure to proactively identify and assess risks can leave the company vulnerable to unforeseen challenges. So boards should assess risks, should actively participate in risk oversight, and ensure that appropriate risk management strategies are put in place. So inadequate risk management is a common board inefficiency. Insufficient expertise. Insufficient expertise. Boards that lack diversity or in terms of skills and experience may struggle to address complex challenges effectively. And having a board with a diverse range of expertise can bring fresh perspectives and better decision making. So insufficient expertise is a common board inefficiency. 5, we can also cite passive board engagement. Passive board engagement. If board members are disengaged or rely too heavily on management for information, they may miss warning signals or even fail to adequately challenge management's decisions. And we read here that could be one of the cause of failure of the other supermarkets. Relying on, passively relying on information for management is a common board inefficiency. So candidates were to give 6. Now the 6th one could be poor communication. Poor communication. And information flow. Poor communication and information flow. Inefficient communication between the board and management can hinder the board's ability to understand the company's true financial and operational health. So there ought to be transparent and timely information, which is essential for effective decision making. So if there is poor communication and information flow between the management and the board, then that is a common board inefficiency. So these are 6 points, 12 marks. 6 points, 12 marks. 1, 2, 3, 4, 5, 6. 12 marks. Part B of the question reads, under each of the 4 stages of organizational failure, discuss board dynamics which could be present in the boardrooms of the failed supermarkets. I repeat, under each of the 4 stages of organizational failure, discuss board dynamics which could be present in the boardrooms of the failed supermarkets. So we read 4 stages. The conceptual stage, the warning signal stage, rebellion stage, and collapse stage. So candidates were to give under each of the 4 stages to discuss board dynamics. This is B. Part B, we are to discuss board dynamics under each of the stages, starting from the conception stage. Conceptual stage. Now, candidates, under the conceptual stage, we read here that data from collapsed supermarkets showed the 4 stages of organizational failure, management action, and board dynamics as follows. Under conception stage, we read management made a chain of mistakes and there was no deliberate attempt to involve the board when it was decided to expand into areas in which they had little or no experience. Number 2, boards of directors exhibited groupthink mentality, blind faith in management, and failed to execute their corporate duty. So the one dynamic we can read directly from the question here is groupthink mentality. Groupthink mentality. Number 1 is groupthink mentality. Groupthink mentality. The board exhibits a lack of critical thinking and blind support. It supports the management blindly without conducting thorough due diligence on expansion plans. This is what happened. We've read that the management made a chain of mistakes and there was no deliberate attempt to involve the board when it was decided to expand in areas in which they had no. Then number 2, we read the board exhibited groupthink mentality, blind faith. That means that the board of directors did not carry out due diligence. Blind faith in management and failed to execute their corporate duties. And then what? And failed to execute their corporate duties. So failure in corporate duties is another dynamic. Failure in corporate duties. That's another board dynamic. All right. The board fails to execute its fiduciary duties, such as challenging management strategy and assessing the risks involved in expansion. Exhibited groupthink, blind faith, and failed to execute their corporate duties. That is at the conception stage. Board dynamics at the conception stage. Then there is the warning signal stage. Warning signal stage. Warning signal stage. Warning. What were the board dynamics at this stage? The group dynamics at this stage. Candidates, we read under warning signal stage that management had started taking high-risk decisions and CEOs had started deliberate attempts to hide the warning signals and influenced boards to approve high-risk strategies. So management has started taking high risk, all right? Then we also read that boards of directors were not aware of the magnitude of the crisis. The boards of directors were not aware of the magnitude of the crisis. So that the dynamics there is lack of awareness. Lack of awareness. Number one, lack of awareness. I'm picking the answers directly from the question. Lack of awareness. We read here the management, the board were not aware of the magnitude of the crisis. That is lack of awareness. The board remained unaware of the magnitude of the crisis and ignored the early signs, ignored the warning signs, ignored the early signs, warning signals that indicated potential risks. Then under warning sign, warning signal, we read that the boss were not aware of the crisis. They ignored the initial signals and continued to have blind faith in management. Blind faith in management is another dynamic there. Blind faith in management. Blind faith in management. The board had blind faith in management as the shareholder value continued to decline. The board continued to trust management despite the declining shareholder value, leading to failure to intervene effectively. So these are the dynamics at the warning stage. Then there is a next stage, which is the rebellion stage. Rebellion stage. The rebellion stage. Now, at the rebellion stage, we read that management was chasing high risks that had short-term impact, showing intolerance of dissent, and focused on marginalization and punishment of dissenting directors. Right? That is intolerance. Intolerance. All right? Intolerance of dissent. Intolerance of dissent is one dynamic. Intolerance of dissent. Intolerance of dissent. The board became intolerant of dissenting views and did not encourage open discussions, leading to lack of diverse perspectives in decision making. So that is what happened at the rebellion stage. Management was chasing high risks that had short-term impact, showed intolerance of dissent, and focused on marginalization. Focused on marginalization and punishment of dissenting directors. That is marginalization of dissenters. Marginalization of dissenting directors. That is the board dynamics at the rebellion stage. Marginalization of dissenters. Management suppressed dissenting directors' voices, limiting the board's ability to consider alternative strategies. When you marginalize and punish dissenting directors, then you are avoiding alternative perspectives from those who are dissenting. So that is the rebellion stage. Those are the dynamics at the rebellion stage. Then we have the last stage, which is the collapse stage. The collapse stage. The collapse stage. What were the dynamics at the collapse stage? We read that management ignored negative feedback and the ultimate result was business failure. Do you see that? Ignored negative feedback. So ignoring negative feedback is the dynamic. Ignoring negative feedback. Ignoring of negative feedback. The board ignored negative feedback. The board ignored warnings leading to failure to corrective action. Management ignored negative feedback. The management ignored negative feedback, ignoring of negative feedback. And due to the fact that the management ignored negative feedback, it then lacked accountability. You understand? Lack of accountability. That led to lack of accountability. And the failure to hold management accountable for poor decisions and performance allowed the situation to worsen. Lack of accountability allowed the situation to worsen. So that is the dynamics at the collapse stage. So we've answered question, this is question A. Question A, question B, 8 marks. Question B, 8 marks. The board dynamics at the conception stage, we have cited group think mentality. Group think mentality. There is failure in corporate duties. These are fiduciary duties. Then at the board dynamics at the warning signal stage, lack of awareness. Then there is blind faith in management. The dynamics at the rebellion stage, we have intolerance of dissent and marginalization of dissenting directors. At the collapse stage, the board dynamics, ignoring negative feedback and lack of accountability. That is part B of the question. Moving on to part C, we read, for each stage identified in B above, summarize key measures the board of HGS should use to prevent or reverse organizational failure. C, Roman 1. Measures to reverse organizational failure. What are the measures that could reverse organizational failure? That is the question. And the question is for each stage identified. For each stage identified. First of all, we have the conception stage. Conception stage. What measures could reverse organizational failure at the conception stage? Here we saw that the organization failed to carry out due diligence. We read that management, at the conception stage, management made a chain of mistakes and there was no deliberate attempt to involve the board when it was decided to expand into areas in which they had little or no experience. Board of directors exhibited groupthink mentality and failed to execute their mandate. There was no due diligence here, candidates, and therefore, one way measure to reverse organizational failure at the conception stage is to conduct comprehensive due diligence. Conduct comprehensive due diligence. 1. Conduct comprehensive due diligence. The board should conduct comprehensive due diligence at the conception stage to reverse organizational failure. That's one thing the organization can do. The board should conduct thorough due diligence before approving expansion plans. The board should assess potential risks and benefits. Conduct. These are how many points? It should just be 1 point. We've mentioned 1. Then at the warning signal stage, what should the management do to reverse organizational at warning signal stage? We read at warning signal stage that management had started taking high-risk decisions, and CEOs had started a deliberate attempt to hide the warning signals and influence the board to approve high-risk strategies. It influenced the board to do what? To approve high-risk strategies. So the one measure here is to enhance board awareness, because we also read that the board of directors were not aware. So one measure there is to enhance board awareness. Enhance board awareness. The board was not aware of some of the decisions that the management made. So the board should actively seek and analyze early signs, and also encourage open communication between the board and the management. That is one measure to take at the warning signal stage. The next stage is the rebellion stage. What measure should be taken at the rebellion stage? We read that at the rebellion stage, management was chasing high risks that had short-term impact, showed intolerance of dissent, and focused on marginalization and punishment of dissenting directors. So what do you think should be the measure there? The obvious measure there is to encourage open debate, promote open debate. To counter that, promote open debate. Instead of suppressing dissenting voices, promote open debate. Encourage a culture of constructive debate and diverse perspectives in board discussions, ensuring that all directors' voices are heard. Another way is to ensure board independence. Ensure the board operates independently from management, allowing for objective assessment of high-risk strategies. That is what can be done at the rebellion stage. Then at the collapse stage, what measure can be taken at the collapse stage? We read that at the collapse stage, management ignored negative feedback, and the ultimate result was business failure. Management ignored negative feedback. That is to do with evaluation. The best measure there is to implement regular performance evaluations. Implement regular performance evaluation or reviews. Implement regular performance reviews. Implement regular performance reviews. Conduct regular performance evaluations for management, as well as board members, to assess their effectiveness and identify areas for improvement. Another measure there could be fostering accountability. Foster accountability. Foster accountability. Because here we read that at the collapse stage, there was lack of accountability. So the corrective measure is to foster accountability. Hold management accountable for their decisions. Hold management what? Accountable for their decisions and actions, and ensure that there are consequences for poor performance. So these are the measures, the key measures the board can use to prevent or reverse organizational failure. One, at the conception stage, conduct comprehensive due diligence. At the warning stage, enhance board awareness. At the rebellion stage, promote open debate. At the collapse stage, can foster accountability or implement regular performance reviews. These are 4 marks. 4 marks. That is C Roman 1. Then we have C Roman 2. This was C Roman 1. C Roman 1. Then we move on to C Roman 2. What is the question? Explain how regular board evaluation at HGS Limited could have contributed to organizational sustainability. We saw that HGS is a company that is doing well, apart from the competitors who are experiencing problems. We read that HGS is one of the supermarkets that has a large market share in retail business in East and Southern African region. Established 5 years ago in Kenya, HGS has 21 outlets and over 5,000 employees. HGS generates slightly over 20 billion in revenue annually. All right. So the question here is, how regular board evaluations could have contributed to organizational sustainability. HGS is still in operation, but its competitors have gone under. HGS has been conducting regular board evaluation. So explain how regular board evaluation could have contributed to organizational sustainability. That is a question. How That is the question. How regular board evaluation contributed to organizational sustainability at HGS Limited. Now, one way is identifying weaknesses. It is through board evaluation that weaknesses of the board can be identified. Board evaluation is the same as board assessment. When the performance of the board is assessed, is evaluated, then it's possible to identify weaknesses. Board evaluations help to identify weaknesses. It helps to identify inefficiencies. It helps to identify gaps in board performance, enabling the board to address the issues proactively instead of waiting up to the collapse stage. Because here we said implement regular board reviews. If the other companies were to implement regular board reviews, then they could be sustainable. But they are not sustainable because they failed to implement regular performance reviews. But HGS has been carrying out regular performance reviews, And one way in which that has helped the company to remain afloat is because regular reviews help the company identify weaknesses and inefficiencies, which can then be proactively be addressed. That is point number one. Number two, we are discussing ways in which board evaluations contributed to organizational sustainability at HGS. Board evaluation also can enhance diversity. Enhances diversity. Board diversity. Enhances board diversity. Evaluation can highlight the need for more diverse for a more diverse board, ensuring broader range of perspectives in decision making. Because when carrying out board evaluation, board diversity is one of the areas that has to be assessed. And when after assessing board evaluation, then after assessing board diversity, then the company can enhance board diversity. The evaluation can highlight the need for a more diverse board. After assessing the board's diversity, the board can identify areas or skills or competencies which are required, because an assessment can reveal the need for diverse skills or competencies. 2, improves or enhances communication. Improves communication. Board evaluations can assess communication processes and help improve the flow of information between the board and management. We saw in the companies that failed that there was an information gap. There was poor information, communication and information flow from management to the board. And when carrying out board evaluation, one area in which evaluation can be done is in communication processes, particularly between the board and the management. And after carrying out board evaluation and there is a deficiency or inefficiency in terms of in the communication processes, that can be improved or corrected. But if evaluation is not carried out, it may not be possible to identify the gaps in information processes or communication processes. Four, strengthens risk oversight. Board evaluation can strengthen risk oversight. Evaluations can assist or board assessment. In other words, I'm saying board assessments can assess the board's risk oversight capabilities and then lead to development of more effective risk management strategies. You understand? Board evaluation can strengthen risk oversight, can strengthen risk oversight. Explain how regular board evaluation could have contributed to organizational sustainability. So these are some of the ways. 1, identifying weaknesses. 2, enhance diversity, improves communication, strengthens risk management. Candidates were to give 3 points to earn 6 marks or 4 points to earn 1.5 marks, total 6 marks. That is part C, Roman 2. D, I read, discuss 5 ways of planning and conducting effective board meetings at HGS Limited. 10 marks. Ways of planning and conducting. Ways of planning and conducting board meetings. This question has been repeated many times. When discussing meetings, the first thing that comes to mind is agenda. Clear agenda. You cannot have a meeting without agenda. Develop clear and focused meetings agendas in collaboration with the board chair and management, and ensure that key strategic issues are prioritized. Then you cannot have the board members having meetings without information or materials. There ought to be timely distribution of materials. Timely distribution of materials. Timely distribution of materials. Distribute materials for the meeting well in advance to allow board members ample time to review and prepare for the meeting. That will then ensure productive discussions during the meeting. These materials could be reports, financial reports, and so on. Then the third way of planning and conducting a board meeting is efficient use of technology. We heard that this is a big company spread across East and Southern Africa region. This company could be having directors from many parts of the region. So the company can make use of proper use of technology, efficient use of technology. The company can embrace technology for virtual board meetings or to facilitate real-time updates during in-person meetings. Why? Because technology can enhance communication and collaboration. We talked about distribution of materials. The company can take advantage of technology to distribute materials to the shareholders and so on. So efficient use of technology can be a way in which the company can plan and conduct board meetings. The fourth way, active participation. Active participation. The chairman should encourage active participation from all board members, ensuring that everyone has an opportunity to contribute and share their insights. To avoid what we saw at the conception stage, the groupthink mentality. One way to address groupthink mentality is to ensure that everyone contributes, every board member contributes, including those who are dissenting. Ensure that everyone has an opportunity to contribute and share their insights. Then lastly, post-meeting follow-up. Post-meeting follow-up. The chair should provide concise and accurate meeting minutes. The chair should ensure that there is provision of concise and accurate meeting minutes promptly after the meeting. The chair should also ensure that he has clearly outlined item actions or action items, including responsibilities and timelines for follow-up, ensuring accountability. So these are 5 ways of planning and conducting board meetings. Number 1, there ought to be clear agenda, timely distribution of information before the meeting, materials that are required for the meeting. The company can make use of technology, efficient use of technology, like virtual board meetings. During discussions, every board member should participate actively, active participation. Then lastly, post-meeting follow-up. Post-meeting follow-up. Those are 5 ways, 10 marks. 5 ways, 10 marks. 5 ways, 10 marks. So that will be 10. How many marks? 10 marks. So we've answered the case study that was examined in April 2022. Part A of this question: explain 6 common board efficiencies that might cause failure at HGS. 12 marks. These are 12 marks. Then part B: under each of the 4 stages of organizational failure, discuss board dynamics which could be present in the boardroom of the failed supermarkets. Part B. Part B, 1, 2, 3. So these are 8 marks. Part B, 8 marks. So you have 12 plus 8 is 20. Then part C, part C Roman 1. This is part C Roman 1. We have how many marks? Part C Roman 1. Part C Roman 1, 4 marks. These are 4 marks. Then part C Roman 2, 6 marks. These are 6 marks. Then D, 10 marks, giving us a total of 40 marks. So those are the suggested solutions. Thank you for attending the lesson. Starting from the next lesson, I'll be attempting question 2, then question 3, 4, then lastly question 5. We are going to answer all the questions just as we have done in other sittings. Thank you. God bless you. Bye-bye. Greetings and welcome to the lesson. The subject is boardroom dynamics. Today we're going to answer question number 5 from the August 2022 sitting. We've been answering questions from this sitting. So far we've done question 1 up to question 4. Today we are winding up with question number 5. Question 5 reads: 5 to consider when designing an effective board meeting. Question 5A. Factors to consider when designing an effective board meeting. The first one is agenda clarity. Agenda clarity. Board meeting must have an agenda, and the agenda must be clear. Ensure that the meeting agenda is clear, well structured, aligned with the key topics, and so on. So the agenda should have a logical flow, and each item should be accompanied by relevant supporting materials. Agenda clarity is a factor to consider when designing an effective board meeting. The second point is meeting frequency. Determine the appropriate frequency of board meetings that should be based on the company's needs and operational requirements. And candidates, regular meetings ensure ongoing oversight and engagement, but should not be too frequent. When meetings are too frequent, then there is a risk for information overload. 3, time management. Management of time. Allocate sufficient time for each agenda item and adhere to the schedule to ensure that all important topics are adequately discussed. So managing time effectively helps avoid rushed discussions and incomplete decision making. Time management, very important, key factor to consider. Participation and engagement. Number 4, participation and engagement. Participation and engagement. Encourage active participation. Encourage active engagement of all board members during the meeting. So the leader should foster an inclusive environment where everyone feels comfortable to contribute to the discussions. Another factor is information and reports. Information and reports. Information and reports. Provide board members with timely and relevant information and reports before the meeting to allow sufficient time for review. And the leader or the chair should ensure that all necessary materials are distributed, and they ought to be distributed in advance to facilitate informed decision making. So these are 5 factors to consider when designing an effective board meeting. 1, agenda clarity. 2, meeting frequency. 3, time management. 4, participation and engagement. 5, information and reports. 5 factors, 5 marks. Part B, identify 5 responsibilities of the corporate secretary in boardroom dynamics. Responsibilities of a corporate secretary in boardroom dynamics. Responsibilities of a corporate secretary in boardroom dynamics. The first responsibility is in relation to logistics, meeting logistics. And candidates here, you need to be very keen. The question is not requiring candidates to give the general responsibilities of a secretary, a corporate secretary, but the responsibilities must be in relation with boardroom dynamics. What happens in the boardroom during discussions? What are the responsibilities of the corporate secretary? The interactions of the board members. During the interactions of the board members, what are the responsibilities of the corporate secretary in boardroom dynamics? The first responsibility is meeting logistics. The corporate secretary is responsible for arranging board meetings, coordinating logistics, and sending out meeting notices, ensuring that all necessary materials are available to directors before the meetings. Here we've just talked about information and reports. These reports are sent to the members in advance by the corporate secretary. The corporate secretary may be required to prepare even board papers and send to board directors before meeting. So meeting logistics. There are logistics around meetings, and the corporate secretary is responsible for arranging the meetings, coordinating logistics, and sending information and reports before the meetings are held. Then there is a responsibility in relation to minutes. Meeting minutes. Meeting minutes. Meeting minutes. During board meetings, the corporate secretary takes accurate and comprehensive minutes. These are minutes of discussions, minutes of decisions, and action items. And the minutes serve as an official record of the meeting and are crucial for future reference. Three, compliance and governance. Compliance and governance. The corporate secretary ensures that board meetings comply with the legal and regulatory requirements, as well as corporate governance best practices. The corporate secretary keeps the board informed of any changes to regulations that may affect board operations. Compliance and governance. 4 is transparency and communication. Communication and transparency. Communication and transparency. The corporate secretary facilitates clear and transparent communication between the board, management, and stakeholders. The corporate secretary may also handle communication with shareholders and other interested parties. He's the one who communicates with stakeholders. He's a link between the board and the stakeholders. 5, the fifth responsibility is in relation to board effectiveness and evaluation. Board effectiveness and evaluation. Board effectiveness and board evaluation. It is the corporate secretary that plays the role in coordinating board evaluations, ensuring that the evaluation process is conducted objectively and that the findings are appropriately communicated to the board for improvement. So these are 5 responsibilities of the corporate secretary in boardroom dynamics. 1, meeting logistics. 2, meeting minutes. 3, compliance and governance. 4, communication and transparency. 5, boardroom effectiveness and evaluation. 5 marks. I'm now going to take the last part of this question. Assess 5 types of board diversity. Very easy one. Types of board diversity. Types of board diversity. The first obvious one is gender diversity. Gender diversity refers to the representation of both men and women on the board. So having a mix of male and female directors bring diverse perspectives and experiences to board discussions. So gender diversity, I repeat, refers to the representation of both men and women on the board. 2, ethnic and cultural diversity. Ethnic and cultural diversity involves having board members from different racial and cultural backgrounds. Racial and cultural backgrounds. And diverse cultural perspectives can enhance decision making and better reflect the organization's diverse stakeholders. Cultural and ethnic diversity is a type of diversity. Diversity can also be in relation to age. age diversity. Age diversity refers to having boardroom members from different age groups and combining the experience of seasoned directors with the fresh perspectives of younger members can be beneficial to board effectiveness. So there ought to be diversity in age of the board members. 4, professional and industry diversity. Professional and industry diversity is yet another type of board diversity. And here, board members with the varied professional backgrounds and expertise from different industries bring a wide range of skills and knowledge to the boardroom. Different professionals. You may have a board comprising of medical doctors, accountants, lawyers, engineers. Those are different professional backgrounds. So it's important to have a mix of professionals from different industries. Then lastly, we have international diversity. International diversity involves having board members from different countries or regions, because global perspectives can be valuable, especially for companies with international operations or aspirations. So these are 5 types of board diversity. 1, gender diversity. 2, ethnic and cultural diversity. 3, age diversity. 4, professional and industry diversity. Then lastly, we have international diversity. 5 types, 5 marks. And that effectively brings the revision of the August 2022 past paper question that was done by certified secretaries. The subject is boardroom dynamics. I've done question 1 up to question 5. Thank you for attending. We are determined to ensure that you have access to all solutions of the certified secretary subjects, including boardroom dynamics. We have done all questions that have been tested since the subject was first examined after the review of the Kasneb syllabus. So all questions are available on our website. You can visit and log in and subscribe. We allow you also to download the videos. These video lectures can be downloaded on your computers and you can access them offline. You don't have to be online to access these videos. If you have any challenges in downloading, you can please call the official lines that are on the website. Thank you. God bless you. Bye-bye.
Part B of the question reads as follows. S and M are advocates operating under the name SM Advocates. The firm's trial balance for the year ended 30th June 2022 is as shown below. They are talking of costs charged to clients through to capital. Of course, the trial balance has been given and it is balancing at 1,518,000 and also 1,518,000. Additional information. It's estimated that debts amounting to 16,500 are uncollectible and should be written off. Depreciation, that is number 2, depreciation should be provided at the rate of 20% per annum on the book value of the furniture, fittings, and library books. The uncompleted work on 30th June 2022 was valued at 70,500,000. required statement of profit or loss for the year ended 30th June 2022 and the statement of financial position as at 30th June 2022. So this question was under preparation of financial statements from other entities, and more specifically it's about professional firms, and this is a firm for advocates. So we'll go straight to the first part of the required, that is Roman 1, SM advocates, SM advocates, statement of profit or loss, statement of profit or loss, statement of profit or loss for the year ended, for the year ended 30th June, for the year ended 30th June 2022. Great. So shillings, cost charged to clients, that is the same as professional fees. So we are going to use as it is, costs charged to clients, same as professional fees, 750,000. Add work in progress carried down. A work in progress carried down is the same as additional information number 3, and completed work, that is 7,500. Less work in progress brought down. Work in progress brought down is the same as the work in progress balance brought down on the trial balance, 110,400. So this one is going to be deducted. So that is 750,000 plus 7,500 minus 110,400, 710,100, 710,100. That is like total income. Total professional fees for that period, less expenses, The first expense is office expenses. The office expenses amounted to 25,500. 25,500. Postage, telephone and internet. Postage, telephone and internet. So postage, telephone and internet amounted to 54,600. 54,600. Printing and stationery. Printing and stationery amounted to 105,000. Printing and stationery. Rent and rates. Rent and rates, 180,000. That has been given us 180,000. Salaries to staff. Salaries to staff to 16,000. Salaries to staff is 216,000. And finally, the expenses on the trial balance have been exhausted. We move to the additional information number 1. There is irrecoverable debts. Irrecoverable debts amounted to 16,500. And finally, depreciation, which is being provided on furniture and fittings, and depreciation is at the rate of 20% per annum on book value. 20% per annum on book value. So we have the figure of furniture, which is of course at book value. So that is 20% times the value of furniture is 135,000. 135,000. That will give us 135,000 times 20%, 27,000. 27,000. Once you have the expenses there, it is 25,500 plus 54,600 plus 105,000 plus 180,000 plus 216,000 plus 16,500 plus 27,000. This is 624,600. 624,600. And profit for the year. Profit for the year. The profit for the year is 710,100 minus the answer 85,500. 85,500. So that was the statement of profit or loss for that professional firm during that particular period. That takes us to the statement of financial position. SM Advocates. SM Advocates. Statement of financial position. Financial position as at 30th June. 30th June 2022. As at 30th June 2022. So we have assets, or before assets we can bring in the two columns. And non-current assets. Under non-current assets, we have furniture, fittings, and library books. Furniture, fittings, and library books. Furniture, fitting, and library books. Now let us compute the book value for the same. The cost is 135,000. Remember, the cost was 135,000 minus depreciation, which we've computed as 27 minus 27,000. That is the depreciation that we even computed in the statement of profit or loss. The book value is 108,000. 108,000, and that is the only non-current assets. Current assets. Current assets. We have the first one being work in progress, carried down, work in progress at the end of the year. The work in progress at the end of the year, in additional information number 3, was 7,500. We have receivables. Receivables. Receivables amounted to 234,000. 234,000. Cash at bank. Cash at bank. Or before we record cash at bank, receivables is to be affected because there was irrecoverable debts. There was some irrecoverable debts, so this one is going to be reduced. So that is 234,000 minus the recoverable debts of 16,500. 16,500. So that is 234,000 minus 16,500, 217,500. 217,500. Then there is cash at bank divided into two. There is client and there is office account. Client account and office account. Client account is 74,400. Office account is 167,100. 167,100. Any other current asset here? We have disbursement on behalf of clients. 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 36,000. 36,000. Disbursement on behalf of clients. 36,000. So the total assets. Total current assets 7,500 plus 217,500 plus 74,400 plus 167,100 plus 36,000 565,500 565,500 565,500. Total assets. Total assets plus 108,000 673,500 673,500. From that point we move to capital and liabilities. Capital and liabilities, and we have capital. The capital account stood at a balance of 612,000. Add profit. Profit for the year. The profit for the year was 85,500 less drawings. Drawings amounted to 180,000. Drawings amounted to 180,000 and they are to be subtracted. So that is 612,000 plus 85,500 minus 180,000. 517,500. Non-current liabilities. Non-current liabilities, and non-current liabilities were not there, so it's going to be nil. Current liabilities. Current liabilities were given as follows. We have clients for monies held on their behalf. So clients for monies. Clients for monies held, of course, on their behalf, for monies held on their behalf, amounted to 74,400. 74,400. Creditors 81,600. Creditors, 81,600. Total is 74,400 plus 81,600, 156,000, which gives us the total capital and liabilities. Total capital and liabilities, which is 517,500 plus 156,000, you get 673,500. 673,500. 673,500. So, learners, that is how the question was supposed to be handled. That is for financial reporting August 2022 question 4, which combined lease accounting IFRS 16 and also professional firms in financial statement of other entities, and more specifically professional firms. See you again in our other subsequent revisions. My name is Nicholas Sikali.
Hello and welcome back to the revision session for the subject Boardroom Dynamics. Today I'm going to answer question number 3 that was tested in April 2023. The question is in 3 parts, A, B, and C. I'll first answer part A, which says, highlight 4 guidelines for creating an effective board meeting agenda. Guidelines for creating an effective meeting agenda. The first guideline is to prioritize key issues. When developing a meeting agenda, it's important to prioritize the key issues. Do you understand? Prioritize key issues. That means include the most critical and time-sensitive topics at the beginning of the agenda, because that will ensure that important matters receive sufficient attention, they receive sufficient discussion before the board may become fatigued or before time runs out. So prioritize key issues. When setting an agenda for a meeting, it's important to have the key issues being discussed first. The most critical issues should be at the beginning of the agenda. The second guideline is to provide sufficient information. Provide sufficient background information. Provide sufficient background information. That means distribute the relevant data, distribute the relevant materials, distribute the relevant reports well in advance of the meeting. The board members should have ample time to review the information thoroughly, allowing them to have informed discussions during the meeting. Provide sufficient background information. This could be materials and so on. Board papers must be distributed well in advance. Focus on strategic matters. Focus on strategic matters. When drafting the meeting agenda, it's important to focus on strategic matters. Focus on strategic matters. The agenda should primarily focus on strategic and high-level issues rather than delving into operational details. That ensures that the boss time is spent on matters that require their expertise, matters that require their oversight. Another guideline is to allocate time wisely. Allocate time wisely. Allocate time wisely. Allocate appropriate time slots for each agenda item to avoid rushing through essential topics or allowing some items to dominate the discussions. So time management is crucial to maintain the meetings productivity and stay on schedule. The board may have many matters to discuss during the meeting. So when creating an effective meeting agenda, ensure that every item on the agenda has been allocated sufficient time for discussion. So these are 4 guidelines. Highlight 4 guidelines. Number 1, prioritize key issues. Number 2, provide sufficient background information. Number 3, focus on strategic matters. Number 4, allocate time wisely. These are 4 guidelines to earn 4 marks. A candidate would earn here 4 marks for highlighting the 4 guidelines. Then part B of the question reads, organizational politics are informal, unofficial, and sometimes behind the scenes efforts to sell ideas, influence an organization, increase power, or achieve other targeted objectives. Explain 5 strategies to reduce negative organizational politics. All right, strategies to reduce negative organizational politics. That is the question. B. Strategies to reduce negative organizational politics. What are these strategies? The first one is to have in place what we call transparent communication. Transparent communication. The first strategy is have transparent communication. Transparent communication. The organization should promote open and honest communication within the organization. Why? Because transparent communication reduces misinformation and rumors that can fuel negative politics. Encourage transparent or promote transparent communication. Number 2, establish clearly defined roles and responsibilities. Establish clearly defined roles and responsibilities. The management should establish clear job responsibilities, job descriptions, and delineate the role and responsibilities for each position. Why? Because that reduces ambiguity and potential for power struggles. Because sometimes we've read here politics is about informal, unofficial, and sometimes behind the scenes efforts to sell ideas and influence organizational or even increase power and so on. So to reduce negative organizational politics, there should be in place clearly defined roles and responsibilities for each and every employee, each and every position. There should be clear job descriptions. Do you understand? Correct. Number 3, encourage collaboration The organization should encourage collaboration. The organization should foster a culture of collaboration and teamwork, where employees are encouraged to work together rather than competing against each other, and in most cases for personal gain. The organization can also have what we call performance-based rewards. Performance-based rewards. Performance-based rewards. Performance-based rewards. Implement performance-based reward systems that emphasize merit and achievement rather than rewarding employees based on political maneuvers. There are some employees who could be very good in politics, and they may want to be rewarded based on their maneuvering. So to avoid negative organizational politics, the organization should put in place performance-based rewards. Performance-based rewards. Implement performance-based reward systems. 5, fair and inclusive decision making. Fair and inclusive decision making. The organization involve employees in decision making processes when appropriate, and it should ensure that decisions are made fairly. Decisions are made inclusively, taking into account diverse perspectives. That can reduce organizational politics. Fair and inclusive decision making. So these are 5 strategies. Candidates were to give 5 strategies that could reduce organizational politics. The first strategy is transparent communication. Number 2, clearly define roles and responsibilities. Number 3, encourage collabos. Number 4, performance-based reward systems. Number 5, fair and inclusive decision making. That's part B. 5 strategies, 5 marks. 5 strategies, 5 marks. Part C, I read, good corporate governance dictates that, I repeat, good corporate governance dictates that board diversity with regard to academic qualifications, technical expertise, and relevant industry knowledge, experience, nationality, age, race, and gender should be emphasized. Analyze 6 benefits of this diversity. Benefits of diversity. That is part C. Benefits of diversity. The root of this question reads, good corporate governance dictates that board diversity with regard to academic qualifications, technical experience, relevant industry knowledge, experience, nationality, age, race, and gender should be emphasized. What are the 6 benefits of this diversity? 6 benefits of board diversity. That is the question. Benefits of board diversity. The first benefit is enhanced decision making. Because candidates, the board is all about making decisions. The board exists to make decisions. So where there is board diversity, then decision making is enhanced. Diverse boards bring wider range of perspectives. They bring wide range of experiences, leading to more well-rounded and informed decision making. Why? Because different viewpoints can challenge assumptions and lead to innovative solutions. Number 2, better risk management. Board diversity can lead to better risk management. Better risk management. Board diversity candidates enables more effective risk management. Why? Because different backgrounds and expertise among the directors allow for a comprehensive assessment of risks and opportunities. It also allows for minimization of potential blind spots and so on. It leads to better risk management. Number 3, improved corporate reputation. A board that has diverse experience, has diverse expertise, has diverse relevant industry knowledge, it has technical experience, it has diverse academic, where members have advanced academic qualifications, such a board can lead to improved corporate reputation. Why? Because emphasizing diversity in the boardroom signals a commitment to inclusivity and can enhance the company's reputation among customers and other stakeholders. So, board diversity can lead to improved corporate reputation, which is an asset. Number 4 is the point on understanding of the market. Okay, increased market understanding. Board diversity can lead to increased market understanding. What does that mean? That means that a diverse board can better understand the needs and preferences of diverse markets and customer segments, leading to a more tailored and effective strategies, because you have people with diverse knowledge and understanding. And do you understand? 5, enhanced board performance. The performance of the board is enhanced where there is diversity among on the board. Board diversity fosters a dynamic and intellectually stimulating environment, which can lead to improved board engagement and performance. 6, attracting and retaining talent. Attracting and retaining talent. Organizations with diverse boards are more attractive to talented individuals seeking opportunities in an inclusive and forward-thinking environment. And that enhances the company's ability to attract and also retain top talent. So these are 6 benefits of board diversity. Number 1, enhanced decision making. Number 2, better risk management. Number 3, improved corporate reputation. Number 4, increased market understanding. Number 5, enhanced board performance. And lastly, attracting and retaining talent. These are 6 benefits of board diversity. 6 benefits, 6 marks. So that will mark the end of the question number 3 that was done or tested in April 2023. We've answered part A, 4 marks, part B, 5 marks, and then part C, 6 marks, giving a total of 15 marks. We'll stop at that. When we meet next time, we are going to answer question number 4. Bye-bye. Hello and welcome back to the lesson. Today we are going to continue with the revision of the boardroom dynamics paper that was done in April 2023. In our last session, we answered question number 1, which is a case study. Today we're going to do question number 2, which is in 3 parts, A, B, and C. We'll first answer part A. I read. One tier board is a model in which the board of directors function as a collectively appointed corporate body. Explain 3 merits of this model. Merits of a one-tier board. One-tier board. That is question 2A. Merits of a one-tier board model. Merits of a one-tier board model. Now, the first merit or advantage of a one-tier board model is efficiency and streamlined decision making. Efficiency and streamlined decision making. Now, in a one-tier board, there is a single board of directors that is responsible for both strategic decision making and oversight of management. So a single board does the strategic decision making and oversight of the management. In such a model, there is efficiency and streamlined decision making. Why? Because the streamlined structure allows for quicker decision-making processes, as there is no need to coordinate between separate management and supervisory boards. All right? It is just a single board model as opposed to a two-tier board where we have 2 boards. And therefore, in a one-tier board, there is no need to coordinate between separate boards, management and supervisory boards. So that's one merit, efficiency and streamlined decision making. 2, better communication and coordination. Better communication and coordination. Now, the one-tier board model fosters direct communication, fosters direct collaboration between the executive and the non-executive directors, and that facilitates a more holistic understanding of the company's operations, challenges, opportunities, and it leads to a more informed and comprehensive decision making. 3, alignment of interests. Alignment of interests. In a one-tier board, the directors have same fiduciary duty to act in the best interest of the company. Do you understand? Why? Because this model promotes better alignment of interests among directors, reducing the potential for conflict that may arise in a two-tier board structure, where the executive and the non-executive directors may have different interests. So a one-tier board fosters alignment or promotes alignment of interests. So these are 3 merits. Candidates were to give 3 merits of a one-tier board. Number 1, promotes efficiency and streamlined decision making. Number 2, leads to better communication and coordination. Number 3, alignment of interests. 3 merits would earn the candidate 3 marks. Those are the suggested merits. Part B of the question reads, Ram Charan, a world-renowned expert in corporate governance, classified the evolution of boards into 3 stages. Describe these 3 stages. B. We are answering part B of question 2, April 2023. The question is about Ram Charan, a world-renowned expert in corporate governance, who classified the evolution of boards into 3 stages. Evolution of boards. There are 3 stages of evolution of boards according to Ram Charan. Now, candidates, there is the first stage according to Ram Charan, stage 1. Stage 1, candidates, is about compliance-oriented boards. Compliance-oriented boards. Compliance-oriented boards. In this initial stage, boards primarily are focused on facilitating their legal and regulatory obligations, and their main function is to ensure compliance with laws and regulations. And here they were meant to be often reactive in their approach to governance. And in the first stage, candidates, you can also say that directors' roles were limited to attending meetings and ratifying management decisions. So the first stage in evolution of boards is stage 1, which is compliance-oriented boards. So initially the boards meant to comply with relevant regulations and laws. Their main function is to do what? Is to ensure compliance with laws and regulations. Then the second stage, this is stage 2 of evolution of boards. It's performance-oriented boards. Performance-oriented boards. This is the second phase or the second stage where boards start to shift their focus towards enhancing company performance and shareholder value. Here they become more proactive. They become more proactive in their approach and begin to monitor and evaluate management strategies and decisions. Do you understand? The first stage we talked about compliance. Here boards are reactive. In stage 2, boards begin to be proactive. Boards here monitor performance of the management. They evaluate management strategies and decisions. Directors start to engage in strategic decisions and provide more consultative or more constructive feedback to management. That is the second stage in evolution of boards according to RAM. Then the third stage is that of strategy, strategic oriented boards. Strategic oriented boards. Strategic oriented boards. Now, at this advanced stage, boards become true strategic partners with management. We are talking about evolution. So, according to RAM, boards evolved from being compliance oriented to being performance oriented. After performance oriented, then there came a stage where boards became strategic oriented. Here, boards actively participated in developing the company's long-term vision. They helped in setting strategic goals, in overseeing their execution, and so on. And here, candidates and directors in at this stage bring diverse expertise and experience to the table, contributing actively to the company's success. They became more engaged. So these are the 3 stages according to Ram Charan, a world-renowned expert in corporate governance. Stage number 1, compliance-oriented boards. Stage number 2, performance-oriented board. Stage number 3, strategic-oriented boards. That is 6 marks. 3 stages, 6 marks. We're now going to answer the last part of this question, which reads, power tactics can be defined as a measure used to demonstrate potential power, cause perception of power, or the realization of actual power to influence the other party. I repeat, power tactics can be defined as measures used to demonstrate potential power, cause perception of power, or realization of actual power to influence the other party. Question. With reference to the above statement, describe 3 power tactics. Describe 3 power tactics. Power tactics. 3 power tactics. Part C. Power tactics. The first obvious power tactic is that of coercion. 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 Coercion, from the word coerce. Coercion. Coercion. This should be C. Coercion. Now, coercive power tactics involve using threats, in using punishment, involve using threats, using punishment. Here, subjects are threatened by maybe threat of firing, threats of demotion, and threat of denial of certain privileges, and so on. Here, subjects are punished. All right. Coercive power tactics involve using threats, using punishments, or even negative consequences to influence the other party. And this tactic aims to do what? To force compliance. It aims to force cooperation by instilling fear, by instilling anxiety in the target. Coercion. Coercive power tactics. The next tactic is persuasion. Persuasion. Persuasion power tactics. Persuasion power tactics involve using logical arguments. Involve using logical arguments. It involves using appeals, emotional appeals. Emotional appeals, as opposed to threats, as opposed to punishment. Here, the one wielding power uses logical arguments. He appeals to the emotions of the subjects, or other forms of convincing communication to influence the other party's beliefs or actions. The tactic here seeks to win the target's voluntary agreement or support. All right? Voluntary agreement or support, but not force. Persuasion appeals to the logic. It appeals to the emotion of the target. The one wielding power here's aim is to appeal to the targets convincingly, appeal to the target convincingly, so that you can influence the target's beliefs or actions without necessarily resorting to threats or punishment. Number 3, coalition building. Coalition building. Now, coalition building power tactics involves forming alliances, partnerships with other individuals or groups, forming partnerships or alliances with other individuals or groups who have influence over the target. And by creating a united front, the influencing party can leverage the combined power, can leverage the combined resources of the coalition to build or to achieve their objectives. So this is the third tactic, power tactic, coalition building, forming alliances, forming coalitions, forming partnerships. So these are 3 candidates were to give 3 power tactics. The first one is coercion power tactic. The second one is persuasion power tactics. The third one is coalition building. And candidates is important. This should be how many marks? It should be 6 marks. In relation to power tactics, it's important to note that power tactics can vary depending on the context and depending on the relationships between the parties. This is the parties that are involved. And ethical considerations should also be taken into account when employing power tactics, because their misuse, the misuse of power tactics can lead to negative outcomes and damage relationships. So when you are applying coercion power tactics, you need to check the ethical consideration before resorting to threats, resorting to punishment, and so on. When using the persuasion power tactics, it's also important to look at the context in relation to the relationship between the parties here. And ethical consideration should also come into play or be taken into account when employing persuasion power tactics, as well as coalition building. So these are 3 power tactics. We've answered question number 2, 6 marks, part C 6 marks, part A 3 marks, part B 6 marks. Total is 12 marks. Thank you for attending this lesson. In our next session, we are going to answer question number 3. I want you to look at question number 3 and attempt it before attending the next session, so that when I'll be answering it, we compare notes. You see where you need to make corrections. Thank you. Bye-bye. Hello and welcome, candidates, to the lesson. Today we are going to answer question 4, April 2022, boardroom dynamics. I hope you've attempted the question as it has been the custom. If you have not, please try and answer question number 4 on your own. Then you can come back and compare your solutions with the solutions I'll provide here on the board. Question 4A reads, summarize 5 attributes of a non-executive director. I repeat, summarize 5 attributes of a non-executive director, 5 marks. Who is a non-executive director? A non-executive director is a director who is independent from the company's management and is not involved in the day-to-day operations. The question required candidates to outline or summarize the attributes of a non-executive director. We are going to summarize 5 attributes. One is that of independence. A non-executive director must be independent. Independence is the first characteristic or attitude or attribute. The second one is objectivity. Number 3, expertise. Number 4, governance oversight. And number 5, shareholder representation. These are 5 attributes of a non-executive director. 1, independence. 2, objectivity. 3, expertise. 4, governance oversight. Then 5, shareholder representation. 5 characteristics. Question 4A. Non-executive director. Attributes of a non-executive director. Number 1, independence. 2, objectivity. 3, expertise. 4, governance oversight. This is 1, 2, 3, 4. Then 5, shareholder representation. Independence, objectivity, expertise, governance oversight, shareholder representation. These are 5 attributes of a non-executive director. What's the meaning of independence? Independence. Non-executive directors are independent from the company's management and are not involved in the day-to-day operations. They offer an impartial perspective and can act as a check and balance on executive decisions. Independent. Number 2, objectivity. Non-executive directors bring what we call objectivity to the boardroom by providing unbiased assessment of strategic proposals, unbiased assessment of financial performance, unbiased assessment of risk management, and so on. And that is so because of their detachment from organizations' daily operations, which allows them to make decisions in the best interest of the shareholders and the company. Due to their independence, they can be objective. Because of their independence, they can offer objective view. They can have what we call impartial judgment on matters. So, non-executive directors are independent. They bring objectivity to the company. Another attribute is that of expertise. These are individuals who possess specialized skills. They have specialized knowledge and experience that is relevant to the industry or specific areas of the company's operations. They contribute valuable insights and guidance based on their expertise. And candidates and executive directors are deliberately hired because of their expertise. The board hires them. All right? They are hired based on their expertise, and the purpose is so that they can guide the company in certain areas that needs guidance based on their expertise. Governance oversight. Non-executive directors play a crucial role in ensuring good governance within the organization, good governance practices within the organization. They oversee the conduct of the executive team. They oversee the monitoring of compliance with laws and regulations, and they also assess the effectiveness of the internal control system. Then lastly, shareholder representation. Non-executive directors represent the interests of shareholders and act as their voice in the boardroom. All right? Because of their independence. They strive to align the company's strategy and actions with the long-term interests of the shareholders. These non-executive directors are the voice of the shareholder. And remember, candidates, a board comprises of executive directors and non-executive directors. It is the non-executive directors that bring balance to the company in the boardroom. They bring checks and balances against the decisions by the executive. So these are 5 attributes. Number 1, independence. Number 2, objectivity. Number 3, expertise. Number 4, governance oversight. Number 5, shareholder representation. These are 5 attributes. How many marks? 5 marks. Question 4B. The most effective organizations invest in the board and encourage continual learning in the boardroom. I repeat, the most effective organizations invest in their board and encourage continual learning in the boardroom. With reference to the above statement, discuss 5 reasons why organizations should invest in board development. Reasons why organizations should invest in board development. One reason is that investment in board development leads to enhanced decision making. Enhanced decision making. Investing in board development equips directors with up-to-date knowledge, with up-to-date skills to make informed decisions, and that leads to better strategic planning, risk assessment, and more effective oversight. Enhanced decision making. The second reason why the organization should invest in board development is improved board effectiveness. Improved board effectiveness. Investing in board development is like sharpening the skills of the board members. The skills of the board members are sharpened through board development. So continuous learning and development programs enable board members to understand their roles and responsibilities better. They can then work collaboratively, fostering a high-performing board culture. Improved board effectiveness. Through board development, the board members can adapt to changing business landscape. Adaptation to changing business landscape. Adaptation to changing business landscape. Board development equips directors with insights into emerging trends, into technological advancements and market shifts, and that prepares the board to adapt to changing business landscape, to changing circumstances, and then remain agile in addressing or in decision making. They remain agile. They become agile. It is through training that they'll become agile. So board development helps the board members to adapt to changing business landscape, because nothing is static. There are always changes in technology. There are changes in the market. There are always shifts in the market. We have emerging trends. And so if directors are not well developed, they may not be able to adapt to changing business environment. 4, stronger risk management. Stronger risk management. A well-informed board can identify and address risks proactively. So board development programs can enhance risk awareness and equip directors with tools to mitigate potential threats effectively. So board development can lead to a stronger risk management by the board. 5, increased board diversity. Increased board diversity, we can add inclusion. Increased board diversity and inclusion. Board development efforts can focus on promoting diversity. Can focus on doing what? On promoting diversity in the boardroom, including gender, ethnic, and professional diversity. And candidates, a diverse board brings varied perspectives, leading to a more robust discussions and better decision outcomes. So these are 5 reasons why organizations should invest in board development. Number 1, enhanced decision making. Number 2, it leads to improved board effectiveness. Number 3, adaptation to changing business landscape. Number 4, stronger risk management. Number 5, increased board diversity and inclusion. 5 reasons, 10 marks. Reasons why organizations should invest in board development. And candidates, all in all, investing in board development is an investment in the organization's governance effectiveness. It is an investment in what we call strategic agility, long-term sustainability, and it demonstrates a commitment to continuous improvement and responsible leadership, which can positively impact the organization performance and reputation. So that's question number 4. We've answered question number 4. In our next session, we are going to answer question number 5. Thank you. Bye-bye. Hello and welcome back. Today we are going to answer question 3 of the December 2022 Information Communication Technology paper. Question 3A, Roman 1 reads, Differentiate between intranet and extranet as used in computer networks. 2 marks. Differentiate between intranet and extranet. Now, candidates, an intranet is a private network that is limited to an organization and accessible only by its employees or authorized users. Whereas an extranet is an extension of an intranet that allows limited access to authorized external parties such as customers, suppliers, business partners, and so on. So that's the distinction between an intranet and an extranet. I repeat, an intranet is a private network that is limited to an organization and accessible only by its employees or authorized users. And it is used for internal communication, is used for sharing resources and collaboration within the organization. But an extranet is an extension of an intranet that allows limited access to external parties, such as customers or suppliers. And it enables secure communication and sharing of specific information or resources within information with the external entities. So in other words, an intranet is an extension of, an extranet is an extension of the intranet. So let's just put it down. Distinction between an intranet and an extranet. Intranet, intranet, inside. An intranet is a private network, I've said. It is a private network that is limited to an organization and accessible only by its employees. Do you understand? That is limited, private, inside. That's one feature of an intranet. Whereas an extranet is an extension of the intranet. External, extra. External, extra. An extranet is an extension of the intranet. This is an extension of an intranet that allows limited access to external parties like customers or suppliers. So that's the distinction between an intranet and an extranet. 2 marks. Roman 2, outline 4 limitations of using extranet. Limitations of using an extranet. Limitations of using an extranet. Now, we've defined an extranet as an extension of the intranet that allows limited access to external parties. So the question now is, what are the limitations of such a network? The first obvious limitation is that such a network may expose an organization to security risks. Security risks. Security risks. Extending the network to external parties increases the potential for security breaches and unauthorized access. And candidates, protecting sensitive information becomes crucial to prevent data breaches and maintain the privacy of the organization's data. So when external parties are allowed to access the network of an organization, then there are risks related to the protection of the organization's sensitive information, security risks. Then connectivity. That could be another disadvantage or limitation. Connectivity and infrastructure requirements. Security and infrastructure requirement. Extranets require reliable internet connectivity and proper infrastructure to facilitate communication between the organization and the external parties, and that may involve additional costs for network setup, maintenance, and also security measures. Integration challenges. Integration challenges. Integrating the extranet with the existing internal systems as well as databases can be complex, especially when dealing with different platforms and technologies. And ensuring smooth data exchange and compatibility within or between internal and external systems can also be a challenge. Dependency on external parties. Dependency on external parties. Now, organizations rely on the extranet. Organizations that rely on the extranet for critical operations may face disruptions if external parties experience technical issues or terminate their agreements. And therefore, the organization's productivity and communication may be affected in such situations. So dependency on external parties can pose challenges of disruption in the operations of the business. So these are four limitations. Four limitations. First of all, we had to distinguish here to earn the 2 marks. 2 marks. Then limitations, security risks, connectivity and infrastructure requirements, integration challenges, and dependency on external parties. These are 4 marks. Moving on to part B, organizations use different types of information systems. Required Roman 1, list 3 types of information systems used by management. Types of information systems. Types of information systems that are used by organizations. This question we have answered it several times. Remember, we gave an example of the DSS, that is the decision support systems. We gave examples like the MIS, the management information system. We gave an example of the executive information system, and so on. So candidates here were to give just three. 1, executive information system. This is EIS. Then I've just mentioned the decision support system, the DSS. We have 3: management information system, the MIS. There are quite a number. Candidates were just to give 3, so these are 3. Now, executive information system is a system that provides top-level executives with summarized and customized information, including key performance indicators, financial reports, and also strategic planning data. That is the executive information system. The word suggests executive, the top level. Then the decision support system assists management in making complex decisions by providing analytical tools, modeling techniques, and access to relevant data and information. And such information may help them make scenario analysis, forecasting, and even risk. These systems, we can say, help in scenario analysis, in forecasting, and risk assessment. Decision support, the name also suggests what such a system is all about. Decision support system. These are tools that support management in making decisions, the analytical tools, the modeling tools, and so on. That is the DSS. Then we have the MIS, the Management Information System. Is a system that generates regular reports and provide the middle level managers with information for day-to-day operations. With information for, say, monitoring performance and making tactical decisions. Management Information System. These are 3 types of systems used by management. 3 marks. I'm now going to answer Roman 2. Roman 2 says, state the input, processes, and output of information systems by management. State the input. Those are 3 things. State the input, comma, processes, and output of information systems. Input, processes, and output of information system. Input, processes, and output. Let's begin with the input. Input. Now, candidates, data and information from various sources. I'm now defining the input of information system. Let me just put it down. Input. Now, input of an information system is just the data or information from various sources, including internal systems, external databases. This information could be from internal systems. This information can be obtained from external databases. Input or data or information can be obtained from internal systems. Data can be obtained from the documents within the organization. It can be obtained from departments, from organizations, from management, from workers, internal systems. but it can also be obtained from external databases. It can be obtained from market research. Information can be obtained from market research. For example, the marketing department can carry out surveys, can carry out research, can scan the external environment and come up with information and data. It can come from user inputs and so on. So this is what we are calling input of information system. Then there is processes. What are process? This is the second part of this question, which says processes of information systems used by management. Processes. Now, candidates, processes could be data analysis. Data analysis. Right? When this data is obtained, then it has to be processed. And what are the processes? Data analysis is one of the processes. Data analysis. Data analysis. There could also be modeling. This information can be modeled. Modeling. Data mining. So these are processes: data analysis, modeling, data mining, decision making. Those are processes. Forecasting, decision making, and these processes can be carried out using various tools for processing data. We have analytical tools, we have decision making tools, we have data mining tools, there are forecasting tools, many of them. All right? Processes. Then output. What's the output of information system, of an information system? What is the output of an information system? Now, candidates, after data is collected from internal systems, from external databases, from market research, and any other sources, that data is subjected to processes, is processed, so that we can have output. So the question is, what is the output of an information system? We have reports. A report is an output of an information system. We may have summaries, dashboards, reports, summaries, dashboard. These are outputs of information system. Do you understand? Because the purpose of collecting data, the purpose of an information system is to enable management to have the tools that are required to make decisions, to make recommendations, to have alerts, recommendations. These are all outputs. Reports, summaries, dashboards, recommendations, strategic plans, and so on. And these outputs support decision making and management's activities. So that will earn you 3 marks. Given you enough inputs, any input here would earn a mark. Any input will earn a mark. Any process would also earn you a mark, and any output would earn you a mark. Any would earn a mark. Total 3 marks. So here there is 1 mark, 1 mark, 1 mark, total 3 marks. That is Roman 2. Roman 3, explain 4 enterprise information system characteristics that support unstructured decision making in organizations. Number 3, enterprise information system characteristics that support unstructured decision making, unstructured decision making. Now, candidates, an information system that supports unstructured decision making or decisions typically possesses certain characteristics that are designed to accommodate the fluid and unpredictable nature of such decisions. And what are unstructured decisions? Unstructured decisions are those that lack predefined process or well-defined parameters, making them complex and requiring more subjective judgment. And one characteristic of an information system that supports unstructured decisions is flexibility. Flexibility. The system should be highly flexible and adaptable to accommodate a wide range of diverse and changing decision-making scenarios. So that is the first characteristic, flexibility. 2, data variety. Data variety. Such a system should be capable of handling various types of data, including text data, qualitative data, multimedia, and also unstructured data sources. Data variety. 3, natural language. That's what we call natural language processing. Natural language processing, the NLP, natural language processing. Now, the integration of NLP allows the system to understand and interpret what we call human language. Do you understand? Integrating the system with the natural language processing capabilities allows the system to understand and interpret human language, enabling users to input queries in natural language and receive the relevant insights. Natural language processing is the third characteristic of an information system that supports unstructured decision making. 4, advanced analytics. Advanced analytics. The system should provide advanced analytical tools such as data mining, such as sentiment analysis, such as text analytics. Why? In order to uncover the hidden patterns and trends within the unstructured data. Advanced analytics. Visualization. Is yet another characteristic. There ought to be effective visualization tools that can help users to make sense of the complex and the diverse data by presenting it in meaningful and understandable formats such as tables, interactive graphs, charts, heat maps, and so on. Visualization. So these are 5 characteristics candidates were to give 4. I've given you 5. Flexibility, data variety, natural language processing, advanced analytics, visualization. Any 4 points here will earn you the 4 marks. So that is the answer to the question, enterprise information system characteristics that support unstructured decision making. Now, in another question, you may be asked to maybe give examples of information systems that support unstructured decisions. What are examples of these systems? Because here we have given characteristics. We've highlighted the characteristics of information systems that support unstructured decisions. If I may ask you the question, highlight 4 or 5 examples. Give 4 examples of information systems that support unstructured decisions. What will be your answer? So I'm going to give you a few examples to just help you understand the idea of unstructured decisions. Unstructured decisions. Now, one example of a system that supports unstructured decision is what we call text analytics platforms or systems. Now, text analytics systems is a system that analyzes and extracts insights from unstructured textual data, such as social media posts, such as customer reviews when customers give feedback, and even news articles. And such systems use what I had called here natural language processing. They use what we call natural language processing techniques to identify trends, to identify the sentiments, for example, of the customers, and also patterns in text. So that is one example of an information system that supports unstructured decisions, the text analytics system. Then number 2, we have what we call the business intelligence dashboards. Business intelligence dashboards. Now, candidates, modern business intelligence dashboards often include features for analyzing unstructured data, such as comments, feedback, open-ended survey responses, and so on. And such dashboards visualize qualitative data. They analyze qualitative data. This is data that is just in words, where people are giving comments, where people are giving feedback, just words in the natural language. So we have what we call business intelligence dashboards as a second example of information system that supports unstructured decision. Then we may also have content management systems, the CMS, content management systems. Candidates are platforms that manage and organize unstructured content, such as articles, images, videos, and documents. They allow users to categorize, to search, and even retrieve contents for decision-making purposes. Content management systems. Then we may have what we call social media analytics tools. Social media analytics tools. These are platforms that monitor and analyze social media interactions. They analyze social media posts, conversations, and so on. And they help organizations understand customer sentiments. They can also help organizations to track trends and make decisions based on social media insights. So those are 4 examples of information systems that support unstructured decision making. Number 1, text analytics systems. Number 2, business intelligence dashboards. Number 3, the content management systems. And number 4, social media analytics tools. Now let us answer the last part of this question. Part C. Veronica stored word processing files in a flash disk when working from a home desktop computer. She realized that the files could no longer open at her place of work. Required. Suggest 4 reasons why some files may not open despite being visible on the flash disk. That is the question. Reasons why some files may not open, not being visible but open. Reasons why some files, the question is, suggest 4 reasons why some files may not open. May not open. Why some files may not open despite being visible on the flash disk. Now there are instances when you may store files on a flash disk, and when you insert the flash disk on a computer, you are able to see the files, but they fail to open. The question is, what are the reasons for such eventuality? Reasons why files may not open despite being visible on a flash disk. The first reason is file compatibility. File format compatibility. File format compatibility. The files on the flash disk may be saved in a file format that is not supported by the software or applications installed on the computer at her workplace, because it says that Veronica stored word processing files in a flash disk when working from a home desktop. So the reason why such a file may not open on the computer at the office is that the file on the flash disk may have been saved in a file format that is not supported by the software or applications installed on the computer at her place of work, because she saved documents on a flash disk from her home computer, but this flash disk could not be the files on the flash disk could not open on the computer that is in her office or place of work. So candidates, there are different word processing software that may use different file formats, and if the work computer does not have compatible software installed, then it may not be able to open the file. 2, corrupted files. Corrupted files. The files on the flash disk may have become corrupted due to various reasons, such as improper ejection of the flash disk. When you are ejecting the flash disk, there's a procedure you follow. You don't just pull it out. So the flash disk, the files on the flash disk may have been corrupted, and I've given you one reason: improper ejection of the flash disk. Another reason could be file transfer errors. Another reason could be it could be virus or malware injection. So the files may be corrupted because of improper ejection of the flash disk, file transfer errors, or even virus infection. And candidates' corrupted files may not open properly. They may not open properly, or may not display errors when even attempting to open them. So corrupted files could be a reason why some files may not open despite being visible on the flash disk. Three, missing or incompatible software. Missing or incompatible software. Now, the work computer may not have the necessary software or what we call plugins that are required to open the specific file types on the flash disk. For example, if the files were created using a specialized word processing software that is not installed on the work computer, then it may not be able to open the file. Missing or incompatible software. So there is the file format compatibility, but there is also the software compatibility. 4, we may have file permission issues. File permission issues. Now, the files on the flash disk may have restricted access or permission settings that prevent them from being opened on another computer. And that could be due to file encryption, restricted user access, or file ownership settings that differ between the home and the work computers. So these are 4 reasons: file format compatibility, corrupted files, missing or incompatible software, and file permission issues. And candidates, this is the case of Veronica, who stored word processing files in a flash disk. When working from a home desktop computer, she realized that the files could no longer open at her place of work. So candidates, it is recommended not only for Veronica but for all of us to check the compatibility of file formats to ensure that the files are not corrupted, and also verify that the necessary software is installed on the computer at the workplace, and then check the files permissions to determine reasons why the files may not open. So these are 4 reasons, 4 marks. 4 reasons, 4 marks. We've answered question number 3. Thank you for attending the lesson. In our next session, we are going to answer question number 4. The subject is ICT. We've been answering questions that were done in December 2022 by the CPA Foundation level candidates and the Certified Secretaries Foundation level candidates. It's a common paper done by the candidates appearing in the 2 courses, the CPA course and the CS course. Thank you for attending the lesson. Bye-bye. Hello and welcome. Today we turn to question number 4, December 2022. The paper is Boardroom Dynamics. Question 4A reads, self-regulation is An important component in corporate governance. Assess 5 components of self-regulation. 5 components of self-regulation. Now, the 5 components of self-regulation are: 1, the code of conduct. The second component is internal policies and procedures. The third component, compliance and monitoring. The fourth component is accountability mechanisms. And lastly, we have stakeholder engagement. Those are 5 components of regulation in corporate governance. Number 1, code of conduct. Number 2, internal policies and procedures. Number 3, compliance and monitoring. Number 4, accountability mechanisms. And lastly, stakeholder engagement. 4 components. Part A, components of self-regulation. Components of self-regulation in corporate governance. Components of self-regulation in corporate governance. Number 1, code of conduct. 1, code of conduct. Code of conduct. A well-defined code of conduct sets out the ethical standards and behaviors expected from directors, from executives, and the employees within the organization. That's an important component of self-regulation. Code of conduct. There has to be a code of conduct, a well-defined code of conduct. 2, internal policies and procedures. Internal policies and procedures. Internal policies and internal procedures. Self-regulation involves implementing and adhering to internal policies and procedures that guide decision-making, that guide risk management, financial reporting, and other key governance aspects or areas. Internal policies and procedures. Compliance and monitoring. Number 3, compliance and monitoring. Compliance and monitoring. Self-regulation includes ongoing monitoring of the organization's compliance with laws, regulations, compliance with internal policies, and so on. And it may involve internal audits and assessments to identify areas of improvement. So compliance and monitoring is a key component of self-regulation in corporate governance. 4, accountability mechanisms. Accountability mechanisms. Self-regulation necessitates having clear accountability mechanisms in place, ensuring that individuals and departments are responsible for their actions and decisions. Accountability mechanisms. Then lastly, stakeholder engagement. Stakeholder engagement. Effective self-regulation involves engaging with stakeholders, including investors, including customers, including employees, and even the community at large. Why? In order to understand their expectations, in order to understand their concerns, and to incorporate their feedback into governance practices. So these are key components of self-regulation in corporate governance. Number 1, code of conduct. Number 2, internal policies and procedures. Number 3, compliance and monitoring. Number 4, accountability mechanisms. And lastly, stakeholder engagement. 5 marks. 5 marks. Part B, explain 5 benefits of low power distance cultural dimension to an organization's board. I repeat. Explain 5 benefits of low power distance cultural dimension to an organization's board. 5 benefits. B, benefits of low power distance. Benefits of low power distance cultural dimension. Benefits of low power distance cultural dimension to an organization's board. Now, the first benefit is open communication. Open communication. Number 1, open communication. Open communication. In a low power distance culture, there is a tendency for open and transparent communication between board members, and that encourages the free exchange of ideas and also constructive criticism. The second benefit is inclusive decision making. Inclusive decision making. Low power distance culture value participation and involvement from all members and candidates in an organization's board. This leads to more inclusive decision making where diverse perspectives are considered. The third point or benefit is reduced hierarchy. Reduced hierarchy. Low power distance culture has a reduced emphasis on hierarchical structures. And in a board setting, this can create a more egalitarian environment where all directors feel comfortable contributing to discussions. 4, access to diverse talent. Access to diverse talent is another benefit of low power distance cultural dimension. Access to diverse talent. Low power distance culture encourages a more inclusive approach to talent recruitment, and boards in such cultures are more likely to seek directors from diverse backgrounds and experiences, thereby enhancing board effectiveness. 5, flexibility and adaptability. Flexibility and adaptability. Low power distance cultures often embrace flexibility and adaptability. And boards in these cultures are more receptive to change. They are more receptive to innovation, and they are receptive to new ideas, allowing the organization to stay competitive. So these are 5 benefits of low power distance cultural dimension. 1, open communication. 2, inclusive decision making. 3, reduced hierarchy. 4, access to diverse talent. 5, flexibility and adaptability. 5 benefits, 5 marks. 5 benefits, 5 marks. Question 4C, evaluate 5 flaws that hinder effectiveness of decision making at board meetings. Flaws that hinder effective decision making. Flaws that hinder effective decision making. What are the flaws that hinder effective decision making? One is one of the biases we mentioned earlier. 1, group think. Groupthink is one flaw. Groupthink occurs when board members prioritize consensus over critical thinking, leading to conformity and stifling dissenting opinions. And that can result in flawed decisions and missed opportunities. Groupthink. 2, lack of diverse perspectives. Lack of diverse perspectives. If board members have similar backgrounds or experiences, it can lead to a lack of diverse perspectives, and that is a narrow outlook. Such a narrow outlook may limit the consideration of alternative approaches. So lack of diverse perspectives is a flaw that hinders effective decision making. 3, inadequate information. Inadequate information is another flaw that may hinder effective decision making. Boards may make suboptimal decisions if they lack access to accurate and comprehensive information. And incomplete or biased data can lead to flawed judgment. That's why earlier on we say that the corporate secretary should ensure that the board has data, has information, has reports in advance of meetings so that the board can prepare adequately such that when the board meets, they can now make informed decisions. So if the board members have inadequate or inaccurate information, then that is a flaw that can hinder effective decision making. 4, time constraints. Time constraints. Limited time for board meetings can hinder in-depth discussions and analysis of complex issues. You may have rushed decision making, which may result in overlooking details, or the board may end up having inadequate deliberations because of time constraints. Then lastly, lack of accountability. Lack of what? Lack of accountability. Boards may face challenges in holding individual members accountable for their contributions or actions. And that can lead to complacency and lack of responsibility among the board members. So these are 5 flaws that hinder effective decision making. Number 1, groupthink. Number 2, lack of diverse perspectives. Number 3, inadequate information. Number 4, time constraints. Then lastly, lack of accountability. 5 marks. 5 marks. So that effectively brings the end to our today's lesson, where we've answered question 5, December 2022. This is question 4, December 2022, boardroom dynamics for certified secretaries. Thank you. I'll meet you in our next session, where we'll wind up the division of this sitting by answering question number 5. Bye.
Greetings, learner. Welcome to our human resource management subject. We are continuing with the foundational theories of motivation in human resource management. And the theory we are looking at today is a theory that has been used extensively in human resource management and other areas. And it is the agency theory. And according to this theory, which has its roots in economic theory. It has its roots in economic theory. The agency theory was formulated by Alchian and Demsetz, Alchan and Demsetz in 1972, and it was further developed by Jensen and Meckling in 1976. This theory is defined as the relationship between the principals, such as shareholders and agents. So you have principals such as shareholders, and you have agents such as company executives and managers. According to the agency theory, Lana, the principals of a company hire agents, and when they hire these agents are expected to perform some work. And these agents operate with delegated authority so that they can run the business on behalf of the agents with directors and managers who are the agents of the shareholders. And this principle is very key in the sense that the shareholders, or those who have provided capital for an organization, may themselves not be there available to run the businesses on a day-to-day basis. They may not have the expertise also, or they may not have the time. So when they now facilitate the principals, facilitate the agents, then the agents can run business, and this is what makes business revolve around and transactions to be done. So this theory is very key to the area of management, to the area of human resource management, and it informs decisions, and it has been applied extensively in the area of human resource management. So we want to have a look at the uses of agency theory. The uses of agency theory. Uses of agency theory. So in which ways can the agency theory be utilized in management? So we have just seen there is the issue of principals and agents. So this theory can help us better understand, help in better understanding of delegation of authority, with emphasis on principals and agents. Principals and agents. Emphasis on principals and agents. So this theory helps us in the field of management to understand when it comes to the delegation of authority from the principals and agents, how is it done and how should it be implemented and so on. So that becomes useful. It can also help in corporate governance. This theory can help in corporate governance. Can help in corporate governance. So when it comes to running of corporations or running of businesses, then the understanding between the principals, the agents, and what are the expectations can be better understood by the underpinnings of the agency theory. Then there is also the issue of resolution of disputes that may arise between principals and agents. Resolution of disputes that may arise between principals and agents. And what we are saying here, dear Lana, when you have principals on one side, principals have their interests. They have invested their resources and capital, and they expect to get a return on that capital. On the other side, the agents are employees. They have come to the organization to work, and some of the decisions they may make may create certain conflicts. So the disputes that may arise between principles and disputes can be better understood with the process of understanding the agency theory and how it can be utilized in the various areas. Then there is also appreciation of the roles of agents in decision making, appreciation of the roles of agents in decision making. Number 5, research in the area of human resource management, So when it comes to the uses of the agency theory, it can form what is called a theoretical background, background or foundations. It can form theoretical backgrounds or foundations so that an organization or maybe those interested in areas of human resource research can be able to create a theoretical foundation based on the agency theory to understand variables and constructs in the area of human resource management. There is also the aspect of evaluation of transactions, evaluation of transactions undertaken in organizations, evaluation of transactions undertaken in organizations. So when it comes to the process of business transactions, as we have indicated, agents have their own interests, principals have their own interests. So when it comes to evaluating the transactions undertaken in organizations, the agency theory can be able to assist in understanding or interpreting the decisions that have been taken within a given organization. Then when it comes to the agency theory learner, the agency theory has on one side tried to explain the relationship between the principles, on the one side the relationship between principles and agents in terms of how they relate. So when it comes to the agents and the principles, this theory can help in the determination, of the remuneration or rewards that may be given to agents or principals. As we have indicated, agents are also looking for rewards. Principals are also looking for rewards, and when it comes to an organization, the agency theory can help us in understanding how the organization is operating, and also this theory can help us also, number 8, to monitor the performance of agents in organizations. So once you have the agency theory, then this agency theory can also be used in the process of explaining the performance or monitoring the performance of agents, which may also lead to specific decisions being made in relation to the agents and the principles. So learner, in our lesson today, we have explained the agency theory, and we have looked at the agency theory and indicated that the agency theory has its roots in the economic theory, and the agency theory was formulated by Alchan and Demsetz in 1972, and it was further developed by Jensen and Meckling in 1976. And the agency theory is defined as the relationship between the principals such as the stakeholders, shareholders, and agents such as the company executives and managers. So according to the agency theory, the principals of a company hire the agents so that the agents can perform work, and the principals delegate the work of running businesses to directors or managers who are the agents of the shareholders. So that is the background of how the agency theory was formulated and what happens between the principals and the agents. Then we have also looked at the uses of the agency theory, how it can be applied, and we have indicated that the agency theory helps in better understanding of delegation of authority with emphasis on principals and agents. Number two, the agency theory can help in corporate governance. Number three, the agency theory can help in the resolution of disputes that may arise between principals and agents. And number four, the agency theory helps us in the appreciation of the roles of agents in decision making. And number five, the agency theory may assist in the research area of human resource management in terms of theoretical background and other underpinnings. Number six, the agency theory helps in the evaluation of transactions that are undertaken in organizations. Number seven, the agency theory helps in the determination of the remuneration or rewards that may be given to agents and principals. And number eight, the agency theory can help to monitor the performance of agents in organizations. So dear learner, those are some of the 8 areas or uses of the agency theory. There could also still be other uses where this theory can be applied, and these ones are just some of them. So before we end our lesson, you have an assignment, and your assignment for today, elaborate on the uses of the agency theory. Analyze on the uses of the agency theory. So learner, this is your assignment, which you should be able to work on after going through the topic we have done today, the lesson of today, which was agency theory. You go through this lesson, look at the background of what we have done, then be able to elaborate on the uses of the agency theory. Until we meet in our next lesson, thank you very much.
Hello and welcome to the revision of the ICT paper that was done in December 2022 by certified public accountants and certified secretaries. Question 1 reads, A. State 4 disadvantages of implementing information systems in an organization. Disadvantages of implementing information systems in an organization. The first disadvantage is cost. All right? The cost for hardware, software, infrastructure, training, and so on. The second disadvantage is resistance to change. Employees may resist such changes. Number 3 is security risks. 4, technical issues. So those are 4 disadvantages we are going to discuss in answering the first question. State 4 disadvantages of implementing information systems in an organization. This is question 1. Question 1. Disadvantages of implementing information systems in organizations. Number 1, cost. Cost. Implementing information systems can be expensive, involving costs for software, hardware, infrastructure, training, and maintenance. So organizations may need to allocate significant financial resources to acquire and maintain the necessary technology, which can be a strain on the organization, a strain on the budget of an organization. 2, resistance to change. Resistance to change. Implementing information system often requires changes in business processes and workflows. So employees may resist such changes, fearing job loss or even increased workloads. So resistance to change can slow down the implementation process and may even hinder the adoption and utilization of the new information system. Security risks. Information systems candidates stores and process sensitive data, making them vulnerable to security breaches such as hacking, data theft, and unauthorized access. And organizations need to invest in robust security measures as well as protocols to protect their systems and data from potential threats. 4, technical issues. Technical issues. Information systems can encounter technical challenges such as hardware and software failures, compatibility issues, system crashes, or even network disruptions. And these issues can result in downtime, reduced productivity, and frustration among users. So organizations may need to have proper technical support and contingency plans to address such issues effectively. So these are 4 challenges of implementing information system. 1, cost. 2, resistance to change. 3, security risks. 4, technical issues. 4 marks. That is part 1. Part 2 reads, explain 5 computer hardware components that are required when establishing a multimedia platform for e-commerce. Computer hardware components required when establishing a multimedia platform for e-commerce. The first hardware component is the central processing unit. The CPU. The CPU is the brain of the computer system and handles the processing of data. It performs calculations, executes instructions, it manages the overall operation of the system, and so on. So a powerful CPU is essential for handling multimedia tasks effectively and efficiently. Graphics processing unit. Graphics processing unit. One may also need the graphics processing unit, which is responsible for rendering and processing graphic intensive tasks such as high resolution images, videos, animations, and so on. It accelerates the processing of visual data, ensuring a smooth playback and also display of multimedia content. So when installing multimedia platform and establishing a multimedia platform, is important to have the graphics processing unit. 3. Random access memory. Random access memory, the RAM. RAM is a temporary storage that holds data and instructions that the CPU needs for immediate processing. And for the multimedia platforms or applications, a sufficient amount of RAM is required to handle the large data sets and facilitate smooth multitasking and multimedia processing. Random access memory. 4. Hard drive disk. Hard drive disk, HDD, right? Or what may be required, if not a HDD, is what we call solid state drive. The solid state drive, the SSD, the solid state drive. Now, candidate storage drives are essential for storing multimedia files such as images, videos, audio files, and other e-commerce content. So HDDs provide larger storage capacities at a lower cost, while SSDs offer faster data access and improved system performance. So when establishing a multimedia platform for e-commerce, a hard disk drive or a solid state drive may be essential. 5, computer. These are 4. Then number 5, sound card and speakers. Sound card and speakers. For multimedia platforms, a sound card is necessary to provide high quality audio output, and combined with speakers or even headphones, it enables users to experience audio content that is associated with e-commerce, such as product demos, testimonials, background music, and so on. So candidates, these are the components, and these components work together to support multimedia content creation, storage, processing, and presentation in an e-commerce environment. Number 1, central processing unit. Then we have the GPU, graphics processing unit, the random access memory, the hard drive disk, the solid state disk, and sound card and speakers. These are 5 components, 5 marks. Part C reads, using an example, explain how one would use a goal-seek function in a business. How one would use goal-seek function. How one would use goal-seek function. Using an example, using an example, explain how one would use a goal-seek function. Now, first of all, what is this goal-seek function? What is a goal-seek function? Now, a goal-seek function is a tool. It is a tool that is available in spreadsheet software such as Microsoft Excel that allows users to find the input value needed to achieve a desired result. And it is particularly useful in business scenarios where users want to determine the required input value to reach a specific goal or target. That's why it is being referred to as goal-seek. Goal-seek. For example, let's consider a business that wants to determine the number of units it needs to sell in order to reach a desired profit level. And we know businesses have fixed costs, variable costs per unit, and even the target profit amount. So by using the goal-seek function, the user can input the target profit as the desired result and then instruct the software to find the corresponding number of units that are needed to be sold in order to get the profit target. So that is an example of, the question says, using an example, explain how one would use goal-seek function in a business. And that is how one would use goal-seek function. I've given you an example of where a business would want to achieve a certain profit, but it does not know the number of units to produce. So that goal-seek function that is found in Excel, in spreadsheet software like Microsoft Excel, can be used to find the input value needed to achieve a desired result. So it is a tool that is found in spreadsheet software. It is a tool found in spreadsheet software like Microsoft Excel. It is a tool that is found in spreadsheet software, or a tool that is available in spreadsheet software like the Microsoft Excel, that allows users to find the input value, that allows users to find the input value. I've given an example where an organization would want to achieve a certain target profit, and the profit candidates is an output. There are things that you do before you hit a certain target profit, say 10 million. If an organization has a target of, say, 10 million, then the company has to work towards achieving that target. The company has to sell certain amounts of units. A business may want to determine the number of units that may be needed to, say, earn a profit of Kenya shillings 10 million. How many units can be sold for company A to hit a target of profit of 10 million, target profit of 10 million? So a goal-seek function that is available in spreadsheet software like Microsoft Excel can be used by the user to find the target input, to find the input. You understand? That will help the company achieve the target profit. And we know a business may have fixed costs, variable costs per unit, and so on. Because we know profit is a function of fixed costs, variable costs, and sales. Do you understand? So by using the goal-seek function, the user can input the target profit as the desired result and then instruct the software to find the corresponding number of units that needs to be sold. Number of units that need to be sold. The number of units that needs to be sold with the fixed cost that a company incurs, the variable cost per unit, with these inputs, then the desired profit can be attained. But the starting point is the target profit. The software can help the user to determine the number of units to be sold in order to achieve the profit of 10 million. So that is how one would use a goal-seek function. The question is, using an example which I have given here, explain how one would use a goal-seek function in a business. So explaining what I've explained would earn you the 5 marks. I repeat, part D, explain 3 problems that could be encountered when using a computerized accounting software. Problems that could be encountered when using a computerized accounting software. The first problem is technical issues. The second problem is data integrity and security. Then the third one is learning curve and training. Learning curve and training. Technical issues. Technical issues. Computerized accounting software relies on technology infrastructure, and technical problems can arise, such as software glitches, such as e.g. software glitches. We may have crashes, system crashes. The system may crash. There could also be compatibility issues. Compatibility issues. So these are some of the technical issues that one may encounter when using a computerized accounting software. We are talking of compatibility. This is compatibility issues to do with compatibility with other systems or other software, or even troubleshooting. Problems with troubleshooting to resolve issues. So that's the first problem that one can encounter when using a computerized accounting software. Data integrity, number 2. data integrity and security. Data integrity and security. Computerized accounting software manages what we call sensitive financial data. So we are talking about accounting. Accounting has to do with finances or financials. So a computerized accounting system manages sensitive financial data, and maintaining data integrity and security is crucial. And problems can occur if there are no data entry errors, right? If there are data entry errors, then problems can occur. If we have data corruption, then problems could also occur, or even problems to do with unauthorized access to the system. And therefore, adequate data backup, adequate access controls, and security measures should be implemented to mitigate such risks. Data integrity and security. 3, learning curve and training. Learning curve and training. Candidates transitioning to computerized accounting software may require employees to acquire new skills and to adapt to new processes. And some users may encounter challenges in learning the software functionalities, or even struggle with understanding complex accounting concepts in a digital environment. So adequate training and support are essential to ensure effective use of the software and minimize user errors. So candidates, these are some of the problems. They are not the only problems. There are many problems, but all in all, it is important for organizations to be aware of these potential problems and take appropriate measures such as regular software updates, data backup procedures, training programs, in order to address and mitigate any issues that may arise when using computerized accounting software. So these are 3 problems, 6 marks. 2 marks, 2 marks, 2 marks total, 6 marks, 6 marks. So thank you for attending the lesson. We've answered question 1, December 2022. In our next session, we are going to answer question number 2. Bye-bye. Hello everyone, and welcome back to the revision session. We're going to answer the last question that was tested in April 2022. The paper is Company Law, that was done by certified public accountants and certified secretaries. Question 7A, I read, explain 4 circumstances that would give rise to the appointment of an inspector to investigate the affairs of a company. 8 marks. Circumstances that would give rise to the appointment of an inspector to investigate the affairs of a company. Now, one factor that would give rise to the appointment of an investigator or an inspector to investigate the affairs of the company is where the business of the company is being conducted in a manner oppressive to its members. the company or a company is expected to serve the interests of the members. But if a company exists to oppress the members or any part of the members, then an inspector can be appointed to investigate the affairs of such a company. This is number one. Number two, the second circumstance is where the company was formed for fraudulent or unlawful purposes. Fraudulent and unlawful purpose or purposes. Where a company was formed to carry out fraudulent activities or to carry out unlawful business, then such a company can be investigated by an inspector. Where the company was formed for a fraudulent or unlawful purpose. Still related to fraud, we can say that where persons responsible for the company's formation or the management of its affairs have been found to be guilty of fraud. Those who are charged with the management of the company, those who are responsible for the formation of the company or the management of the affairs of the company have been found guilty of fraud or misfeasance. If they've been found guilty of fraud or guilty of misfeasance or any other misconduct towards its members, then such a company can be investigated by an inspector. And an inspector can be appointed to investigate the affairs of such a company. The fourth circumstance that will give rise to appointment of an inspector to investigate the affairs of the company is that where the members have not been given all information, where members have not been done what? Where members have not been given all information with respect to its affairs that they might reasonably expect to have been given. Failure to furnish members with information. Where a company fails to furnish its members with information with respect to its affairs that they might reasonably expect to have been given, then an inspector can be appointed to investigate the affairs of such a company. Number 5, due to public interest. An inspector can be appointed to investigate the affairs of a company in the interest of the public. All right? If it is in the interest of the public to do so, then such an inspector can be appointed due to public interest, the interest of the public. Number 6, where a company defrauds creditors then an inspector can also be appointed to investigate the affairs of such a company, where the company's business is being conducted with the intent to defraud its creditors. Intent to defraud its creditors. Then it may be necessary to appoint an inspector to investigate the affairs of such a company. Candidates were to give 4 circumstances that would give rise to appointment of an inspector to investigate the affairs of a company. I've given you 6. 1, 2, 3, 4, 5, 6. Any 4 points, 8 marks. Any 4 here would earn the 8 marks. B, I read, analyze 6 circumstances under which the accounts of a subsidiary need not be incorporated in the group accounts. Circumstances under which accounts of a subsidiary need not be incorporated into group accounts. You know, ideally that the accounts of a subsidiary should be incorporated into group accounts. But there are certain circumstances under which the accounts of a subsidiary may not be incorporated into group accounts. And the first circumstance is if inclusion of the accounts is not material. If inclusion isn't material. If inclusion of subsidiary accounts into group accounts is not material for the purpose of providing a true or fair view, then it may not be necessary to incorporate the accounts of subsidiary into group accounts. In other words, if inclusion is immaterial, all right? The second circumstance is if the financial statements would be misleading, all right? If what? If financial statements would be misleading or harmful to the accounts of the holding company. Do you understand? If the financial statements would be misleading. Now, if inclusion of subsidiary accounts into group accounts would be misleading to the financial statements, then the accounts of a subsidiary may not be incorporated into the group accounts. If including the subsidiary accounts into the group accounts would mislead the users of such accounts, then there is no point of including such accounts in the group records. If the financial statements would be misleading or harmful to the accounts of the holding company. Disappropriate expense and undue delay. Disappropriate expense and undue delay. Now, if the information necessary for the preparation of the group financial statements cannot be obtained without disappropriate expense and undue delay, then it may not be necessary to incorporate subsidiary accounts into the group accounts. Disappropriate expense and undue delay. The fourth circumstance is that when the business of the holding company and subsidiary company are different, that they cannot reasonably be combined. That means if combining the business will give misleading statements. Now, if the business of the subsidiary and the business of the parent cannot be reasonably be combined, then that is a circumstance under which accounts of the subsidiary may not be incorporated into the accounts of the company. When they are so different, they cannot reasonably be combined. 5. The fifth circumstance is if the interest of the parent company, is held exclusively with a view to making a subsequent sale. Now, if the interest of the company is held exclusively with a view to making a subsequent sale, then it's not necessary to incorporate the subsidiary accounts into the group accounts. Then lastly, if the subsidiary is wholly owned, if a subsidiary is wholly owned by the parent, then the accounts of a subsidiary need not be incorporated into group accounts. These are 6 circumstances, 6 marks. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. 6 marks. That is part B of question 7. Part C reads, describe 6 grounds under which the veil of incorporation might be lifted. Six grounds under which the veil of incorporation might be lifted. Veil. What is this veil? Veil of incorporation. Okay, veil is a cover. It is a legal concept that separates the personality of a corporation from the personalities of its shareholders, and this veil protects the shareholders from being personally liable for the company's debts and other obligations. And where a court determines that a company's business was not conducted in accordance with the provisions of the Companies Act or the corporate legislation, it may hold the shareholders personally liable for the company's obligations under the concept of lifting the veil of incorporation. So the purpose of the veil is to protect the members or the shareholders from obligations or company's debts. But this veil can be lifted. This veil can be removed where a court determines that a company's business was not conducted in accordance with the provisions of the corporate legislation, or where it is just a facade for illegal activities. Then the court can lift the veil of incorporation. We know the members of a company, the liability of members of public limited or even private companies, their liability is limited to the number of shares unsubscribed to the company. But then what are the grounds under which this veil can be lifted? Number one is fraudulent activities. Fraud. Fraudulent trading. Fraudulent trading. If in the course of winding up, it appears that the business of the company has been carried on with an intent to defraud its creditors for fraudulent purpose, for any fraudulent purpose, then the court may declare all persons who are knowingly party to the carrying out of the company's business are personally liable for debts and other liabilities. Fraudulent trading. When that happens, then the courts can lift this veil of incorporation. Number two, ratification of corporate acts. Ratification of corporate acts. Now, whenever or wherever the general meeting ratifies an abusive or an abuse, let me say, an abuse of power by directors, then the transaction becomes a valid act of the company. And hence, the company and its members are treated as one, which is a modification to the incorporation doctrine. And in such an event, the veil of incorporation may be lifted. The third circumstance is in relation to the trading certificate. Liability for trading without liability for trading without a trading certificate. Liability for trading without a trading certificate. We know that a company must obtain a trading certificate from the registrar before it may commence to trade. And failure to do so leads to personal liability of the directors for any loss or damage suffered by a third party resulting from a transaction made in contravention of the trading certificate requirement. So, in that event, then the veil of incorporation will be lifted. Liability for trading without a trading certificate. 4, abuse of company name. Abuse of company's name. Now, we've had cases in the past where a number of instances where directors of companies which went into insolvent liquidation formed another company. They may form another company with an identical or similar name. And the new company that is formed buys the original company's business and assets from its liquidator. So that can lead to lifting of veil of incorporation. Number 5, evasion of liabilities. Evasion of liabilities. Now, the veil may also be lifted where directors ignore the separate legal personality of two companies and transfer assets from one company to the other in disregard of their duties. And directors may do that to avoid an existing liability. That can lead to lifting of the veil of incorporation. 6, reduction of number of members. Reduction of number of members. Reduction of number of members. Now, under the company's regulations, at any time, the number of members of a company should not fall below the statutory minimum. And the company carries on, if the company carries on business for more than 6 months after the reduction of the number of members below the minimum, then every person who is a member after 6 months is personally liable for the debts of the company. Every person who is that, who is a member after the 6 months. So that means that the veil of incorporation will be lifted in the event that there is a reduction of number of members for a period of more than 6 months. Then lastly, determination of character. Determination of character. Now, the court might lift the veil of incorporation in order to determine whether a company is to be characterized as an enemy in time of war or not. Determination of character. In time of war, the court may lift this veil in order to determine if Company A is an enemy of the country during period of war. Because a company can be used by the enemy or the nationals of an enemy country during the time of war. So during such periods, then the court can lift the veil of incorporation. That is a sufficient ground upon which the veil of incorporation might be lifted. So these are the grounds 1. Fraudulent trading. 2. Ratification of corporate acts. 3. Liability for trading without a trading certificate. 4. Abuse of company name. 5. Evasion of liabilities. 6. This is 6. Reduction of number of members. Then 7. Determination of character. Any 6 points, 6 marks. So 6 marks plus 6 marks plus 8 marks is equal to 20 marks. We've completed the revision of the April 2022 paper that was done by certified public accountants and certified secretaries. It's my hope that you'll find these video lectures helpful as you prepare for exams and as you prepare for practice. We are dedicated to providing all the learning materials that you require as you prepare to sit for exams and as you prepare to gain knowledge that will find useful in the industry. Thank you for choosing to study with us. We will continue to guide you also in other areas. This is a block revision segment. We've also provided class lessons covering the revised syllabus. So for those of you who are attending a block revision without having attended our classes, this is to inform you in case you may need the extensive materials. These are video lectures, then the videos are available on our website. For those who are appearing in the August examination, doing this paper before April of this is before August. That is just after the April exam. This is when I'm revising the April paper, April 2022 paper. Those who will be appearing in the August 2022 paper, we wish you all the best as you prepare for your exams. Bye-bye. Hello and welcome back to the lesson. We are going to answer question 3. Boardroom Dynamics, August 2022. Part A reads, identify 5 critical qualities of the effect of an effective board member. 5 marks, I repeat. Identify 5 critical qualities of an effective board member. 5 marks. Question 3A. Critical qualities of an effective board member. The first critical quality is that of integrity. Integrity is a critical quality of an effective board member. A board member who lacks integrity cannot be effective in his work. So an effective board member demonstrates high ethical standards, honesty, and commitment to act in the best interest of the company and its stakeholders. So an effective board member is one who is honest. Honest. Who exhibits high standards of integrity. All right? Honesty. High ethical standards. Someone who has high ethical standards demonstrates adherence to high standards of ethics. Strategic vision, number 2. So a critical quality, strategic vision. strategic vision. What does that mean? A board member should possess strategic thinking, should have strategic thinking skills and the ability to contribute to the development and implementation of the company's long-term vision and goals. Strategic vision is the same as long-term vision. He is able to have a picture of where the firm needs to be viewed from a long-term perspective. Strategic vision is a key critical quality of an effective board member. Financial acumen. Financial acumen. That means understanding financial statements, understanding financial metrics, and key performance indicators is a critical aspect for effective decision-making and oversight of financial matters. Board members are required to evaluate financial statements. So how can one analyze and interpret financial statements without financial acumen? It's important that a board member possesses financial acumen, the ability to understand financial statements, the ability to understand financial metrics and other key financial matters, without which a board member cannot be effective in his oversight role. Interpersonal skills. Number 4, interpersonal skills. Interpersonal skills. Board members need strong interpersonal skills to work collaboratively, because a board member is a member who sits on a board where there are other members. So a board member should have interpersonal skills, should have the skills that will enable him or her to work collaboratively with other directors, with the executives, and also other stakeholders. And when you talk about interpersonal skills, you are also referring to effective communication. A director should be able to communicate effectively. A director should be able to listen actively and should have the ability to engage in constructive dialogue. So that is a quality that is required for one to operate effectively as a board member. We are discussing critical qualities of an effective board member. Number 5 is courage. Courageous. Okay? A board member ought to be courageous and independent. Courageous and independent. Or we can say independent and courageous. Independence should come first. For one to be courageous, one has to be independent. An effective board member should be independent-minded and should have courage to challenge the status quo, should have courage to ask difficult questions and hold management accountable. So these are critical qualities of an effective board member. 1, integrity. One must be honest. Strategic thinking is a skill. Financial acumen, ability to understand financial statements, read financial statements, to interpret financial statements, to understand financial metrics, and so on. Communication skills, should be able to be one who listens actively, should be one who can take part in a constructive debate, because a board, one of the major roles what is required of a board is to have discussions. So if one does not have interpersonal skills, communication skills, then one may not operate effectively as a board member. Then lastly, independence and courage. These are 5 critical qualities, 5 marks. Part B, discuss 3 theories underpinning boardroom dynamics. Theories, 3 theories. 3 theories underpinning boardroom dynamics, 3 theories. The first obvious one is agency theory. Agency theory. The agency theory examines the relationship between principals, who in our case here are the shareholders, and agents, who are the management within a company. Within the company context, the shareholders are the principals and the management are the agents. So this theory explores the potential conflicts of interest that might arise due to information asymmetry and the need for effective monitoring and governance mechanisms, such as the board of directors. So the agency theory, I repeat, examines the relationship between principals and agents. In a company context, the shareholders are the agents, are the principals, and the management are the agents. The theory explores potential conflicts that may arise between the principals and the agents. Principals versus agents. And it is through this theory that you can have mitigation measures on how to reduce the conflicts of interest. We all know that the management may operate in a manner that does not maximize the interests of the shareholders. So that is one theory that underpins boardroom dynamics, agency theory. The second theory, stewardship. Stewardship theory is another theory. Then there is the resource dependency theory. The theories are many. There could also be the stakeholders theory and so on. So the stewardship theory emphasizes the alignment of interests between managers and shareholders. It suggests that managers act as responsible stewards who naturally seek to act in the best interests of shareholders and in the best interests of the organization. Steward. Managers are stewards, and they are required to act as responsible stewards who seek to do what? To act in the best interests of the shareholders and the organization. Then there is the resource dependency theory. Resource dependency theory focuses on organizations' dependence on external resources. Okay? Dependence of the organization on external resources to survive and thrive. And in the context of the board, this theory considers the board's role in managing relationships with external stakeholders, accessing resources, and also mitigating external threats. Resource dependency theory. So these are 3 theories underpinning boardroom dynamics: agency theory, stewardship theory, resource dependency theory. resource dependency theory. These are 3 theories. How many marks? This would earn 6 marks. 6 marks. Part C reads, explain how board evaluation is conducted in state corporations. How board evaluation is conducted. How board evaluation may be conducted in state corporations. Now, candidates, board evaluation in state corporations may vary based on specific legal and regulatory requirements, but there are some common elements of the process, which may include 1, external evaluation. How board evaluation is conducted in state corporations. Now, candidates, board evaluation in state corporations may vary depending on the legal requirements, specific legal and regulatory requirements, but there are some common elements of the process of conducting board evaluation in state corporation, which may include 1, external evaluation. External evaluation. Some state corporations may hire external consultants or firms to conduct an independent evaluation of the board's performance. And this approach brings objectivity and impartiality to the assessment. Then we may have board self-evaluation. Board self-evaluation. Board self-evaluation or assessment. Now, the board members may participate in what we call self-assessment. It's a process of the board members evaluating their own performance, where they evaluate their own individual and collective performance as board members. That is one way in which board evaluation may be conducted in state corporations. Number 3, review of governance practices. Review of governance practices. Reviewing governance practices. The evaluation process may involve reviewing the corporation's governance practices and compliance with relevant laws, regulations, and guidelines. That is how board evaluation may also be conducted in corporations. Reviewing of governance practices. Stakeholder feedback. Stakeholder feedback. This means gathering feedback from key stakeholders such as the government officials, employees, the beneficiaries, which can provide valuable insights into the board's effectiveness and its impact on stakeholders. One way to evaluate state corporations is to get feedback from the stakeholders. 5, review of key performance indicators. Review of key performance indicators. Review of what? Key performance indicators, the KPIs. Reviewing the key performance indicators. The evaluation may involve assessing the board's performance against predetermined key performance indicators related to governance, related to financial performance, and also strategic objectives. Then 6 is identification. Identification of key areas of improvement, areas for improvement. Identification of areas for improvement. This is part of the process of evaluation of state corporations. And the identification of areas for improvement is based on specific findings or findings based on the evaluation findings. The specific areas for improvement may be identified based on the specific, based on the evaluation findings. All right. So the specific areas for improvement may be identified, and action plans may be developed. These action plans are developed to address weaknesses and enhance board effectiveness. So these are ways in which board evaluation may be conducted in state corporations. Number one, external evaluation. Number two, board self-assessment. Number three, review of governance practices. Number four, getting feedback from stakeholders. Number five, review of key performance indicators and identification of areas for improvement. Identification of areas for improvement. But candidates, it's important to know that state corporations may have specific governance frameworks as well as guidelines that govern the board evaluation process, and the specific practices may vary based on the corporation's unique circumstances and mandates. So that is what was required for that question. 4 marks. 4 marks. Any points here? 4 points you would earn. Candidate 4 marks. And that is the end of that question. Question number 3. We are going to take a break. When I come back, we will discuss question number 4. God bless you. Welcome back to the lesson. We are going to answer the second question. Boardroom Dynamics, August 2022, question 2. In our last session, we answered the case study. Question 2A reads, assess 5 factors to consider when recruiting board members, 5 marks. Factors to consider when recruiting board members. Factors to consider when recruiting board members is a direct question, simple question, this one. The first factor to consider is the expertise and skills. When you are recruiting members or any employee, it's important to consider their expertise and skills. Because anytime someone is being recruited, the person is being recruited to perform certain jobs or work, and to carry out certain function, then skills are required, expertise may be required. More so for board members, these are high-level employees of a company, and high-level expertise and skills may be required to fulfill their functions as board members. So it's important to evaluate the expertise and skills that the board currently lacks or needs to complement existing members. Before recruiting, it's important for the board to check if there are any gaps or if there are needs, so that when recruiting, the new members can complement the existing shareholders. So it's important to look for candidates with relevant industry knowledge, with the financial acumen, with the legal expertise, with the leadership experience, and so on, because that is what is required of a board member. An effective board member is one who possesses relevant industry knowledge, is one who possesses financial acumen, leadership experience, and so on. So when recruiting board members, consider expertise and skills. Another point to consider, number 2, is diversity. Board diversity. When recruiting board members, aim for diversity. Aim for diversity in terms of gender, ethnicity, age, background, and so on. Don't just hire old board members who are advanced in age. Have a mix of members in terms of age. Have the young ones, the middle age. You can have a mix of the experience of senior members of the society, and so on. Have a mix, diversity in age, diversity in ethnicity, diversity in background, and so on. Diversity is a factor to consider when recruiting board members. 3, independence. Independence. Consider the need for independent directors who have to provide objectivity, who have to provide what we call objective oversight, who may be required to challenge management decisions. You understand? Independence. When hiring board members, look at the independence of the people who are being hired. Independence brings in objectivity. Then another factor to consider is that one related to alignment with group strategy. Alignment with the strategy of the company. Alignment with company, not group, but company strategy. This has to be considered, the company strategy. Ensure that potential board members align with the company strategic goals and the long-term vision. The ones who are being hired or recruited should be committed to advancing the organization's objectives, and that should be tested when carrying out interviews of the board members. Will the new members align with the company's vision? There are many factors, including the culture fit. Consider the culture fit, cultural fit. Even board dynamics. Consider board dynamics and board dynamics. When recruiting new board members, consider the cultural fit and board dynamics. Assess how potential board members will fit into the existing board dynamics and company culture. Look for individuals who can work collaboratively with others and contribute positively to discussions, who can contribute positively to discussions. So there are many factors. I've only listed 5 factors to consider when recruiting board members. 1, consider expertise and skills. 2, consider diversity. 3, independence. 4, does the potential board members, will they support company strategy and vision? Then cultural fit and board dynamics. These are 5 factors, 5 marks. 5 factors, 5 marks. Part B, examine 5 principles of group dynamics. Principles of group dynamics. B, principles of this group dynamics. principle of group dynamics. What are the principles of group and group dynamics? The first principle is norms. Norms, roles and norms. Number one, roles and norms. Roles and norms. Roles and norms. Group dynamics involves the establishment of roles, norms that guide members' behavior within the group. So there ought to be clear roles and agreed upon norms that help create a structured and functional environment. You cannot have a functioning group that has no rules, that has no norms. You cannot have an effective group that members do not know their roles. So the first principle of group dynamic is to establish clear roles and norms that will guide the members' behavior within the group. Because if there are no roles and if there are no norms, then that is that will cause chaos. That is a recipe for chaos. Where there are no roles, members do not have roles, members do not know the rules, then that will be recipe for chaos. So one principle of dynamics is to have roles and norms. The second principle is communication. 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 Effective communication is crucial for group dynamics. There ought to be open, honest, and respectful communication that fosters understanding and cooperation among the group members. Communication is a very important principle if you are to hold a group together. Cohesion. Number three, cohesion. Cohesion. From the word cohesion. 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 Group cohesion refers to the degree of unity. It refers to the degree of bonding among the members. So high cohesion leads to stronger group identity and cooperation. Cohesion, unity is a principle of group dynamics. 4, conflict resolution. Conflict resolution. Group dynamics includes the ability to handle conflicts constructively. Because when you bring people together from different backgrounds, from different cultures, then conflict is inevitable. So it's important to have a conflict resolution mechanism in place. And group dynamics, I've said, is ability include the ability to handle conflicts constructively, because conflict will always arise, even if there are clear roles and norms. There is always room or chance that people will conflict. So resolving conflicts in a positive manner promotes trust and healthy working environment. So conflict resolution is a principle of group dynamics. 5, decision making. Decision making. Group dynamics influence the decision-making process within the group. And the group's decision-making approach, such as majority vote, such as expert decision, can impact outcomes. So the group must have an approach to making decisions. It could be majority vote, it could be a way of consensus, or even a mix, depending on the decision that is to be made. The members should agree on the approach when making decisions. That's a very important principle of group dynamics. there has to be an approach on how decisions are made. Okay, because that can impact outcomes. So these are 5 principles of group dynamics. 5 principles of group dynamics. Number 1, roles and norms. Number 2, communication. Number 3, unity. Number 4, conflict resolution. Number 5, decision making. 5 roles, 5 marks. Answered part B of question 2. Part C says, determine 5 factors a board may consider establishing the board size. Factors a board may consider. Factors a board may consider. Factors a board may consider while establishing the board size. The board size refers to the number of members, the head count of members who sit on a board. What are the factors that should be considered when establishing the board size, the size of the board? The first obvious factor is a company size. Company size and complexity. The size of the company and its complexity of operations may influence the optimal board size. So larger and more complex companies often have larger boards to handle governance responsibilities effectively. So if you have a company that has that is small and the operations are not complex, then the board size will be small. But if it is large with complex operations, then you are likely to have many board members sitting on that board. So one factor to consider is the company size, the size of the company and the complexity of the company's operations. Number 2, industry norms. Industry norms, the norms of the industry within which the company operates. So industry-specific norms and standards may guide the board size. So it's important to understand what is common and appropriate within the industry, because that can help determine the right board size. Number 3, the third factor is to consider while establishing board size is diversity and skill requirement. Diversity and skill requirement. When establishing a board size, it's important to consider the need for diverse skills and expertise on the board to address the company's challenges and strategic priorities. In point number 1, we stated that another factor is to consider complexity of the company's operations. So if the operations of the company are complex, then it's important to consider the skill requirement to address the complexity of operations of the company. So consider the need for diverse skills. If a company is large, is diverse with the complex operations, different skills may be required to help the company meet its objectives. The company may need diverse skills at the board level. So if it is large, then if the skilled sets are diverse, then the company will have a large board size. If the operations are not complex, then the skill requirements will not be as much as those of a complex organization. So a larger board may accommodate a broader range of skills, but a smaller board will accommodate a narrow range of skills. That is point number 3. Point number 4, the factor to consider is efficiency and decision making. Efficiency and decision making. Consider efficiency and decision making. A larger board may lead to slower decision making. If the board has many members, then the process of making decisions may be slow, which may lead to reduced efficiency. So evaluating the board's ability to function effectively with a particular size is essential. So efficiency is a factor to consider when establishing a board size. Board structure, number 5. Board structure. Board structure. Now, if a company has a unitary board structure, that is where the executives and the non-executives serve together, the board size may differ from a 2-tier board structure where there is a separation between management and the supervisory board. So we may have a 1-tier board structure or a 2-tier board structure. So a 1-tier board structure, the executive directors and non-executive directors, they sit together. It's one board that comprises of executive directors and non-executive directors. But for a 2-tier board, this is where there are 2 boards: the management board and the supervisory board. The management board is concerned with the operations of the day-to-day operations of the organization, but the supervisory board supervises the operations of the management board. So if the company has a unitary board structure, that is where executives and non-executives serve together, the board size may be different from a 2-tier board structure where there are separate boards, that is the management board and the supervisory board. So these are 5 factors a board may consider while establishing a board size. 1, company size and complexity. 2, industry norms. 3, diversity and skill requirement. 4, efficiency and decision making. Then lastly, board structure. Consider the board structure. 5 factors, 5 marks. 5 factors, 5 marks. So candidates, you've answered question number 2. That is August 2022 boardroom dynamics. In our next lesson, we'll answer question 3, which says, part A, identify 5 critical qualities of an effective board member, 5 marks. B, discuss 3 theories underpinning board dynamics, 6 marks. C, explain how board evaluation is conducted in state corporations, 4 marks. Attempt question 3 before coming in our next session where we'll share knowledge, we'll answer or offer suggested solutions for question 3. Bye-bye.
Welcome, learner, to our subject of today, research, consultancy and advisory. We are looking at underlying theories models of research, consultancy, and advisory. And our focus today in the lesson will be on social systems theory, which falls under selected research and consultancy theories. The social systems theory has been used extensively in social sciences, and the social systems theory is also called or referred to as systems theory. This social systems theory has its conceptual origins in social systems theory and can be traced to the 19th century, to the work of a philosopher, Herbert Spencer, and Emile Durkheim. They extensively looked at social systems, and the social systems theory is the study of society as a complex arrangement of elements, including individuals and their beliefs, as they relate to the whole. That is very critical as it relates to the whole. And in terms of the whole, this refers to a country, an organization, an entity, or a corporation. And specifically when it comes to social systems, when it comes to a company, then the company as a whole is an entity or an organization. And inside that particular organization, according to the social systems theory, there are subsystems within that particular organization. And those systems, the way they relate to each other, they contribute to defining what the whole system is. And when it comes to a country, then within a country, there are systems within a country. Within a country, there are organizations, and those organizations, under the beliefs of those people within that particular country, individuals, they define what that particular country is. In the social systems theory, we are going to look at the basic assumptions of social systems theory. Basic assumptions of the social systems theory. And there are 4 assumptions that underlie or underpin this theory. And the first basic assumption is that there is an underlying general order in the world. So 1, there is an underlying general order in the world. So this system assumes or makes an assumption that generally there is the aspect of order when it comes to things, the way things are done in the world. And that's the first basic assumption of the social systems theory. The second assumption of the second basic assumption of the social systems theory is that social ordering is a consistent and dynamic process. Social ordering is a consistent and dynamic process. What this implies is that when it comes to any society, whichever way the society is structured, or whichever way an organization is structured, there will be dynamics in terms of how order is maintained and sustained in terms of that particular working organization or that particular entity. Then the third aspect is that, the third assumption is that all human social behavior is purposive. All human social behavior is purposive. What this underlying assumption indicates is that any kind of behavior that is exhibited by an individual in a company, in a country, or in any system, whether it is a church, mention any group, that particular social behavior that is exhibited it's purposive, or it has a purpose. It has a purpose. So that is the third basic underlying principle underpinning the social systems theory. Then the fourth one is that all forms of social organizations display self-responsibility. Self-responsibility, all forms of all forms of behavior reflect a form of responsibility or responsiveness. So all forms of behavior reflect a form of responsibility or a response. They display a response in terms of the characteristics. So these are the four assumptions which underlie the social systems theory. So the proponents of this theory argue that there is an underlying general order in the world. Then two, social ordering is a consistent and dynamic process. They also argue or assume or underpin that all human social behavior has a purpose, and they argue that all forms of behavior reflect a form of responsibility or a form of response. Then when it comes to the social systems theory, there are certain components of the social system theory. Components of social systems theory. There are components or the characteristics of social system theory which define what the social system is. And these components are: you have an input within the system, you have a process in the system, you have output in the system, and there is a feedback loop from output to input, and then there is the environment within which that particular system operates. So the components of a social system can be seen in a display figure. It can be displayed such that you have a figure or a diagram that indicates the components of a social system. And within this particular social system, we have indicated that this social system will have input, or you can call them inputs. And these inputs as they come, you will have the inputs directed towards the process that they have to be processed within an organizational setting. So you have the processes, you can call them processes, and from processes, then you have outputs. So any system will have inputs, will have processes, and then there will be a loop. There will be a loop from outputs to inputs, which provides feedback. So from outputs, then you have feedback. So this is feedback. And when it comes to the feedback, then within that particular system, then you have the environment. And within that particular environment, there will be stakeholders. Within the environment, there will be stakeholders, and these particular stakeholders could, for example, be consumers. You have suppliers. You have, for example, government, among other members. So you have inputs, you have processes, you have outputs, you have feedback, and then you have environment within which the social system operates. And this is typical for any organization. If you are taking a company, for example, an organization that receives raw materials, These raw materials will be processed through processes. For example, if it is tea, for instance, it will be, for example, brought in as raw materials. It will undergo a process from the green leaf, maybe raw leaf and so on, to semi-processed outputs, which can now be dried. For example, tea leaves may be packaged. Then these ones are now, feedback is given to the output. And then when you have consumers, so from the outputs, the consumers will be there. Suppliers will also be interacting with this particular system and providing the inputs, like now you need energy, you need regulation by government, you need the price controls and so on. So these would form now the components of a social system that is continuously interacting with its environment to be able to provide goods, to be able to provide services within that particular working context. So the components or characteristics, components or characteristics of a system, of a social system, will include the things that will define a social system. Will include, we have indicated, one, you have the inputs. Two, you have processes. Three, you have outputs. Four, you have feedback. And then five, you have controls. Now, these controls can be brought in by, say, government. You could be an organization and you are operating maybe in the service sector, maybe tourism sector or manufacturing sector. So for you to be able to operate, there will be controls that are put in place by a government. There will be codes of ethics that are put in place by suppliers. You will also have consumers. Consumers will also have the bodies that are representing them in relation to the benefits or maybe the rights of consumers. So the system is in constant interaction with its environment. So when the feedback is provided that what has been produced is being accepted by consumers, then that particular system will basically continue working effectively. If the feedback is negative, then wherever the inputs are coming from, there'll be controls implemented to ensure that if consumers are complaining, if suppliers, for example, are not being paid, then it is important that that arrangement is made to ensure corrective measures are taken into consideration. Otherwise, if there are products being produced by a given company or by a given organization, if they don't meet the expectations of the environment, then those kind of products may not be readily acceptable in the market. So those are the components or the characteristics of a social system as envisaged in the social systems theory. And we have indicated you have inputs, you have processes, you have outputs, you have feedback, and then you have controls. So one may ask, so what are the applications of the social systems theory? Applications of the social systems theory. How can the social systems theory be applied, or of what use is the social system? Now, the way the social system has been put forward by its proponents, a social system looks at a system as being more important than the subsystems. So one, the whole is more important than the subsystem. So when it comes to operations within a given work environment or organization, it is important to note that there will be different sections within a particular system or components. But when it comes to the issue of preferences in terms of choices, what should be done, then the outputs or the processes or the components have to ensure, or the players within the system have to ensure that the players as subsystems are not more important than the whole system. So the whole system and its requirements take precedent when it comes to structuring of events and activities. It is also important to note that those making decisions should be aware that the environment within which a system operates is important. So the environment influences how organizations operate. Environments influence how organizations operate. Let us take an example. You have an organization that is in the manufacturing sector. Now, government and government agencies, for example, you have NEMA. If an organization is manufacturing, it is expected to comply to the regulations that have been set by government and its agencies like NEMA. So if that organization does not comply, then that organization may suffer consequences. So the social systems theory try to explain that as organizations operate, those organizations must be sensitive to the environment. The same thing with Kenya Bureau of Standards. So if an organization is operating, then it has to meet the quality mark. If that organization does not meet the quality mark, then that particular organization may suffer in the market, and customers may not be very confident in, or consumers may not be very confident in patronizing the products of that particular organization. So that's another area where the social systems theory underpins or informs decisions within the area of organization operations. Then it's also important to note that another area of application of the social systems theory is that organizational structures should be designed to be adaptive to changes. Organizational structures should be designed to be adaptive to changes. What is noted widely is that change is the only thing that is permanent. So as organizational structures are designed, it is important to be informed by the social systems theory that change will come. So organizational structures should be designed in terms of how they relate to different functions, with that particular understanding that when change comes, this particular structure is flexible enough, can be adaptive to the changes that are anticipated within a given working context. Then it's also important to note that another area or use of the social systems theory is that subsystems have to be aligned to support the main systems. Subsystems should be aligned. Subsystems should be aligned to support the main system. The main system. So if you have a country, we have given an example that an organization or a country could be now the main system or the main organization. So the way subsystems are designed, they should be aligned to support the main system so that the main system can be able to function and function effectively. Then it is important to ensure that the principles and concepts should be designed to be broadly applicable. Principles and concepts should be designed to be broadly applicable. So when it comes to organizational settings, if concepts or systems are designed within an organization, those systems should not be designed for just specific functions. Those systems and underlying principles within systems should be designed in such a way that, because systems relate to each other, principles and concepts should be designed to ensure that they can be broadly applicable within the context of operational organizations and so on. Then it is also important to ensure that when it comes to the social systems theory, every system is bounded by space and time. Every system is bounded by space and time. Every system is bounded by space and time. So at any one given event, if the system is supposed to receive, for example, input, then that particular system that is receiving input, that input is expected to come at a particular setting. And that bounding in terms of time may affect the operations of another system. So the issue of space and time should ensure that the way the systems are working, they are properly synchronized, so that if you have the receiving point, you have the processing point, you have the output point, you have the feedback time, then those systems must be interconnected and interrelated to work effectively, as the case might be. Then it is also important that to note that the social system is consistent with the systems thinking approach. The social systems thinking, social systems theory is consistent with systems thinking. Social systems theory is consistent with the systems thinking. So basically what this implies is that in any given organization, it is important that though you have subsystems, you have sections in a department, you have processes like input, processing, outputs, and others. It is important to ensure that for effectiveness of performance of organizations, there must be one approach for the whole organization. So the whole organization must look at issues holistically. Whatever decision that is being taken, the decision has to be taken in the context of the entire organization. So these are some of the areas where application of social systems theory can be able to be applied in management and other operational areas. So in our lesson today, Lana, we have looked at social systems theory as one of the selected theories in the area of research and consultancy. And we have seen that social systems theory is also called systems theory, and it was conceptualized in the 19th century, and it is attributed to philosopher Herbert Spencer and Emil Durkheim, who was a sociologist. And we have seen that the systems theory is the study of society, and it looks at society as a complex arrangement of elements that include individuals and their beliefs, what they believe in, as they relate to the whole. And we have seen that when it comes to the whole, it could be a corporation, it could be a country, it could be a county government, for example, it could be an entity like a church or maybe any other social organization. And we have gone ahead to see some of the basic assumptions of social systems theory, where we have looked at the 4 assumptions. And the assumption 1 is that there is an underlying general order in the world. That is an assumption of the social systems theory. Number 2, social ordering is a consistent and dynamic process. To put things in order, it has to be done consistently, and the process is dynamic. Number 3, the third basic assumption is that all social behavior is purposive. Any behavior that is in an organization, in a work environment, in a group, it has a purpose. Then 4, all forms of behavior reflect a form of responsibility or responsiveness. Then we have gone ahead and looked at the components of social systems theory, where we have looked at inputs, processes, outputs, and we have looked at the feedback loop. And we have also discussed that the social systems theory operates within an environment, and this environment may include stakeholders like consumers, suppliers, government and government agencies, and the components and characteristics of a social system. We have mentioned them as inputs, processes, outputs, feedback, and controls within the system. And then we have also gone ahead, Lana, and looked at the applications of the social systems theory, where we have looked at 7 of the applications where the social system theory can be applied. And we have indicated the number 1, that the social system looks at the whole, indicates that the whole is more important than the subsystem. There will be subsystems within an organization, but when it comes to the degree of importance, then the whole should be looked at as more important and than the subsystem. Then number 2, environments influence how organizations operate, and we gave an illustration and indicated an organization in the operating in the production setting should be aware that the environment, for example, government and government agencies or suppliers or consumers may have an impact on what the organization does. Hence, it is important that organizations become sensitive to their environments. Then thirdly, organizational structures should be designed to be adaptive to change. So this social systems theory can inform those designing organizational structures, so that the organizational structures are designed with an element of flexibility, so that they are flexible and they can be able to operate and adapt to changes. Then 4, subsystems should be aligned to support the main systems. So the subsystem exists for the purpose of supporting the main. So if it is in a government setting, for example, government agencies and government operational areas must be able to support what the entire government is doing. When it comes to a company, the departments and the sections within a company should ensure they are moving towards the realization of the organizational vision. That is how the social systems theory can inform decisions at that level. Then principles, number 5, principles and concepts should be designed so that they are broadly applicable. There should be no principles or concepts that are designed in an organization. If you are designing, say, a system within an organization, then that system should be strong enough and versatile enough to be able to be applied within the organization to achieve the greater goals of that particular organization. Then number 6, every system is bounded by space and time. Whatever system that an organization has, whether it is an open system or a closed system, then that system is bounded by space and time. For example, you may have inputs by a particular time, processes must take place by a particular time, outputs must take place. So if you are receiving raw materials, the system of receiving raw materials should be conditioned to the operational cycle of maybe the operational machines, so that if the machines are, for example, uptaking, then that uptaking of raw materials should be done at a particular time. Processes must be, for example, started. Then you have the outputs in relation to the issue of space and time, so that the systems are well synchronized. Number 7, where the social systems theory can also be applied, social systems theory is consistent with the systems thinking, where the whole organization is supposed to think as one. So decision-making processes must be synchronized, so that the organization is able to operate from one point of command. So that is your social systems theory in relation to selected research and consultancy theories in our lesson that we have completed. And before we finalize the lesson, there is an assignment that you need to work on to be able to consolidate your knowledge in the area of theories as they are applied in relation to the social systems theory. And the assignment is examine the application of the social systems theory of the social systems theory, social systems theory in management. So learner, your assignment for today's lesson, examine the application of the social systems theory in management. Thank you very much for being attentive in our lesson today.
Hello learner, welcome to Manifested e-learning platform. My name is FAM Ngwiri and I practice within Kenya. Today, ladies and gentlemen, we are discussing about the financial modeling and data analytics August 2023 sitting. The question of focus is question 22. It reads as follows: Phoebe Nyamongo is analyzing bonds which have been issued in the Pesa exchange. The table below shows the 5 bonds under consideration. So we have bond 1 up to bond 6. So this should actually be 6 bonds, not 5 bonds. We've been given the issue date, maturity date, the current date, the years to maturity, fixed coupon rate, the implied yield to maturity, clean price and dirty price. You are required, A, to compute the modified duration for the bonds. Number 2, the effective duration for the bonds and the average for each duration measure. So we will move towards the right of our screen, right over here where it's indicated solution over here, and we shall be able to work it out there, the solution. So what I want, when you get permission, I can just highlight this, the same. I want the formats to be the same as we move right towards the right over here. So I'm saying that this is just what I want. I just want that to be, sorry, let me just undo that. Just put it like so. Then I just put borders. Borders like so. So here is where I want us to compute the modified duration. So we have modified duration. Like that. We'll put wrap text over here so that now it can be able just to be like so. Then we put Control B to bolden it. So for us to compute the modified duration, right here, we will just need to click this function box or the function key here, and then we click on M duration. Click on M duration and we say OK. The settlement date is usually considered to be the current date, so we click that as the current date. Maturity, we fill out the maturity date, which is this one here. The coupon represents the fixed coupon rate right here. Click 10.8. But this has to be converted into percentages over here. So if we don't see over here convert into percentage over here as indicated right over here, we just escape and put it into percentage form over there. So we put percentage like so. That, and we can just put it in form of percentage. That, or just put it like so. Percentage. And we also do the same for all of them. So shift percentage like that, so that you can be sure that you're doing the correct thing. That and this. That. There's no adjustment that we need now. So we can come now again, click function argument or insert function. Click that. Settlement date, we said, is the current date. The maturity date is just indicated to us over there, 22nd April 2019. The coupon is that. You can see now we've indicated it in percentage form. That's better. The yield is the implied yield to maturity. So this also needs to be put into percentage form. So we have to redo that again. Percentage, because it's going to pick an absolute value. It's not going to pick the percentage as given to us by Kasneb. percentage, and finally percentage. So now we redo it again. Function argument, M duration. Settlement, we have the current date. Maturity, we put maturity date right there. Then the coupon, fixed coupon rate is 10 at percentage, 10.87. The yield, implied yield, is that form of percentage. And the frequency is semi-annual, 2. So we get 1.46. And because they are following each other, I can just double click moving down like so, and it will be able to just compute for us there. We also required to compute the average as indicated in the question here. So the average for each duration measure. So we just use the average function here plus average. And we just highlight everything there and we close the brackets and we say enter. So that's the average. Put it red. Now we are also required to compute the effective duration. Effective duration. I can wrap text over here. Control B, bold. Once we have that, we can then compute the effective duration. Click the function button here. Duration, you search for duration. We go. You can see that represents the duration. So we say okay. In a similar fashion to the way we did it for modified duration, for macular duration, we select the settlement date, current date, maturity, select the maturity date right there. The coupon, fixed coupon rate is given to us there. The yield is given to us as the implied yield right here, and the frequency is semi-annual. So put 2 there, have that. So we autofill like so. And this, because they're following each other like that, I can just fill out like that, and that represents the average also for effective duration. Now we can then move on to part B, because we've computed the modified duration, effective duration, the averages for each of those 2 durations there. Assume that the nominal yield for the bond is 500,000. Determine the total purchase price for each bond and the total value of the bond portfolio. So we want to find out how much we'd be able to spend if we were to buy bonds in the secondary market. So what we'll do, we'll put in here nominal value, that. So we'll just use text wrap, similar fashion here, nominal value, and we've been told 500,000. So we use the comma format. And we just drag it. And once we have 500,000, we can then also put here the purchase price. Wrap text again, like that. So how much then would we be able to purchase the bond? If you've been given, say assume over here now the total value, so plus sum, you've been given, and this looks like, is it 3 million? Yes, 3 million. So the purchase price, so you can just also put it like so, right? So it can pick the same formula here. We want to see how much we would, if you've been given 500,000 to purchase bond A, let's see, would we purchase it at a premium or at a discount? The formula is, we will need then to click the nominal value, and then we multiply by the dirty price. Why the dirty price? Because we must pay the holder of the bond, because we want to acquire a bond from an individual who is selling. So we must pay the seller accrued interest. So we use the dirty price. So we must pay them accrued interest, and then we divide by 100. That's how much we would have to spend so that we can be able to buy bond 1. So for the other bonds, we would spend a total of, Control D, 2.837 million. So we would spend, if we've been given a budget from the investment committee of 3 million, we would spend 2.8 million to be able to acquire those 6 bonds there. Here we can put the comma format. And so once we've identified the purchase price for each bond, we can move ahead and compute part C. Assume as well the bonds pay semi-annual coupons. Calculate the total coupon per year for each bond. Per year, the keyword is per year. So we can move towards the right here and click over here, the coupons. Type here coupons. And for us to be able to compute the coupons, we will just need to multiply the nominal value times the fixed coupon rate right here. So nominal value, then we multiply with fixed coupon right there. Remember, we are saying that we want to identify the annual rate, the annual interest that is going to be earned. So if you want to know this, because bonds pay semi-annual payments, so if you want to determine how much you'd get in one of the payments, you'd pick this one, you divide by 2, because bonds pay semi-annual interest rate coupon. So we just divide by 2 to see the first 6 months period, we get 27,175. The second period, we get 27,175, totaling to a yearly, or the coupon payment per year, in terms of answering the question here. So we just fill that out, and you can be able to see the annual coupons that have been paid. With that, we can then move on to part D. Determine the running yield and the yield to redemption for the bonds, as well as the average for each. So the running yield measures the annual rate of return an investment provides. So what we can do then is to maybe elaborate it further. It is the annual income that you would receive from money you have invested in bonds. And so to calculate the running yield, we would have to come right here and put here running yield. Like so. Of course it has to wrap text like that, bold, Control B, that. We are saying we would need then to pick the fixed coupon rate, which is this. We divide it by the clean price, the price which excludes accrued interest, and then we multiply by 100. So this is the running yield. 10.98. And the various ones are presented to you there. For us to be able to get the averages, so we would click now average function. And that's what would happen. 12.5. So that represents average. Put it that color there. So once we have the running yield, which we've said measures the annual rate of return an investment provides, we can move on to the next question. Determine the running yield and the yield to redemption for the bonds as well as the average for each. So now we need to do or discuss yield to redemption, compute it as well. So yield to redemption. Yield to redemption. And we are saying that this yield to redemption refers to the amount of money an investor will get back from a bond if they keep it for the full period agreed to when they bought it back. So that's what we're saying yield to redemption represents. And we are going to compute it as follows. We're going to add the running yield, or is given as the running yield. So we add, now we need to open 3 brackets like so. The 100, because bonds are issued per 100 value, then minus the dirty price, the price that includes accrued interest. Close the bracket there and divide that against the years to maturity. The years to maturity, not the yield to maturity, the years to maturity, which you're seeing is in that one over there. So we close the bracket right after that, and then we divide that again against the dirty price. That one there. Close the brackets. That's what we get, the yield to redemption. The amount of money an investor will get back from a bond if they keep it for the full period agreed to when they bought it back. So because it's the same format, we can just then sort of do it like that, and then we drag it down so that it can pick the formulas. We also need the average for this. So put it like so. And with that, then we can be able to now perhaps just, make it look, maybe beautify it like that, and see that now this is what the totals represent. And we can put a thick border outside down there like that, just to try and double check to see what we've actually done. We've done the modified duration, the effective duration, the averages for each measure. So the modified, effective, and the averages there have been done. Then we've computed the total purchase price. You can see the total purchase price is here, 2.83. We have also computed the semi-annual coupon rate, or to compute the total coupon per year, not per 6-month period. So per year, you can see the coupons have been computed to us over there. The next thing for us to do is to determine the running yield and the yield to redemption for each, as well as the averages, right there. So we've done that, the running yield and yield to redemption like that, the averages there. So then we need to draw a clustered column graph for the implied yield, for the average implied yield. So here we'll need to get an average plus average. And we're saying that just going to pick the average and highlight everything there, then we say enter. Perhaps I didn't select it well. Just a second. Or we can just get the sum of all of this. I'm not sure why it's refusing. Plus sum G7 to G21. So let me see if even if I'm to ignore, so that one does not work. Doesn't change there. Nope, doesn't change there. So what I can just do then is to just pick the values as the way they are, the implied yield to maturity, like that. So 11.5, 1, let me see, plus that value, like that. Let me see if it was just going to change the values like that. So those are the values given to us there. And now you pick the averages, the average, sorry. So it doesn't work, it doesn't pick. So I'm wondering what happens over here. Let's try it one more time. So average. So you can see it's clicked average. Number 1. And then you say OK. So it doesn't pick them like that, even using the function argument. Perhaps maybe the format in which this has been given is also quite different. So what we can do, we can just then change this to be like so. Number 1, then we put here number 2, like that, 3, number 4, then number 5. You can see here it goes, continues, goes down, goes down. So number 5, so 1, 2, 3, 4, 5, 6. So you can put that. Then I say OK. So it must mean that there is a problem with the formula. So let me just put with the format in which, not that there's a problem with the formula that we've used. Let's just use now 11.5141. Just put it like that. So you can put percent now, sign like that. 41, so this one should be percent, like that. If it refuses, so like that. So then we put 12.1975%. It's summarized there like that, so it's speaking now. Then 12.45, it's right here, 12.4502%. Then 12.6427, 6427, that. Then 12.9660, and finally 13.3452. 3452%, enter. So let's see the average function. It should pick now. So you can see now it picks. It must be a problem with the formatting over here. So let me just put that in red and bold it like that. So this is the average now. So I've just used the same. You see right here it's supposed to pick. It's not picking the formula there, but at least here we've managed to work our way around it. So you've been told to now draw a cluster column for the average implied yield, the average running yield, and the average yield to redemption. So the averages are also right over here. So if you, with your permission, I can just shift this or copy this for it to be side by side with these values here, like so. And now this one you can be able to say is the implied yield to maturity. So plus this implied yield to maturity, and of course we can be able now then to use format painter, make sure at least it looks presentable. So when drawing the graph for these three, it becomes easier now. So you can just pick those ones there and these values, the corresponding values there. So we come to insert, and then we come to recommended charts. So you can be able to see that we've actually been given the graph over here. So they told us to use a clustered column, and we've used a clustered column over here. So we've told to use cluster column, graph and implied yield, average running yield, and the average yield to redemption over here. So now here you can decide to even put chart elements. You can decide to put the percentages like that by clicking on this. You can leave it like that, or for someone to figure out over here. But with this graph, you will not know what percentage is over here. So the best graph to actually use is this one over here. So we can be able to see it's 12.15%, 12.5, and here is 12.52 for the implied yield to maturity. So the chart title over here can be the yields. That. And this brings us to the end of question 22. We hope that you have enjoyed being with Manifested Publishers, because we are here for you. Thank you and God bless you.
Hello everyone. Let us now turn to question 3. The paper is Boardroom Dynamics, December 2022. Question A reads, conducting regular board meetings is a good practice in good corporate governance. Based on the above statement, analyze 5 characteristics of effective board meetings. Characteristics of effective board meeting. That is the question. Characteristics of effective board meeting. Characteristics of effective board meeting. An effective board meeting, number 1, must have an agenda. Effective board meetings have well-defined and focused agenda that outlines the topics to be discussed and the expected outcomes. And this agenda should be distributed in advance to allow directors to come prepared. Agenda is the first characteristic of an effective board meeting. Now, once the directors are gathered, then there ought to be participative or participation, active participation. Active participation. The directors should actively participate in the discussions in the board meeting. Board meetings should encourage active participation from all the directors. And a culture of open discussion and constructive debate allows diverse perspectives to be heard and to be considered in board meetings. 3, time management. Time management. Management of time. Effective board meetings are well managed in terms of time. The chairperson should ensure that discussions stay on track and that each agenda item is given sufficient time for thorough discussions or deliberations. That is number 3. Number 4 is in relation to decision making. Informed decision informed decision making. Directors should have access to relevant information, should have access to relevant data before the meeting, such that the board meetings will so that the board meeting can be, at the end of the day, the directors can make informed decisions. They need to have information that is relevant in advance. All right, do you understand? Effective board meetings, I'm saying, involve informed decision making based on data, based on analysis, rather than relying solely on opinions or assumptions. Then the last characteristic, number 5, is follow-up. Follow-up and accountability. Follow-up and accountability. Directors should be given tasks, and there should be mechanisms in place to follow up if the assigned tasks have been done or have been accomplished. After the meeting, there should be follow-up on action items and the decisions made. Directors should be held accountable for what? For their assigned tasks and responsibilities. So these are 5 characteristics of effective board meetings. 1, agenda. 2, active participation. 3, time management. 4, informed decision making. Then lastly, accountability and follow-up. 5 marks. 5 marks. B, cognitive biases result from the brain's efforts to simplify the incredibly complex world in which people live. With reference to the above statement, appraise 5 common cognitive biases. I repeat, cognitive biases result from the brain's efforts to simplify the incredibly complex world in which people live in. With reference to the above statement, appraise 5 common cognitive biases. 5 common cognitive biases. Common cognitive biases. B, common cognitive biases. You have seen a cognitive bias is the brain's effort to simplify the complex world in which we live in. So the first common cognitive bias is confirmation bias. Confirmation bias. This bias involves seeking or interpreting information that confirms pre-existing beliefs or assumptions while ignoring contradictory evidence. This is the brain's effort to seek information or to interpret information that confirms the brain's pre-existing beliefs or assumptions while ignoring contradictory evidence. Confirmation bias. Then there is overconfidence bias. Overconfidence bias is a tendency to overestimate one's own abilities or the accuracy of one's predictions. And individuals with this bias may be overly optimistic about outcomes, leading to risky decision making. Overconfidence. Okay? Overestimating one's abilities. That is the second common cognitive bias. The third one Anchoring bias. Anchoring bias is another common cognitive bias. This bias occurs when individuals rely too heavily on the first piece of information they receive when making decisions, even if that information is irrelevant or unreliable. It's called anchoring bias. Availability bias, number 4. Availability bias. What is this bias? This bias is based on the tendency to rely on readily available information rather than seeking out more comprehensive or accurate data. Just relying on the information that is available. That is the availability bias. And candidates, information that is easily recalled or reasoned tends to have disappropriate influence on decisions. Then another common bias to be incomplete not to mention groupthink. Groupthink. Groupthink is a cognitive bias that occurs within a group when the desire for consensus and harmony outweighs a critical evaluation of alternative viewpoints. And this bias can lead to flawed decision making as dissenting opinions are suppressed to maintain group cohesion. This is a common cognitive bias. So these are 5 common cognitive biases. The first one, confirmation bias. Number 2, overconfidence bias. Number 3, anchoring bias. Number 4, availability bias. And lastly, groupthink. 5 common cognitive biases, 5 marks. Moving on to part C, explain 5 ways through which stakeholders could build trust through conversations. 5 ways through which stakeholders could build trust through conversations. Ways stakeholders could build trust. Ways through which stakeholders could build trust through conversations. Conversations, conversing. One way is active listening. One, active listening. Stakeholders can build trust through active listening. Active listening. Stakeholders can build trust by actively listening to each other's perspectives, concerns, and feedback. And this shows respect. Listening actively validates the importance of stakeholders' opinions and so on. Active listening is a way through which stakeholders could build trust. Listening actively. 2, transparency. Transparency. Being open and transparent in communication fosters trust. That's obvious. Is it not? Is it not? When you are transparent, then people can trust you, other than when holding information. Being open. Being open means being honest. When you are honest, then trust is built. Do you understand? Being open, being transparent, being honest fosters trust. Sharing relevant information, sharing updates, and also decisions helps communicating. It helps stakeholders feel included. It helps people to be informed. So one way to build trust through conversations is by being open, by being transparent by being honest. In fact, we can have it honesty and integrity. Honesty and integrity. Demonstrating honesty and integrity in conversations with the stakeholders builds trust. Being honest may mean admitting mistakes, acknowledging challenges, fulfilling promises. These are crucial for maintaining trust in conversations. Empathy. Empathize. Empathy. Showing empathy and understanding to our stakeholders and feelings. Showing empathy and understanding stakeholders' feelings. All right? Empathy in understanding stakeholders' needs enhances or builds trust. It creates a sense of connection and shows that their concerns are genuinely valued. The stakeholders' concerns are genuinely done what? Valued. 5, consistency and reliability. Being consistent, being reliable, consistent and reliable communication builds trust over time. And stakeholders need to feel confident that they can rely on the organization to fulfill its commitment and communicate consistently. So these are ways through which stakeholders could build trust through conversations. The question read that explain 5 ways through which stakeholders could build trust through conversations. So when communicating or when stakeholders are communicating, these are some of the ways through which trust can be built among the different stakeholders. The first way is active listening. Number 2, transparency. Number 3, honesty and integrity. Number 4, empathy. Number 5, consistency and reliability. 5 marks. So we have answered December 2022 question 3, A, B, and C. The subject is boardroom dynamics. When we meet in our next session, we'll proceed to answer question number 4. Thank you and God bless you. Bye-bye. Hello candidates and welcome back to the revision of meetings, compliance and administration. This is a paper done by certified secretaries. We've been revising the past paper questions. Today we're moving on to question number 3, December 2022. Question 3A reads, explain 3 circumstances when it is appropriate for a company to use a common seal on a document. Explain 3 circumstances. That's the question. 3 circumstances when it is appropriate for a company to use a common seal on its documents. The first circumstance is in relation to execution of deeds. Execution of deeds. In some jurisdictions, candidates, the execution of deeds requires the use of a common seal, and a company may use a common seal to affix its official mark on the deed to indicate its authenticity and formal execution. Execution of deeds. 2. Contracts and agreements. This is another set of documents that may require a company to use its common seal. Contracts and agreements. In certain situations, contracts and agreements may require the use of a common seal for added legal validity. And the common seal acts as a symbol of the company's authority and intention to be bound by the terms of the contracts or the terms of the agreement. Then we have legal and regulatory requirements. Legal and regulatory requirements. Legal and regulatory requirements. There may be specific legal or regulatory requirements that mandate the use of a common seal for certain types of documents, such as statutory filings, share certificates, bank guarantees, and so on. So companies may be obligated to comply with these requirements to ensure legal compliance and enforceability of the documents. So these are 3 circumstances. 1, 2, 3 circumstances to earn 3 marks. That is part A of that question. Part B reads, list 5 factors affecting dividend policy of a company. Factors affecting dividend policy of a company. Factors affecting dividend policy of a company. What are the factors affecting the dividend policy of a company? One obvious factor is profitability. Profitability. The profitability of a company. The profitability of a company is a significant factor for determining its dividend policy. Companies with the higher profits are more likely to distribute dividends to their shareholders, but companies with diminished profits are likely not to declare dividends. Do you understand? It's basic. If the company has made profit, then high profits, then such company can declare dividends. But if there are no profits, if the company is incurring losses, then that will affect the dividend policy. The company may not pay because dividends are always paid out of profits. 3, or number 2 is cash flows. Cash flows. This is another factor affecting a dividend policy of a company. Cash flows. The availability of sufficient cash flow is a crucial for a company to pay dividends. Cash flow considerations candidates including liquidity, including capital expenditure requirements, and debt obligations can influence the amount of dividends and even the timing of dividends. So cash flows. And a company may have generated high profits, but the company may not have the cash flows. So the availability of cash flow is a factor to consider, or a factor that affects dividend policy of a company. growth opportunities. Number 3, growth opportunities. Growth opportunities. Companies that have growth opportunities may choose to retain their earnings for investments into the business rather than distributing them to their shareholders in form of dividends. Now, the company's stage of development, the investment plans, and also the capital requirements can impact its dividend policy. So if a company is at its infant stage, then that company is likely not to pay dividends. It's likely to retain the dividends for the purposes of growing the company. But if the company is at maturity stage, this is a company with profits, company with cash flows, such a company can afford to declare dividends. Four, financial health. Financial health. The financial health and stability of a company play a role in dividend policy. Companies with strong financial positions and steady cash flows are more likely to maintain or even increase dividends, while financially distressed companies may reduce and sometimes suspend the payment of dividends. 5, another factor is legal constraints or regulatory constraints. Legal and regulatory constraints. Legal and regulatory constraints. Legal and regulatory constraints. Companies may be subject to legal or regulatory requirements related to dividend distributions, and such restrictions imposed by say company law or financial regulations or even sometimes contractual obligations may limit the amount or even the timing of dividend payments. So these are 5 factors. 5 factors. Yes, 5 factors. 5 marks. Profitability, cash flows, growth opportunities, financial health, regulatory and legal requirements. 5 marks. We are going to answer the last part of this question. Describe 6 roles of the board secretary. Roles of the board secretary. What are the roles of the board secretary? The roles of the board secretary. Now, one role the board secretary plays is in relation to governance support. Governance support. The board secretary provides support to the board in matters related to corporate governance. You understand? They ensure compliance with legal and regulatory requirements. They maintain corporate records and facilitate board meetings and decision-making processes. That is one role played by the board secretary. Meeting management, number 2. Management of board meetings. The board secretary is responsible for coordinating board meetings, including preparing the agendas, distributing meeting materials and information, and even recording minutes. They ensure that meetings are conducted in accordance with the proper procedures and that decisions are accurately documented. Meeting management. 3, board communication. Another role is in relation to board communication. The board secretary serves as a central point of communication between the board and the company's management, between the board and the shareholders and other stakeholders. They facilitate the flow of information to the board and ensure that relevant information is shared in a timely and transparent manner. The fourth role is in relation with compliance and regulatory affairs. Compliance and regulatory affairs. The board secretary assists in ensuring compliance with applicable laws, regulations, and corporate governance best practices. They also keep abreast of legal and regulatory developments. They advise the board on compliance matters and oversee the implementation of compliance programs. That is the fourth role of the board secretary. Then lastly, record keeping and documentation. Record keeping and documentation. The board secretary is responsible for maintaining accurate and up-to-date corporate records, including board minutes, resolutions, and other important resolutions, together with other documents. They ensure that the corporate records are properly organized, accessible, and securely stored. Record keeping and documentation. 6, board development and evaluation. Board development and evaluation. The board secretary may play a role in board development or training. It may play a role in board evaluation. They may assist in identifying board training needs, organizing board evaluation exercises, and supporting the overall professional development of the board members. So these are 6 roles played by the board secretary. 1 is in relation to governance, meeting management, board communication, compliance and regulatory affairs, record keeping and documentation, then record development and evaluation. 6 roles, 12 marks. 6 roles, 12 marks. We have answered question 3. Thank you for attending the lesson. We are going to take a short break. When we come back, we are going to answer question number 4. Bye-bye. Hello everyone, and welcome to the revision session of the Boardroom Dynamics paper. We've been answering questions from the December 2022 sitting. We've done question 1 up to question number 4. Today we're going to answer the last question. That is question number 5. I read question 5A, which says, ethical dilemmas are commonplace in society, but can negatively impact the business of a company. In view of the above statement, explain 5 ethical dilemmas that company directors may face. I repeat, ethical dilemmas are commonplace in society, but can negatively impact the business of a company. In view of the above statement, explain 5 ethical dilemmas that company directors may face. 5 marks. Part A. Ethical dilemmas that directors may face. A company. The first ethical dilemma is conflict of interest. Conflict of interest. Directors may encounter situations where their personal interests or affiliations conflict with the best interests of the company. And balancing their fiduciary duty to the organization with personal interests can be challenging, because you all know that people are moved by self-interest. People are motivated by self-interest. So where board of directors find themselves in a dilemma, in a situation where their personal interest is at loggerheads with the company interest, then it becomes challenging to balance their fiduciary duty to the organization with their personal interests at play. Conflict of interest. We may also have whistleblower dilemmas. Whistleblower dilemmas. Directors may become aware of unethical or illegal practices within the company, but may face dilemmas in deciding whether to protect their whistleblowers or prioritize the company's reputation. So that is a dilemma. Directors are individuals who have a lot of information about a company which they direct. So they may become aware of unethical or illegal practices within that company. But they may face a dilemma in deciding whether to protect the whistleblowers or to prioritize the company's reputation. Whistleblower dilemmas. Number 3 is what we call insider trading. Insider trading. This is a dilemma. All right? Directors may have access to sensitive information that could be used for their personal gain through insider trading. And deciding whether to trade or abstain from trading based on such information can be challenging, or it can be an ethical dilemma. Insider trading. 4, executive compensation. Executive compensation. Now, how is this a dilemma? Candidates, setting executive compensation packages can be ethically challenging, as directors must balance attracting and retaining top talent with ensuring fair and reasonable pay structures. So that may be a dilemma. Executive compensation. 5, environmental and social responsibility. Environmental and social responsibility. Directors may face dilemmas related to the company's environmental and social responsibility. And decisions about environmental impact, about community engagement and labor practices can have ethical implications. So these are 5 ethical dilemmas that directors may face. 1, conflict of interest. 2. Whistleblower dilemmas. 3. Insider trading. 4. Executive compensation. 5. Environmental and social responsibility. 5. Ethical dilemmas. 5 marks. Going to answer part B. Outline 5 steps. Outline 5 types of information that should be provided to newly recruited board members. Outline 5 types of information that should be provided to newly recruited board members. Recruited types of information that should be provided to newly recruited board members. Type of information. The first one is the company's background. Company background. 1. Company the company background, the history of the company. Details about the company's history. Details about the company's mission, the values, the visions, the strategic objectives. All that provide context for board members who will then understand the organization's purpose and direction. Newly recruited board members should be provided with the company's history, which includes the mission, the vision, the values, the strategic objectives, and so on. Company background. Number 2, governance documents. Governance documents. Newly recruited board members should be provided with copies of the company's articles of incorporation, the bylaws, the code of conduct, and other governance-related documents. It's very important to have such governance documents being provided to newly recruited board members. 3, financial information. Financial information. Financial information. Board members need to have access to financial statements, to budgets, to financial projections in order to do what? In order to understand the company's financial health and performance. Financial information. Financial records must be availed to newly appointed board members. Organizational structure. If you are coming in as a new board member, it's important for you to understand the structure of the organization, organizational structure, information about the company's structure, the key personnel, and the reporting lines helps board members understand how the company operates. Organizational structure. 5, we are outlining types of information that should be provided to newly recruited board members. It may be important for the newly recruited board members to have information in relation to the market, industry and market insights. Industry and market insights. Industry and market insights is another type of information that should be provided to newly recruited board members. Why? It's because a newly recruited board member may need to have an overview of the industry landscape or market trends, as well as competition analysis, competitive analysis. All that is essential for board members to understand, to be able to make informed decisions about the company's strategies. So it's very vital that the newly recruited board member has access to market insights, to industry insights, and so on. So these are 5 types of information that should be provided to newly recruited board members. Company background, number 1. Number 2, governance, like articles of association. Number 3, financial information. This includes financial statements, budgets, and projections. Number 4, organizational structure. The board member should understand how the organization operates, the communication lines, the key personnel, and so on. Then lastly, industry and market insights. These are 5 types of documents, 5 marks. I'm going to answer the last question in this sitting, which reads, board evaluations are used to assess and report on individual directors and the whole board. Evaluate 5 areas of focus in board evaluation. Areas of focus in board evaluation. You will also realize candidates' areas of focus in board evaluation. Board evaluation is a question that's been repeated many times. I've answered it here many times. Areas of focus in board evaluation. What are the areas of focus in board evaluation? The first area is board composition. 1, board composition. Board what? Composition. Here, evaluation is made of the composition of the board in terms of skills. When looking at the composition of the board, expertise is also evaluated, diversity is evaluated, and independence is also evaluated to ensure all that aligns with the company's needs and corporate governance principles. Evaluation of composition. When we are looking at composition, we are looking at the skills of the individual directors. Evaluate, okay? Carry out an evaluation of the skills, an evaluation of the independence, evaluation of expertise of board members. Evaluation can also be in relation to effectiveness. 2, board effectiveness. Board effectiveness. This is assessing how well the board functions as a collective body, including communications, decision making, and the ability to challenge and hold management accountable. That has to be evaluated. Does the board hold management accountable? How does the board make decisions? How does the board communicate? Because all that helps in finding out the effectiveness of the board effectiveness. 3, another area of focus in board evaluation is board performance. The performance of the board. Board performance. This performance that is evaluated is in relation to individual directors. So it's important to evaluate individual director performance. That performance can be in relation to attendance of meeting. Each director should also be evaluated based on contribution to discussions, engagement, and also performance can be in relation to adherence to ethical and legal responsibilities. So when carrying out board evaluation, the performance of each individual board member is also evaluated. 4, risk oversight. Risk oversight. Here, it refers to now the assessing of or the evaluation of the board's effectiveness in overseeing the identification, the management, and mitigation of risks faced by the company. Because risk oversight is a function of the board. And in evaluating the board, it's important to find out if the board effectively oversees the identification of risks, the management of risks, and the mitigation of risks that are faced by the company. Do you understand? Yes, you do. Then lastly is compliance and ethics. Compliance and ethics. Here, evaluation is done on the board's adherence to legal and regulatory requirements and its commitment to ethical behavior and corporate social responsibility. So when evaluating the board, these are the areas of focus. Areas of focus in board evaluation. Number one, board composition. Evaluate the composition of the board. Number two, evaluate effectiveness of the board. Number three, evaluate performance of the board collectively and the performance of individual directors. Number four, risk oversight. Number five, compliance and ethics. These are 5 areas, 5 marks. So that marks the end of the revision of the paper that was done in December 2022. Today we have answered question 5. In our previous engagements, we answered question 1 up to question 4. Thank you for attending the lesson. I'll meet you in our next session where we'll continue revising questions for the boardroom dynamics paper. We are dedicated to providing all the revision materials for candidates who are appearing in the Certified Secretaries exam that is offered by Kasneb. If you have any questions, you are free to send the questions. Below this video, there is a comment section where you can post your questions, and all your questions will be answered. Thank you. God bless you. Bye-bye. Hello and welcome to the lesson. We are going to revise the August 2022 question 6. The subject is ICT. Question 6A reads, an insurance company has decided that it no longer requires a physical head office. Its strategic aim is to become a virtual organization. The company's auditors have concerns that information held by the virtual company would lack security. Required, describe 3 measures that could be adopted to ensure the information in insurance company remain secure. Currently, this question we've answered it several times. The question is in relation to data security. This company has decided to become a virtual organization, meaning that it will no longer have physical presence, but will operate digitally. But the company's auditors are concerned that information held by the virtual company would lack security. So what are the measures that could be adopted to ensure that the information of the company remains secure? The first measure is encryption. Encryption. Implementing strong encryption techniques for sensitive data will be crucial to ensure its security. The second measure is multi-factor authentication. Multi-factor authentication. Then number 3, the third measure is security remote access. Security remote access. So we are going to discuss those three measures to safeguard against the lack of security of the information of this insurance company that plans to go virtual. So that's part A of the question. Measures that could be adopted to ensure that information is secure. The first measure I've said, measures to secure information of a virtual insurance company. The first one is encryption. Encryption. The company should encrypt data both in transit and at rest using robust encryption algorithms and secure key management practices. That will ensure that even if unauthorized individuals gain access to the data, they cannot decipher its contents without the appropriate decryption keys. You encrypt. If you want to get access, you have to decrypt. Encryption. Multi-factor authentication. Authentication. 2. Multi-factor authentication. Multi-factor authentication. Implementing multi-factor authentication adds an extra layer of security to access sensitive information. That involves requiring users to provide multi-forms of identification such as password or fingerprint scan or one-time authentication code. So multi-factor authentication reduces the risk of unauthorized access to the company system and data, as it becomes more challenging for attackers to bypass the authentication process. Multi-factor authentication. Security remote access. As a virtual organization, employees may need to access company systems and data remotely. So it is important to implement secure remote access solutions such as virtual private networks, what we call the VPNs, or secure remote desktop protocols. Such technologies create an encrypted tunnel between the remote device and the company's network, ensuring that data transmitted over the internet remains secure and protected from interception by unauthorized individuals. So those are 3 measures to secure information of this virtual insurance company. 6 marks. 6 marks. 2 marks, 2 marks, 2 marks, 6 marks. Part B. Highlight 3 challenges of prosecuting ICT cases in court. Challenges of prosecuting ICT cases in court. The first one is technical complexity. First challenge, technical complexity. Technical complexity. ICT cases often involve complex technological concepts and evidence, which can be challenging for non-technical judges and lawyers to understand. So presenting evidence in a clear and comprehensible manner may require the involvement of expert witnesses or specialized forensic investigators, which adds complexity to the legal proceedings. Technical complexity is one challenge. Number 2, jurisdictional issues. Jurisdictional issues. With the global nature of ICT, jurisdictional challenges may arise when attempting to prosecute cases that involve actors or incidents across different jurisdictions. And determining which jurisdiction that has the authority to prosecute and coordinate international cooperation can be time-consuming and complicated. Jurisdictional issues. The third challenge of prosecuting ICT cases in court is digital evidence preservation. Digital evidence preservation. ICT cases heavily rely on digital evidence, which can easily be manipulated. It can be easily be deleted or destroyed if proper preservation techniques are not employed. So ensuring the integrity and the admissibility of digital evidence requires specialized tools and techniques for data collection, preservation, and data analysis. And failure to properly handle digital evidence can weaken the prosecution's case. So it is important for legal professionals involved in ICT cases to have a solid understanding of technology and also to stay updated on evolving trends and challenges in order to effectively navigate these complexities during legal proceedings. 1, technical complexity. 2, jurisdictional issues. Number 3, digital evidence preservation. Those are 3 challenges, 3 marks. We've answered part B. Now going to answer part C. Explain 4 application areas of cloud computing technology in governance, accounting services. Governance and accounting services. Application areas of cloud technology. Application areas of cloud technology. Number C. Application areas of cloud technology in governance / accounting services firms. In governance / accounting services. Application areas of cloud technology in governance / accounting services firms. The first application is data storage and backup. Data storage and backup. Cloud computing provides a secure and scalable platforms for securing and backing up critical data. So the firms can leverage cloud storage services to store their data. If it's the accounting firm, that will be the accounting or financial records or audit logs or any other important documents to ensure that data is available and reliable, and also to ensure data recovery. Data storage and backup. Collaboration and communication. Number 2, collaboration and communication. Collaboration and communication. Cloud-based collaboration tools enable real-time collaboration and communication among team members, both within the firm and with external stakeholders, and that allows seamless collaboration on financial reporting, auditing, compliance activities, and thereby improving efficiency and productivity. Collaboration and communication. Number 3, software application as a service. abbreviated as SaaS. Software application as a service. Now, cloud-based computing and governance software applications can be accessed and used via the internet, eliminating the need for on-premises installation and maintenance. So SaaS solutions provide the firm with access to up-to-date accounting software, regulatory compliance tools, and other specialized applications, reducing costs and enhancing agility. 4, and this fourth one is a common answer: scalability. Scalability and flexibility. This one I've written on this board many times: scalability and flexibility. Cloud computing allows the firm to scale its computing resources based on demand, and that particularly is useful during peak periods such as a tax season or financial reporting deadlines, when additional computing power may be required. So cloud platforms provide the flexibility to adjust resource allocation in a dynamic way, ensuring optimal performance and cost efficiency. So these are 4 application areas of cloud technology in governance and accounting services firms. 1 is data storage and backup. Number 2, collaboration and communication. Number 3, software application as a service. Number 4, scalability and flexibility. 4 marks. That is part C. Part C. We are answering question number 5, number 6. Part D reads, identify 5 major management challenges to building and implementing information systems within an organization. Another common question, which I have answered here several times. Challenges to building and implementing information systems. Challenges to building and implementing information systems. Challenges to building and implementing information systems. What are the challenges? The first challenge is alignment with business goals. Alignment with business goals. Alignment with business goals. Alignment with business goals. Candidates, ensuring that information systems align with the organization's strategic objectives and supports its core business processes is a significant challenge. It requires a clear understanding of business requirements and effective communication between the IT and the business stakeholders to align the information system with business goals is not a mean task. It's a big challenge. So we are discussing building and implementing. Building and implementing. Challenges of building and implementing information systems. Another challenge is resource allocation. Allocating resources. Resource allocation and budgeting. Now, building and implementing information systems require significant financial and human resources. So allocating appropriate resources, managing budgets, prioritizing projects can be challenging, especially where there are competing demands for limited resources. So resource allocation and budgeting is a challenge. The third challenge, candidates, is change management and user adoption. Change management and user adoption. Introducing a new information system often involves changes to existing processes, workflows, and job roles. So managing change effectively needs addressing resistance also, and ensuring that user adoption are critical for successful implementation. And therefore, training and communication strategies are key components of addressing such challenges. Change management and user adoption, because when implementing an information system, the existing processes, the workflows, and even job roles, the changes to such processes are inevitable, and naturally people resist change. So it's important to have proper communication and training during the building and implementing of an information system. Otherwise, workers may resist. So change management and user adoption is a challenge. So that is part D. Candidates were to give 5. These are just 3. Let's highlight the other 2 challenges. This is number 4. Data quality and integration. Data quality and integration. Information systems rely on accurate and integrated data delivery, and ensuring that data quality and data integration across various systems and also data governance are essential challenges in building and implementing information systems. Data quality and integration. I've said that information systems rely heavily on accurate and integrated data to deliver reliable insights and support decision making. So it's important to ensure data quality. It's also important to ensure integration of data across various systems, and data governance, I've said, are essential in building information systems. Data quality and data integration. Security and privacy is another challenge. Security and privacy. Security, how is security and privacy a challenge, or why is security and privacy a challenge? Now, candidates' information systems store and process sensitive data, making security and privacy a major concern. So protecting data from unauthorized access, ensuring compliance with the regulatory or with the regulations, and also implementing appropriate security measures are critical management challenges in information system development and implementation. So these are 5 challenges 1. Alignment with business goals. 2. Resource allocation and budgeting. 3. Change management and user adoption. 4. Data quality and integration. 5. Security and privacy. 5 marks. 5 marks. Part E. Outline 2 limitations of touchscreen as an input device. Limitations of a touchscreen. DE. Limitations of a touchscreen. Limitations of a touchscreen as an input device. What are the limitations? The first limitation of a touchscreen as an input device is lack of tactile feedback. Lack of tactile feedback. Unlike the traditional input devices like the keyboard or the mice, touch screens do not provide physical keys or buttons, and that absence of tactile feedback can make it challenging to type accurately, which may result in errors, especially for users who rely on touch typing or who are accustomed to physical buttons. Lack of tactile feedback. There is also limited precision with touchscreen. Limited precision. Touchscreens may do what? May have limitations in terms of precision, especially when it comes to small targets or precise movements. So the size of fingers or even what we call stylus tips can make it difficult to accurately interact with small elements or perform precise actions, such as drawing or selecting small objects on the screen. So there could be a small object on the screen, but the finger is big. So you see, that is a challenge. And therefore it's important to know that touch screens have evolved and improved over time, and these limitations may vary depending on the specific touchscreen technology. It may also vary depending on the device. Additionally, user experience can be enhanced through features like haptic feedback or stylus support. So these are two limitations of touch screen as an input device. Number one is lack of tactile feedback. Number two, in some instances, it can give you limited precision. Two limitations, 2 marks. 2 limitations, 2 marks. So these are how many marks? We have 6 plus 4 giving us 10. Then 3 plus 2 plus 5, 10, total 20 marks. So that is a solution to August 2022 question 6. Information Communication Technology is the paper that was done by CPA foundation level candidates and CS foundation level candidates. Thank you for attending the lesson. In our next session, we are going to answer question 7 of the same sitting, August 2022. Bye-bye.
I'd like us to look at a question from the Kasneb past paper. So this is what the question says. Kenkoff Company Limited is a coffee manufacturing company that was incorporated on 1st January 2020. The company commenced its operation on 2nd May 2020 after incurring the following expenditures: factory land and building, conveyor belt, furniture and fitting, farm labor quarters, coffee milling machine, irrigation system, borehole, construction of gabions, lorry 3.5 tons, fencing of the farm, farmhouse, tractor, factory perimeter wall, delivery van, trailer for the tractor, computer, 2 saloon cars each costing 3,300,000, a sports pavilion. Additional information: number 1, included in the factory land and building is the cost of land at 45 million. One of the saloon car was disposed of during the year for 2,200,000. Number 3, the following assets were purchased on 1st August 2020. We have office curtain, fax machine, water pump, packaging machine. Required: investment allowance due to Kenkoff Company Limited for the year 2020. Now, when you are told to get the capital allowance for the year, there are 2 things that you're supposed to check first. The first thing you check is, how many years are you supposed to get the capital allowance? How many years? 2, which year are you getting the capital allowance? So if you look at here, in the required, all these are in the required. We are told the investment allowance due to Kenkoff Limited for the year ending that 1st December 2020. That area we are talking about 1 year, year 2020. And then the year is 2020. So with that one, now we can be able to go back and start claiming capital allowance. And we normally claim capital allowance through preparation of a schedule where we do the computation and then we add the total to get the total capital allowance, which now once you get it, when we'll be looking at this in our next lesson, the next topic, when we'll be determining the taxable income of the business, the total we are going to get from here is the one that will bring and deduct it here when we are determining the taxable income in the income statement. So I'll delete this one so that we can have that table or schedule. This is how the capital allowance schedule look like. Then it's good you indicate the year that you are getting the capital allowance. As per the question, it is the year 2020. In this schedule, these are the items that you normally list. We have the item. We have the qualifying costs. We have the rate, and we have the capital allowance, in short written as CA, or investment allowance, written as IA. Now, to make our work easier, I want to convert our figures into shillings thousand, so that because our figures are too huge, we'll be removing the last 3 zeros. Now, once you do that, you start posting those items that qualify for capital allowance. You'll be giving it a name under the item, and then the costs that qualify for the capital allowance. You will post the rate and then you claim the capital allowance. You know, you take the qualifying cost times the rate to get the capital allowance or investment allowance. We'll start with the first one, the factory land and building. Now, factory land and building, we said, factory building qualify for capital allowance at the rate of 50%. And when we are looking at the capital allowances, we said a land does not qualify for any capital allowance. Now, this being land and building, we must know how much was the value of land. If you go to the additional information number 1, that is where we have the value of the land. That included in the factory land and building is the cost of land valued at 45 million. So the land is 45 million. So that will remove it from the factory land and building so that we remain with the factory. We'll have factory building. To get the cost of land of the building, it will be 82,000. We minus the cost of land, which we were told was 45,000. So whatever remains will be how much? It will be 82,000 minus 45,000. Which give us 37,000. Now, for the factory building, first year is supposed to be 50% without considering time, because up there we can see they started the operation on 2nd May. So they started using these items from 2nd May 2020. However, even if the incorporation was in January 2020, we look at the time of use if it was supposed to be apportioned based on time. But we said 50% is first year regardless of the time. When you take 50% to get the capital allowance or investment allowance, you take the amount that qualified times the rate. It gives us 18,500. You post it there. From there we go to the next item, conveyor belt. The cost that qualify is 6,200, 6,200,000, although we had converted to shillings thousand. We had said conveyor belt, the rate is 50%. It's under manufacturing, a machine that assists for manufacturing to continue. When you take that 50% of 6,200,000, you get 3,100,000. The next one is furniture and fitting. For the furnitures and fitting, the amount is 350. For the furnitures and fitting, we said the rate is 10%, and at the rate of 10%. And then we said, other than the 50%, all the other rates are per annum, per year. Per annum, we said, is per 12 months. So if it was used for less than 12 months, you have to apportion the rates accordingly. So this one is supposed to be per annum. So you multiply by, if you look at the number of months it was used, they started using it from May 2nd. Now, when a month is considered, we consider that to be a full month. So from May, so when you count them to the end of the year, that is the end, that 1st December 2020, those are going to be 8 months. So you multiply by 8 over 12. Then the amount is going to be 350 times 10% times 8 divided by 12, which is going to be 23.333. We round off to 3 decimal places. Now, moving forward, I'd like us to list the items, then we do the computation. So we go to the next one, farm labor quotas. Now, farm labor quotas is a structure that is used in farming, and we say structures is something that either permanent or semi-permanent in the farm. They qualify for capital allowance at the rate of 50% and 25% under farming. So this farm labor, So don't say that we say the labor quotas is supposed to be 10%. When it is in farming or mining, it's supposed to be 50%, then 25. So this being the first year, 50%. Farm labor quotas, which we have 48,800. The rate being the first year 50% without considering time. Coffee milling machine, that is now a machine used in manufacturing. So it's a mixture of farming and manufacturing. So this for manufacturing, which we said is 50%. The next one is irrigation system. Irrigation system, we said, is in farming and is supposed to be 50% being the first year. The other one is borehole. Borehole, we said, is 50%. The other one is construction of gabions. Now, gabions look like it's a structure in farming, but gabion, we don't claim capital allowance. When we get to the next topic of taxation of business income, that you are going to see, it's not considered to be a fixed asset. It isn't. So we don't give it capital allowance. Lorry, we say that's supposed to be 25%. And this being that it was not used the whole of the year. We said any other rate other than 50% is per annum, so we apportion based on time. Up there it was used from May, so times 8/12. And move to the other one, we continue. This is the qualifying costs, the rate, and the capital allowance or investment allowance. We had reached on lorry. From there we go to the fencing of the farm. Fencing of the farm, fence is a structure that is used in farming, so that should be 50%. Remember, these are in shillings thousand. The rate is 50% without considering time. After that, farmhouse. Farmhouse, we said, is 50% under farming, but it is a sole proprietorship or a partnership. We only take a third of the cost. But now, this one is a company, Kenkov Company Limited. Whenever you see limited, that's a company. So this one, we won't take a third, the whole cost. The other one is tractor. Tractor, we said 25%. But consider time. Since it was used for May, it will be times 8/12. Factory perimeter wall. Wall, we said 50%. Which we have 948. Supposed to be 50% without considering time. Delivery van, we say 25%. times 8 over 12. Trailer for the tractor. Trailer we said is 10%. Times 8 over 12. Computer, that we said is supposed to be 25%. The next one is 2 saloon cars, each costing 3,300,000. Saloon car we said is 25%, but we noted saloon car and sport utility vehicle. If the value is more than 3 million for each vehicle, we restrict to 3 million only. This one is 3,300,000. So we have to restrict each to 3. Now being 2, 3 times 2 give you 6. Two, 6, and you can write even an R on top to just show that that's a restricted value, not its value, not its true value. 25% for 8 months, so 8 times over 12. Then sports pavilion. Sports pavilion we said is supposed to be 10% per annum. After that we go to the additional information. Additional information number 1, we had talked about it because we are told included in the factory landed building is the cost of land valued at 45. We remove that from the value of the factory so that we can remain with the value of the factory. Number 2, one of the saloon car was disposed of during the year for 2,200,000. Now at the moment we don't consider the disposal. We can only consider if you were told when it was disposed. Like if you are told that it was disposed in November. Remember saloon cars here we had assumed they were used for 8 months. That's why we multiply by 8 over 12. But if we are told it was sold in November, that means that it was not used for 2 months, November and December. We could have said, okay, we had said from May to December, that's 8, minus the 2 that were not used. So that could have been 6 months. So it's supposed to be 25 times 6 over 12. But now since here it's not indicated when it was disposed, then we can ignore that part. Otherwise, if we are told, then we could have computed based on the time it was used in that year. After that, we go to number 3. The following assets were purchased on 1st August 2020. So we have office curtain. Office curtain fall under the rate of 10%. The ones that we said are 10%. And then this one we consider for how many months. It was from 1st August. If you count the number of months, those are supposed to be 5. August 1st, so August is included. So August, September, October, November, December, those are 5 months. 5 over 12. Fax machine, we said 10%. It's under 10%, again for 5 months. The next one is water pump. For the water pump, we said it's supposed to be 50% first year, and so the first year without considering time. Then the other one is packaging machine. For the packaging machine, that is supposed to be 50%. Now, being the last one, now we do the computation to get the total capital allowance. But to now compute for each first, we had stopped here. So 50% of 4,800, that will be 2,400. 50% of 4,2, that will be 2,100. 50% of 1,480, that will be 740. 50% of 2360 1180. 25 times 8 over 12 of 1120. It will be 186 667. We round off to 3 decimal points. Sorry, this will be point. The next one, 780 times 50% give us 390. 50% of 2620, that will be 1310. The other one is 50% of that 600 times 25 times 25 times 8 divided by 12, 600. The other one is 948 times 50%, 474. 2600 times 25% times 8 divided by 12, 433.333. 520 times 10 times 8 divided by 12, 667. 720 times 25% times 8 divided by 12, it gives you 120. Then 6 times 25 times 8 divided by 12, 1000. Then the next one is 1840 times 10% times 8 over 12, 122.667. Then 320 times 10 times 5 divided by 12, 13.333. The other one is 180 times 10 times 5 over 12, 7.5. The other one is 560. This will be 280 times 50. The next one is 1720 times 50%, 860. With that one, we can now get the total capital allowance. Where now we are going to add all these total. The first one is 18,500 plus 3,100 plus 23.333 plus 2,400 plus 2,100 plus 740 plus 1180 plus 186.667. Then we add 390 we add 1310, we add 600, we add 474, then we add 433.333 plus 34.667 plus 120 plus 1000 plus 122.667 plus 13.333 plus 7.5 plus 280 plus 860 gives you 33,875.5. That become the total capital allowance to be claimed by this business in the year 2020, and we have answered the question. I want us to look at another question so that we can have a comprehensive overview of these capital allowances. So here is the question. Toland Mining Company started prospecting for titanium in Mombasa in the year 2017. Expenditures relating to research, testing and winning access to titanium amounted to 240 million. The company paid 720 million to the government to acquire rights over titanium and shillings 210 million for the purchase of land. The following assets were constructed or purchased during the year 2018. 1. 2 graders were purchased at a total cost of 16 million. A forklift was acquired at a cost of 6 million. A store was constructed at a cost of 36 million. Office furniture was acquired at a cost of 2,400,000. Labor quarters were constructed at a cost of 42 million. 10 lorries, 5 tons each were acquired at a cost of 30 million. Specialized processing machine for mining were acquired at a cost of 960 million. Staff clinic was constructed at a cost of 12 million. Computers were purchased at a cost of 480. Ships 600 tons was acquired at a cost of 450 million. 3 saloon cars for official use were acquired at a total cost of 9 million. So we are required to have capital allowances due to Poland Mining Company Limited for 2 years ended that 1st December 2018 and 2019. So as we say, the first thing that you normally consider is which year are you supposed to, first of all, how many years are you supposed to get the capital allowance? Here we have 2 years because the question is about capital allowance for 2018 and 2019. Then which years? The years are 2018 and 2019. Although, as you are told at the top there, they started prospecting in the year 2017, but actually nothing really happened in 2017. They didn't even claim capital allowance. So here we'll be considering the first year to be 2018. So we start with 2018 and then we go to 2019. So we start with the first year. For the year 2018, we have item, qualifying costs, rate, capital allowance or investment allowance. So we will start looking for those items that we should be claiming capital allowance. And I want us to convert them again to shillings 1,000. So we start with at the top there, the prospecting of titanium started in 2017, but as we have said, 2017 nothing happened. So the first year to be claimed capital allowance should be 2018. So expenditure relating to research, testing and winning access to titanium 240. We said under mining, that is supposed to be 50% for the first year, then 25% from the second year. So because we are in the first year, 50, So research, testing, and mineral access costs. Which we have 240,000. Remember, it's 240 million, but because we have converted to shillings thousand to 40,000. And then the rate, we said first year for this one is 50%, under mining 50%. The other one, the company paid 720 million to the government to acquire rights over titanium. We say the cost of acquiring rights is supposed to be 50% under mining. So government rights costs, which we have 720, 50%. We'll do the computation later. After that, and 210 million for the purchase of land. But we say land doesn't qualify for any capital allowance, so we ignore that one. We continue. The following assets were constructed or purchased during the year 2018. See, so all of them were 2018, so first year. So 2 graders. Now grader, we said is supposed to be under the 10%, not 50. It's not under mining 50, it's under 25%. And the value is 16 million. Now the rate is 25%, and since we are not told when it was specifically acquired, so we assume a full year, so we want a portion based on time. Forklift, we said is supposed to be 25%. No apportioning of time because we are not told. The store, we said buildings relating to mining, those are supposed to be 50% under mining. Office furniture, that's supposed to be under 10%. Labor quarters, that's supposed to be under mining buildings, which we said is supposed to be 50. The other one is 10 lorries each, 5 tons each, were acquired at a total cost of that. That's the total cost. That's supposed to be 25. Specialized processing machines for mining were acquired at a cost of 960. Mining machine we said is 50. Then we have staff clinic constructed at a cost of 12. That's again under mining is supposed to be 50% under mining. Then we have the computers. Computers we had said is 25%. The other one is a ship. 600 tons was acquired at a cost of 450. So ship we had said is under 50%. The next one is 3 saloon cars for official use were acquired at a cost of 9 million. Now saloon car 25%, but be careful, if each is more than 3 million, you only give 3. But if 9 for 3, divide by 3, that will be 3 million each. So we won't restrict. Three, 9 million. Under 25%. From there, we do the computation of the amounts. So 50% of 240,000, that will be 120,000. 50% of 720, that will be 360,000. 25% of 16, that will be 4. 25% of 6, that will be 1,500. 50% of 36, that will be 18,000. 10% of 2,400, that will be 240. 50% of 42,000, that will be 21,000. 25% of 30, that will be 7,500. 50% of 960, that will be 480,000. 50% of 12, that's supposed to be 6,000. 25% of 480, that will be 120. 50% of 450, that will be 225,000. 25% of 9,000, that will be 2,250. And with that, we now get the total capital allowance. For the year 2018. We add them. 120,000. We add 360,000. We add 4,000. We add 1,500. We add 18,000. We add 240. We add 21,000. We add 75. We add 480,000. We add 6,000. We add 120. We add 225,000. We add 2,250, and that gives us 1,245,610. That is the capital allowance that was supposed to be claimed in the year 2018. And because the question was asking for capital allowance for 2018 and 2019, now we go to the following year, which is supposed to be 2019 now. So remember, we claim each year separately when we are preparing the income statement for each year. So again, we'll have the item, qualifying costs, the rate, and the capital allowance or investment allowance. These are in shillings thousand. Shillings thousand. Okay, so for 2019, you realize that nothing new was acquired or done. So whatever we had in the previous year are the one that we moved with in 2019. So here we are only talking about the second year. So we just be transferring these items and now looking at if the rate changes. The first one is research, testing, and mineral access costs. The amount now, remember from the second year we said is supposed to be 25% per annum straight line on the remaining balance after first year. So the costs before first year was 240. First year we claimed 120. So what remained was 120. So 240 minus 120 is 120. That is the qualifying cost in the second year. The rate is 25%. So this one times this one, that is going to be 30,000. Now, were we to claim for the third year, remember it will be the same. Remember from second year, it remains constant straight line. So what you claim in the second year is the same as the third year, the fourth year, that way. Because the qualifying cost will still remain after the first year, 120, the rate is 25, the same. So therefore, it remains the same. We continue, government rights. Rights costs, which we have 720 minus 360, that remains 360. 25%, that will be 90,000. Then graders. Now, other than the 50, the other rates are straight line per year the same. So for the 25, that the qualifying cost remains the 16,000. The rate is still 25. Straight line, remember, 4,000. For the next one, forklift, it will be 6. The same amount. The rate is 25, the same. The amount here is 1,500. Then store. For the store is supposed to be the remaining balance. 36 minus 18 give you 18. The rate is 25, so that will be 4,500. Then office furniture. For the office furniture, we'll have the same. This one do not have issue. 10%, 240. For the labor quarters, now the balance. 42,000 minus 21, so labor quotas, which is supposed to be 21,000, then 25%, that will be 5250. Then we have the next one is lorries, which we have now, that is straight line, 30,000, 25%, 7,500. After that, mining machine, for the mining machine, the remaining balance, which will be 480,000. The rate is 25%. That will be 120,000. After mining machine, staff clinic. Now that the remaining balance, 12 minus 6 gives us 6. The rate is 25%, giving us 1,500. Then computers. Computers is a straight line, so for 80, 25%, and that gives us 120. Then ship. Now this on the remaining balance after first year. The remaining balance, this minus this, give us 225,000. And then 25%, that will be 56,250. Then the saloon car, the last one. So saloon cars, there are 3. Now this is straight line, so it remain 9, then 25%, that give us 2250. With nothing more, we can now add them to get the total. So we start with 30,000, just a minute. So we start with 30,000, we add 90,000, we add 4,000, we add 1,500, we add 4,500, we add 240, we add 5,250, we add 7,500, we add 120,000, we add 1,500, we add 120, we add 56,250, we add 2250. That gives us 323, 110. That is now total capital allowances. Now that is how we do the computation of the capital allowance under the topic of capital allowance. For today we are going to stop there, but you are going to download the assignment under the video and then kindly attempt those assignments. Thank you very much. Here is your teacher, Patrick Kamau Kamure. Thank you.
Hello everyone and welcome to the lesson. We will today answer question number 4, April 2022. The paper is Company Law. Part A reads, Roman 1, in relation to mergers and acquisitions, explain the term merger. The meaning of merger. A, Roman 1. Of the term merger. What is the meaning of the term merger? From the word merge, to merge. Merging means coming together. In acquisitions and mergers, that would mean or represent the absorption of one company by another. It is the absorption of one company by another. That is, one of the companies remains and the other ceases to exist as a separate entity. So if company A and B merge, and it's A that is merging with B, then one of these companies ceases to be, such that there is only either company A or company B. It represents the absorption of one company by another, such that one of the companies remains and the other ceases to exist as a separate entity, to exist as a separate entity. That is the meaning of the term merger. 2 marks. Then Roman 2, in a takeover situation, the acquiring company is called the predator, while the company being acquired is called a target. With reference to the above statement, discuss 4 methods which the predator might use to pay for the purchase price of the target company. Methods which the predator might use. Roman 2. Methods which the predator might use to acquire the target. Now, there are various methods that the predator might use to acquire the target. The first one is share for share exchange. Share for share exchange. Now, in this case, the predator will be given a number of shares for every share of the target acquired. Share for share exchange. The targeter will do what? Will be given a number of shares for every share of the target. That is one way. The second method or way in which the predator might use is by use of cash. Now, instead of exchanging the shares, the shareholders of the target can be given cash. The shareholders of the target receives a cash payment so that they can surrender their shares to the predator. Use of convertible securities. Use of convertible securities. The shareholders of the target surrender and then become either debenture holders or preference shareholders. So they surrender their shares in exchange for debentures in the predator's company. Use of convertible securities. Then lastly is a combination of any of the above methods. Combination of any of the above methods. There could be a combination of either the share for share exchange, part of the shares are exchanged, the remaining shareholders are given cash. That is one combination. You may have combination of share for share exchange and the use of convertible securities. You can have a combination of cash and use of convertible securities. You can have a combination of use of cash and convertible securities. You can also, those are the combinations. Combination of either or any of the above methods. So these are the methods which the predator might use to acquire the target. How many marks? 8 marks. 1, 2, 3, 4. Each one there. 2 marks total. 8 marks. 8 marks. So that is question 4, part A. Then part B of this question reads, with respect to audit of company accounts, state 4 grounds which might disqualify a person from being appointed as an auditor of a company. Grounds for disqualification. Grounds which might disqualify a person from being appointed an auditor of a company. Straightforward question. Grounds which might disqualify a person from being appointed an auditor, from being appointed as an auditor of a company. Now, the first ground is conviction. If a person is convicted in a court of law, if a person is convicted by a court of law, all right, a court of law with competent jurisdiction in Kenya or elsewhere of an offense involving fraud or dishonesty. conviction by a court of law, court of competent jurisdiction, conviction by a court of competent jurisdiction for offense of fraud or dishonesty. That can disqualify someone from being appointed as an auditor of a company. Number 2, if such a person is an declared bankrupt, such a person is declared bankrupt, what we call the undischarged bankrupt. Undischarged bankrupt. That can also disqualify a person from being appointed as an auditor of a company. The third ground is unsound mind. If a person has a mind that is not sound, if a person is insane, then such a person cannot qualify to be appointed as an auditor of a company. Insanity disqualifies one from being appointed as an auditor of a company. An employee of the company. If one is an employee of company A, then such a person does not qualify to be an auditor of such a company. If a person is an officer or an employee of the auditee, that is the audited company, then you cannot qualify to act as an auditor of such a person. A partner. If one is a partner or employee of the audited company, a partner of the audited company, or a partnership of which such a person is a partner. Okay? If such a person is what? Is a partner of the audited company, or such a person is in partnership of which he is a partner. So a partner of a company cannot also qualify to be appointed as an auditor of such a person. So candidates were to give 4 grounds. There are many grounds. Conviction by court of law, court of competent jurisdiction for offense of fraud or dishonesty, an undischarged bankrupt, and sound mind, an employee of the auditee company, a partner, an officer or employee of an associated undertaking of the audited company, and so on. So these are the grounds which might disqualify a person from being appointed as an auditor of a company. 1, 2, 3, 4. Any 4 points, 4 marks. Then the last part of this question reads, describe 3 characteristics of a debenture which creates a floating charge on the assets of a company. Characteristics. Characteristics of a floating charge. But first of all, what is a floating charge? All right, characteristics of a floating charge, characteristics of a debenture which creates a floating charge. What is a floating charge? Now, candidates, a floating charge is when a debt is secured against a group of non-constant assets. These are assets that may change in value or quantities. All right? That's the meaning of floating charge or floating lien. And candidates were expected to give characteristics of a floating charge. What are the characteristics? Number one, it is a charge on a class of, number one, it is a charge on a group or a class of assets, both present and future. It is a charge on a class of assets, both present and future. That's the first characteristics. It is a charge on a class of assets which are both present and future. These are assets that change in value and quantities over time. Then the second characteristic is that the class of assets is one in which the ordinary course of business of the company would be changing from time to time. The value of these assets is their nature to change, floating, to change over time, from time to time. The class of assets is of one in which the ordinary course of its business of the company would be changing from time to time. Then the third characteristic of a floating charge is that it is contemplated that until the charge attaches to assets by crystallization, the company may dispose of or deal with the assets in the ordinary course of business. The company may dispose of or deal with the assets in the course of its business, or deal with the assets, The company may, one, dispose these assets in the course of its business, or it can deal with the assets in the course of its business. These are three characteristics of a floating charge. 1, 2, 3, 6 marks. Yes, 6 marks. So 6 plus 4 marks plus 8 marks plus 2 marks is equal to 20 marks. That is what was required of the candidates who sat in this paper as far as question 4 is concerned. Thank you for attending this session. In our next session, we are going to answer question number 5. Make sure you attempt the question before attending our next session. God bless you. Bye-bye. Welcome back. Let us now turn to question 5. The subject is meetings, compliance and administration. We are answering the questions that were tested in December 2022. Question 5A reads, the rules of a securities exchange shall, where applicable, support the self-regulatory functions of the securities exchange. With reference to this statement, highlight 4 objectives of the rules of the securities exchange in relation to self-regulation. Objectives of the rules of the securities exchange in relation to self-regulation. Now, one objective is known as investor protection. The second objective is market integrity. Number 3, market efficiency. Then number 4, compliance and enforcement. Those are 4 objectives of the rules of a securities exchange in relation to self-regulatory function. Let us put the points down. Question 5, let me answer it from this point. Question 5A. Objectives of the rules of the Securities Exchange in relation to self-regulation function: investor protection, how is investor protection an objective? Now, candidates, the rules aims to protect investors by setting standards for fair and transparent trading practices, ensuring adequate disclosure of information, and preventing market manipulation, or what we call insider trading. And that helps maintain market integrity and instills confidence in the securities market. 2 is the objective known as market integrity. Market integrity. The rules establish guidelines for maintaining what we call market integrity by setting standards for listing requirements, by setting standards for trading, what we call trading mechanisms, and also conduct of market participants. The rules aim to prevent fraud, manipulation, and unfair practices that could undermine the integrity of the securities exchange. 3, market efficiency. Market efficiency. The rules, candidates, promote market efficiency by facilitating fair and efficient price discovery, ensuring prompt and accurate dissemination of information, and also providing a level playing field for all the market participants. And that helps in efficient allocation of capital and liquidity in the market. 4, compliance and enforcement. Compliance and enforcement. The rules provide a framework for compliance and enforcement mechanisms. The rules provide procedures for monitoring and also enforcing compliance with regulatory requirements, investigating potential violations, and imposing penalties or sanctions for non-compliance. And that helps maintain discipline and accountability among the market participants. Compliance and enforcement. So these are 4 objectives of the rules of the Securities Exchange. 1, investor protection. 2, market integrity. 3, market efficiency. 4, compliance and enforcement. 4 objectives, 4 marks. 4 objectives, 4 marks. Part B, discuss 4 principles that govern the conduct of a certified secretary. Principles that govern the conduct of a certified secretary. The first principle is professional competence. Professional competence. Professional competence. And due diligence. professional competence, and due diligence. That is the first principle that governs the conduct of a certified secretary. A certified secretary is required or is expected to possess the necessary knowledge, skills, and expertise to perform their duties competently. They should continually update their professional knowledge and maintain high standards of professionalism while discharging their duties. Professional competence. Skills, they must be competent. They must be competent. Number 2, integrity and ethics. Integrity and ethics. Certified secretaries are required to uphold high ethical standards. They are required to act with integrity in their professional conduct. Certified secretaries should also demonstrate honesty and fairness. They are expected to demonstrate confidentiality in their dealings and avoid conflicts of interest. Integrity and ethics. Independence and objectivity. Independence and objectivity. Certified secretaries should maintain independence and objectivity in their decision making and advice. They should exercise professional judgment based on the merits of the situation and avoid any bias or undue influence. When carrying out your duties as a certified secretary, make sure that you have an independent mind. Make sure that you are objective. Make sure that you are impartial. Make sure that you are not unduly influenced to make decisions that are not good. Independence and objectivity. Another principle is confidentiality. Confidentiality. Now, certified secretaries are entrusted with confidential information related to the client's organization. We saw in an earlier question that some of the roles of the certified secretary, particularly who advises the board, is to maintain board records, to communicate between the board, we said is a link between the board and the management, is a link between the board and the shareholders. So by virtue of the office of the certified secretary, such a person is entrusted with confidential information related to the client's business, and they have a duty to maintain the confidentiality of such information, except where disclosure is required by law or authorized by the client or organization. So this is a key principle that governs the conduct of a certified secretary. Candidates who are to give 4, I can give 5 because it's an important question. Professional development. Professional development. Professional development. Certified secretaries should engage in continuous professional development to enhance their knowledge and skill. They should stay updated. They should stay updated with changes in laws, regulations, and best practices in corporate governance and company secretarial practices. professional development. We can go on and mention principles like accountability, where a certified secretary should take responsibility for professional actions and be accountable for the quality of their work. They should be transparent in their dealings and provide accurate and timely information to the relevant stakeholders. So these are some of the principles that govern the conduct of a certified secretary: professional competence and due diligence, integrity and ethics, independence and objectivity, confidentiality, and lastly, professional development. Any four would earn 8 marks. 4 points, 8 marks. Then part 5, C, examine 4 demerits of paper share certificates. 4 demerits of paper share certificates. Demerits of paper share certificates. Now, paper share certificates are physical share certificates, and in an earlier question, in another sitting, we answered the question to do with the dematerialization of shares, which we saw is the process of converting the paper share certificates into a digital format. And we identified the advantages of dematerialization of shares. In this question, we are to give the demerits of paper share certificates. So, the first obvious disadvantage of holding physical share certificates is risk of loss or theft. Risk of loss or theft. All right? Paper share certificates can be lost, they can be stolen, they can be damaged, leading to potential loss of ownership or difficulties in proving ownership. And that can result in inconvenience, additional administration burden, and potential disputes. The second disadvantage of holding paper share certificates is inefficiency and delays. Inefficiency and delays. Paper share certificates involve manual processes for transfer. They involve manual processes for registration, which can be time consuming and prone to errors, and that can result in delays in transferring ownership or even updating records, affecting the liquidity and efficiency of the securities market. There is also the disadvantage with storage or even security. Storage and security. Storage and security costs. Paper share certificates require proper storage and security measures to protect them from loss, damage, or even unauthorized access. And that adds to the administrative or operational costs for issuers, for shareholders, and even intermediaries involved in the share certificate management process. Inconvenience in trading. Inconvenience in trading. Paper share certificates can be cumbersome to trade in the secondary market because the physical transfer of certificates and the associated paperwork may require additional administrative procedures and verification, which can slow down the trading process and reduce market liquidity. So overall, candidates, the demerits of paper share certificates have led to the adoption of electronic, or what we call dematerialized share trading systems in many jurisdictions, offering more efficiency, security, and convenience in trading and management of securities. So these are 4 disadvantages of physical share certificates. 1, there is risk of loss or theft, inefficiency and delays, storage and security costs, and inconvenience in trading. These are 8 marks, 4 points, 8 marks. So that effectively brings the revision of December 2022 to a close. The subject is meetings, compliance, and administration. We've done the whole sitting, a question at a time. Candidates, we are dedicated to providing all solutions to the past paper questions that are examined by Kenya Accountants Secretaries National Examination Board. Thank you for attending the lesson. God bless you. Bye-bye. Greetings and welcome to the lesson. We are going to answer question number 5, April 2022 Boardroom Dynamics. Question 5A, I read, technology consistently brings us many innovative tools and offers extended functionality, including the ability to attend virtual board meetings. With reference to the above statement, analyze 5 benefits and 5 challenges of virtual board meetings. So this is 2 questions in one, benefits and challenges. Benefits and challenges. So we begin by analyzing the benefits of virtual meetings. Benefits of virtual meetings. What are virtual meetings, first of all? Virtual meetings are meetings of a governing body. All right? Because these are benefits of virtual board meetings. Benefits of virtual board meetings. What are virtual board meetings? What are virtual board meetings? Virtual board meetings are meetings of a governing body, such as a board of directors, that take place in a digital or online environment instead of the traditional in-person setting. Is a board meeting that takes place on a digital platform in a digital environment. So what are the benefits of having a board virtual meeting? One benefit is accessibility and convenience. Accessibility and convenience. Virtual board meetings enable directors from different locations to do what? To participate without the need to travel. That is convenience. This convenience allows for more frequent and timely meetings. It's convenient to have virtual meeting than the physical meeting. So accessibility and convenience is one of the main benefits of virtual board meetings. 2, cost savings. Cost savings. By eliminating travel expenses, virtual board meetings can significantly reduce the overall cost of board operations, making efficient use of resources. 3, flexibility and scheduling. Flexibility and scheduling. Virtual board meetings offer greater flexibility in scheduling, accommodating the availability of board members across different time zones and across different busy schedules. Flexibility in scheduling. The 4th benefit of virtual board meeting is improved efficiency. Improved efficiency. Board virtual meetings improves efficiency. Virtual board meetings can be structured to focus on essential agenda items, promoting a more concise and efficient discussions. 5, enhanced security and confidentiality. Enhanced security and confidentiality. Now, candidates, modern virtual meeting programs come with robust security features, ensuring that sensitive board discussions and materials are protected. That is one advantage of virtual board meetings. Then let's look at the challenges. Challenges of virtual board meetings. What are the challenges of having virtual board meetings, meetings that are held online? The first obvious challenge is technical issues. I know some of you may have had some online meetings, virtual meetings, and you must have experienced technical issues when attending virtual meetings. There could be what we call technical glitches, such as internet connectivity problems or even software malfunctioning, which can disrupt the flow of a meeting and hinder effective communication. Technical issues. Number 2, limited nonverbal cues. Limited nonverbal cues. Virtual meetings may lack the richness of nonverbal cues present in face-to-face interactions, making it harder to gauge participants' reactions and engagement. It's not easy to have to communicate non-verbally because of the limitation of having the meetings online. There are also cyber security risks. Cyber security risks. This is also a challenge. Virtual board meetings may be susceptible to cyber attacks, would compromise confidential information and board deliberations. 4, engagement and attention. How is engagement and attention a problem? Maintaining the engagement and attention of all board members during virtual meetings can be challenging because of disruptions in remote settings, which may lead to reduced focus, attention. paying attention when holding virtual board meetings can be a challenge. 5, inclusive participation. Inclusive participation. How is it a challenge? Now, ensuring equal participation, ensuring equal engagement from all board members can be more difficult in virtual meetings, especially if certain individuals are less comfortable with technology or less assertive in remote settings. So these are 5 challenges. 1, technical issues. 2, limited verbal cues. 3, cybersecurity risks. Number 4, lack of attention. Number 6, it's not easy to have inclusive participation. 5 marks. We had discussed the benefits earlier. One benefit of virtual board meetings is accessibility and convenience, cost savings, flexibility and in scheduling, it leads to improved efficiency and enhanced security and confidentiality. 5 marks. That is part A. Part B of question 5, summarize 5 best practices for virtual board meetings. 5 best practices for virtual board meetings. B. These are 5 virtual board meetings practices. 5 practices for virtual board meetings. What are the best practices for virtual board meetings? The first best practice is reliable technology. Reliable technology. Reliable technology. Reliable technology. It's important for the board to invest in a secure and reliable virtual meeting platform with features such as screen sharing, voting tools, participant controls, in order to ensure smooth and efficient meetings. Number 2, pre-meeting preparation. Pre-meeting preparation. The board should distribute meeting materials well in advance, including the agenda, the reports, and any relevant documents, to give board members adequate time to review and prepare for discussions. That is a good best practice, pre-meeting preparation. 3, clear communication guidelines. Clear communication guidelines. The management should establish clear communication protocols for virtual meetings, such as raising of hands to speak. That is a communication protocol. Or using the chat functions for questions, and even muting microphones when not speaking. That is one of the best practices for virtual board meetings. Number 4, facilitated discussions. Facilitated discussions. The board may consider appointing a skilled meeting facilitator or a chairperson to guide discussions, to keep the meeting on track, and ensure that all participants have an equal opportunity to contribute. So that is a good best practice. There ought to be a trained facilitator who can guide the board members in holding virtual board meetings. Then the last best practice is in relation to cyber security measures. Cyber security measures. The board should implement a robust cyber security measures in order to protect sensitive board information, such as using secure login credentials, as well as encryption of data transmission, and so on. So candidates, these are best practices, and by following these best practices, organizations can ensure that their virtual board meetings are efficient, secure, productive, and they lead to effective governance and decision making. So these are 5 best practices. 1, reliable technology. 2, pre-meeting preparation. 3, clear communication guidelines. Number 4, facilitated discussions. Then lastly, cyber security. 5 best practices, 5 marks. And candidate, this question has been tested many times. We've answered it here several times. So you can see why I always tell you the boardroom dynamics paper is a very interesting paper. It's an easy paper because the subject just revolves around matters to do with what happens in the boardroom, the dynamics in the boardroom. It restricted. The topics in this subject are restricted to the nature of restriction, the nature of interactions, and also the relationships and behaviors of board members in the boardroom, what we are referring to as boardroom dynamics. So we've come to the end of the revision of the April 2022 paper. We began by answering the case study in question 1, which carries 40 marks. Then we'll answer question 2 to up to question 5, which carry 15 marks each. And thank you for attending the lesson. We remain faithful to providing solutions for all the problems in the Certified Secretaries course. We've answered all questions, and you can have the questions on our website. Log into the website and you can subscribe. If you have any questions, you can send your questions. The good thing with our video lectures is that the videos can be downloaded for offline use. You don't need to have internet throughout in order to watch the videos. No, you can download all the videos and study offline. If you have any challenges downloading, we can help you to download. You can reach out to us through the official lines on the website. Thank you. God bless you. Bye-bye. Hello and welcome to the revision session. The subject is leadership and management. Today, I'm going to start revising the paper that was done in April 2022. Instructions: answer question 1 and any other 4 questions. Marks allocated to each question are shown at the end of the question. Do not write anything on the paper. Which paper? The question paper. Candidates were not allowed to write on the question paper. Time allowed, 3 hours. So answer question 1 and any other 4 questions. As usual, I'll remind you that when appearing in leadership and management paper, as much as the examiner has instructed that you must answer question number 1 and any other 4 questions, it's advisable that you do not begin answering the first question because it takes a bit of time to analyze the case study. The first question is a case study. It takes a bit of time to analyze the case study, to understand the case study, then to answer the questions. It's advisable in the exam room to first consider the other 4 questions. Look at the other 4 questions, identify questions that you can score marks easily and in the shortest time possible. So you do the 4 questions from question 2 to question 7. There are 7 questions. You are required to choose any 4 questions from the other remaining questions. But since I'm not in an exam room, I'll start by answering the case study, which is titled Bev Modi. Paragraph 1 reads, Bev Modi was an entrepreneur who turned into an intrapreneur due to demands of the environment he worked in. Modi was instrumental in formation of Esley Limited, abbreviated as EL, a company that was established to manufacture and sell computing devices. EL built personal computing kits, among other computing devices, which were initially hand-built by Wizi Kiwanuka. As one of the founders of EL, Bev Modi stewarded the company as the chief executive officer from 1976 to 1980 before he was fired by the board. He returned to EL five years later in the same capacity. He returned to EL 5 years later in the same capacity. Paragraph 2. By the time of his death in the year 2015, Modi had transformed EL, a company that was in a very weak financial position, into the most profitable technology company in the region. Modi practiced pace-setting style of leadership, and many are the times he would be heard telling his employees to keep up. He rewarded his top 20% performers highly, while at the same time let go of the bottom 10% of the employees. This created a high-intensity environment in the organization. Modi was a proponent of getting involved in the job of employees who were capable and competent. Paragraph 3. Unlike founders of most technology companies, Modi had neither engineering experience nor business training. After all, he dropped out of college after only 1 semester. During his first stint as the CEO of EL, Modi was just a figurehead. He was a CEO without real power, since the company was run by other executives and investors. The lesson he learned after watching his replacement run down EL was to trust his own beliefs and values and completely disregard the conventional views on how to run a company, including the traditional duties of a CEO. Number 4, paragraph 4. Modi delegated a lot of his duties to members of his executive team, most notably his second-in-command and eventual successor, Paul Rope. This enabled him to focus on what he was best at: creating products, recruiting of new staff, and marketing. In one of the many interviews with the media, Modi commented that he spent most of his time on forward-looking issues while his top executives assisted him with non-strategic assignments. In addition to being a strategist, Modi was effective as a transformational leader. Next paragraph. Modi had a hands-on approach to product design, which was arguably the favorite part of his job. He often went to the industrial design lab to spend time with the design team and would give his opinion and guidance on their prototypes. Product review sessions took up most of his workday. He tested new products and gave imperative feedback to the development team. Next paragraph. During his second tenure as the CEO of EL, the company experienced transformational change due to the implementation of guiding principles for change in the organization, as well as breakthrough in new technologies. Modi was a leading change management proponent, and he significantly contributed to EL's alteration of business model, philosophy, and business approach. As a transformational change agent, Modi introduced an executive development program where prospective executives of EL were trained on interpreting their surroundings and reacting where their power or safety was challenged. At EL, it was generally agreed that what differentiates leaders is not so much their philosophy of leadership, their personality, or their style of management, rather their internal action logic, that is, how leaders interpret their surroundings and react when their power or safety is challenged. Required. A Roman 1. Bev Modi turned from entrepreneur to an intrapreneur. In the context of the case, explain the term intrapreneur. 1 mark. 1 easy mark. This and that mark first. Okay. Leadership and management, April 2022, question 1, A, Roman 1. What's the question? Meaning of intrapreneur. What is the meaning of the term intra? This is intrapreneur. Meaning of the term intrapreneur. An entrepreneur is a creator or an inventor within an organization. Is a creator or an innovator or an inventor within an organization. Intrapreneur is an employee or a manager within a company. Intra. These are individuals who have the responsibility for creating innovation of any kind within the organization. It is that kind of explanation that can earn you the 1 mark. An entrepreneur is a creator or an inventor within an organization. Roman 2. Before starting the business, Bev Modi and other founders had to generate a business idea which resulted to manufacturing and selling of computing devices. Examine 6 methods the founders might have used to generate the above business idea. Business idea. Roman 2. What's the question again? Methods the founders might have used to generate business idea. Methods used to generate business idea. It was an open question. What are the methods? Because we read that before starting the business, Bev Modi and other founders. That means this is a group of people who came together to generate the idea that resulted into manufacturing and selling of computing devices. Now, where there is a group of people, what are the methods or techniques or tools that they can use in order to come up or to generate business ideas? So these are methods or techniques that could be beneficial to teams or groups to generate new designs or make progress on projects. Candidates were asked to identify the methods that can help promote creative thought in a simple and easy to understand format. The question is all about idea generation techniques. And these are techniques that can be employed within a group, not just an individual, but where we have a group of people who would want to come up with a business idea. What are some of the tools that they can use? And the first one that comes to mind, my mind and perhaps your mind, is brainstorming. Brainstorming is a common technique that is used by groups to generate ideas. It is a group problem-solving method that involves the spontaneous contribution of creative ideas and solutions. It's a technique that requires intensive, freewheeling discussion in which every member of the group is encouraged to think aloud and suggest as many ideas as possible based on their diverse knowledge. So members are allowed to think aloud, to say whatever comes to your mind, regardless of whether it's making sense or not. And the ideas that comes from the mind are not to be criticized. Every idea, every comment, every suggestion is put down on paper. Spontaneous contribution of creative ideas and solutions. It is a group problem-solving technique. That is one method that these individuals may have used. There is also another technique known as reverse brainstorming. Now, what's the difference between brainstorming and reverse brainstorming? Now, while the process of brainstorming is the generation of ideas to identify problem-solving methods, reverse brainstorming, on the other hand, starts with thinking about the causes of a problem. It focuses on causes of a problem other than focusing on solution of a problem. Brainstorming most of the time focuses on how to come up with a solution, how to come up with an idea. This one, on the other hand, may be used to, is a method that now focuses on causes of a problem, focusing on causes of a problem. And by finding potential causes, you can then work proactively to resolve or to prevent the cause of the problem. And this is one of the common tools that is used by groups to improve products, to improve services. And it could have been a method that this company used in coming up with an idea of manufacturing and selling computing services. The third method, brain writing. Now, under this method, individuals sit together in a group and a topic is written on, say, a piece of paper, a topic. Then it is the paper is passed around the group so that everyone has a turn to write on it and contribute the ideas to the central topic or question, so that what has been written on paper can inspire the ideas of another, or someone may choose to improve upon an existing idea. It's a method or technique that is very effective in a group setting, and it could have been one of the methods that this group used in generation of the idea to manufacture and sell computing services. Brain netting. Brain netting. Now, brain netting, on the other hand, involves the use of cloud-based documents. Cloud-based documents. Documents that are stored in the cloud. They could be documents, they could be programs for groups to share and collaborate. And it can be quite interactive with the addition of links, with the addition of videos, with the addition of images, to provide the visual representations and context. And members can use an online program which works where people are which may be effective where people are working remotely. All right? So it's not a must that people have physically meet. No, people can generate ideas remotely by using a program, an online program to do brain netting. Do you understand? Forced relationships is yet another technique that can be used within a group setting to generate ideas. Now, the forced relationships this method introduces two random or seemingly unrelated items, random and unrelated items, and then forces the members of the group to create a connection between them. All right? The members of the group are forced to come up with connection between the two unrelated items. And that, by doing that, members are encouraged to think innovatively in order to build those relationships and possibly develop a new product. So that can be done within a group setting. Forced relationship or relationships. So there are many methods, candidates. The other one that comes to mind is role storming. Role storming. Role storming is just brainstorming, but with the added element of role playing. Now, to bring out new perspectives and different ideas, participants could imagine that they're in different role in relation to the brainstorming goal. So you can imagine that, say, you are the CEO, you play the role of a CEO. You can imagine you are playing the role of a customer, or you can imagine the role of a creditor. Okay, those are roles. The participants, the group members, imagine different roles. There are those that could pretend they are a client or a manager assessing the same goal and task themselves. Okay? So they play different roles. You pretend that you are a client. You pretend that you are a manager. And you ask yourself what improvements to implement. So just brainstorming, but you use a lot of imagination. You put yourself in the shoes of any different party, then you come up with ideas in there. So this company, these leaders, these founders could have assembled together. Then they adopt, for example, one could adopt the role of a customer and suggest ways in which he or she would want a product, the quality of a product to be. Then based on that, then the company can have an idea on how to improve services or products. Role storming. There is a common one you studied before, which is SWOT. SWOT analysis is another technique that can be used in a group setting. Now, SWOT is an acronym for strengths, weaknesses, opportunities, and threats. SWOT analysis is an acronym for strengths, weaknesses, opportunities, and threats. And you can use this method individually. You can use it as a team to assess the worth of proposed projects. You can also ask, what strengths do we have? What are our weaknesses? What are the threats of a particular project that can help decide if the company can proceed or not? So these members could also have conducted SWOT analysis. We have other techniques like gap filling, etc. So there are many methods, and as I say, this was an open question. There are candidates who could give answers like internet, okay, research, carry out research. You can get ideas from conducting interviews with the clients or customers. You can have questionnaires. So depending on how you support your answer, it was an open question. There are still methods that can be used to generate business ideas. But it's important to be careful on that one, because the question tested the methods to be used to generate business ideas. That was in relation to a group. So when you say carrying out, say, interviewing clients, you see that one, you need to demonstrate how the group now could interview clients to get business ideas. When you say research, you need also to demonstrate in your answer how researching on internet can help, how a group can research on the internet. So, but these are techniques that are very commonly used by groups in generation of ideas. Candidates were to give 6. These are 1, 2, 3, 4, 5, 6, 7, 8. Any 6 points from these 8 points would earn you the 6 marks. Part B. In his second tenure as the CEO of EL, Bev Modi used the pace-setting leadership style to steer EL towards achieving its goals. B1, Roman 1, explain the term pace-setting leadership style. B1, pace-setting leadership style. Now, even if you had not studied this one before your exam, you can use your knowledge in English to rightly guess the meaning of PACE leadership style. Setting the pace, PACE leadership, PACE leadership, PACE setting leadership, PACE setting leadership. What happens when a leader adopts this kind of style? Now here, the leader sets standards that are extremely high. The leader sets extremely high performance standards. Okay? Setting the pace. Then it does not stop at setting high standards. The leader goes ahead to exemplify the standards himself. Pace setting. If you have watched athletes, marathon athletes, you see are those who set the pace. Those set the pace are not necessarily those who complete the marathon. They are the pace setter. They set the pace. They set the tempo. Extremely high tempo. So in management, a leader who adopts the pace setting leadership style sets extremely high performance standards. The leader sets extremely high performance standards and exemplifies them. This is a leader who is obsessive about doing things better, doing things faster, and he asks this same of everyone around him. Is a leader who quickly pinpoints poor performance, is a leader who demands more from them. And he either gives no feedback on how people are doing or jumps in to take over. He jumps in to take over when he thinks they are lagging. Okay? And we can cite what I'm describing from this case. We read in paragraph 2 that Modi practiced a pace-setting style of leadership, and many are the times he could be heard telling his employees to keep up. That's what I've been saying. To keep up. He rewarded his top 20% performance, all right? 20% performance highly, while at the same time let go of the bottom 10% of the employees. And that created a high intensity environment in the organization. We read, he was a proponent of getting involved in the job of employees who were capable and competent. So that's the meaning of pace-setting leadership style. How many marks? 2 marks. These are 2 marks. Then, as I said, candidates, if you have not studied this, even the case gives you a hint of the meaning of pace-setting style. We read in that paragraph that, let me help you out, that Modi practiced pace-setting style of leadership, and many other things he could, and many other times he could be heard telling his employees to keep up. To keep up. He rewarded his top. From this information, you can define pace-setting style of leadership by identifying the features. If you don't have the dictionary meaning of pace-setting style of leadership, then you can cite the characteristics or attributes of a pace-setting leader. And you can see here is performers. He's a leader who rewards top performers. When you say that, you may earn the marks. Or you can even use the same words in the question that he's a leader who encourages his employees to keep up, to step up. That's what we read from the question. And that's what the same words we've used to define pay setting. The leader who sets extremely high performance standards and exemplifies them himself. Meaning he does not just set standards, he also himself works towards achieving the standards. He's obsessive about doing things better, faster, and he asks everyone to do things better, to do things faster. Then there's part 2 of this question. I read, describe 3 prerequisites that had to have been put in place at EL for the pay setting leadership style to work. Prerequisites. All right. Prerequisites. This is Roman 2. Prerequisites for pay setting style of leadership to work. What are the conditions that ought to prevail before this style is put into operation? 1 is that the staff, before you introduce this style, then you need to ensure that your staff or the staff are highly motivated. Because if the staff or workers are not highly motivated, then how do you expect them to achieve extreme high performance standards? They have to be motivated. The staff have to be competent. They ought to be competent, motivated, all right, in order for them to perform the jobs. The staff should also be able to, they should not be the kind of employees who need close supervision. They should be employees who need little or no supervision. Need little or no supervision or direction or coordination. And it's only employees that are competent, employees that are competent are those that know their work, they know their job. And if they know their job, then they can work with little or no supervision or coordination. So if the company does not have such employees who do not need direction or do not need coordination, then it's not possible to set high standards that should be achieved better and faster. That's a prerequisite for pay setting. Then another prerequisite is that the employees should be completely self-motivated. They should be what? Completely self-motivated, and they should be employees that understand their objectives. So these are the prerequisites for pay setting leadership. Competent staff. Staff that do not need coordination or direction. Completely motivated, self-motivated staff. And therefore, candidates, pay setting does exactly that. That it gets work done on time or even ahead of schedule. Because we said earlier that the leader is obsessed about getting things done better and faster. You can only get things done better and faster if you have, first of all, in place highly competent and motivated staff, staff that do not need coordination and direction, and staff that are completely self-motivated. 3 marks. You've done B Roman 2. Part C reads, using 5 of Mintzberg management roles, discuss how the managers of EL could improve their performance. Greetings to you all and welcome to the lesson. We are going to begin revising the meetings, compliance and administration past paper that was done on Wednesday, 3rd August 2022. We'll first answer question number 1. Part A reads, explain the term public place in regard to public order legislation. Explain the term public place in regard to public order legislation. Explain the term public place in regard to public order legislation, 2 marks. Now, candidates, in the context of public order legislation, the term public place refers to any location that is accessible to the general public regardless of ownership or control. So it is any location that is accessible to the general public. A public place is a place or location. It refers to any location that is accessible to the general public, regardless of ownership or control. And it typically includes areas such as streets, parks, sidewalks, public buildings, and any other spaces where individuals have reasonable expectation of access and use. And such places are subject to regulations and restrictions aimed at maintaining order, aimed at maintaining safety and public welfare. So that is a public place. It's not like in my compound where the general public have no reasonable access. Private homes are not public places because such places are not accessible to the general public. But places such as streets, parks, public buildings, in such places, individuals expect to have access. They expect to have use. Individuals expect to have use on sidewalks, on public roads. So public places, as I've said again, are subject to regulations. Such places are subject to restrictions that are aimed at maintaining order, because you cannot do anything you want on a sidewalk because it is a public place. You may be accused of obstruction. So there are certain restrictions to safeguard this, to bring about safety and public order. So a public place is a location that is accessible to the general public. That is the answer. 2 marks. Part B reads, describe the 3 contents of a notice for a public meeting used by a regulating officer or the police. Contents of a notice for public meeting. Contents of a notice. Contents of a notice for a public meeting issued by a regulating officer or the police. The contents we are talking about here, the question is referring to contents of a notice. Now, this one seems to be an easy question because candidates should expect a notice to have a date. If it is a notice for a meeting, then we expect a notice to have the time the meeting will be held. You may also expect a notice for a meeting to have a venue. So the notice should clearly state the date, the time, and specific venue where the public meeting will take place, because that ensures that participants have the necessary information to attend the meeting. Date, time, venue. That is one content. Date, time, venue. Date, time, venue. Number one, date, time, venue. These are three contents in one. Date, time, venue. Three contents in number one. Then there ought to be the purpose and agenda. Purpose of the meeting and the agenda. The purpose of the meeting and the agenda. The notice should outline the purpose of the meeting and provide an agenda listing the topics or issues to be discussed, because that helps attendees understand the focus of the meeting. It also helps the attendees to prepare accordingly. Purpose and agenda. 3, rules and regulations. Rules and regulations is yet another content of a notice for public meeting. Rules and regulations. The notice may include any rules or guidelines or regulations related to behavior, right? That is related to behavior on how the attendees are expected to carry out themselves. So the notice, I'm saying, may include any rules, may include any guidelines or regulations, or sometimes restrictions that attendees must follow during the meeting, and that includes regulations related to the behavior, the use of amplification equipment, or any other specific requirement to maintain order and safety during the meeting. So these are 3 contents of a notice for public meeting. Date, time, venue, purpose and agenda, rules and regulations. These are 3 marks. Part B. Then part C, discuss 5 reasons why organizations might prefer to employ an in-house corporate secretary and not outsource. Reasons why organizations might prefer to employ an in-house corporate secretary and not to outsource. Now, candidates, there are several reasons why an organization might prefer to employ an in-house corporate secretary instead of outsourcing that role. One reason is company specific knowledge. Company specific knowledge. Company specific knowledge. What does that mean? An in-house corporate secretary develops an in-depth understanding of the organization's operations, culture, and even the governance structure. And such knowledge allows them to provide tailored support and guidance to the company, to the management, and also the board of directors, as opposed to outsourcing. When you outsource a corporate secretary, such outsourced corporate secretary may not understand the company specific knowledge, may not understand the culture of the company, may not understand the operations of the company. But if you have an in-house corporate secretary, such an in-house corporate secretary will over time develop knowledge, and also understanding of the organization's operations, culture, and even the governance structure. So that is one reason why organizations might prefer to employ an in-house corporate secretary as opposed to outsourcing one. Number two, accessibility and availability. Having an in-house corporate secretary ensures ready access to the expertise and support. They are readily available for day-to-day operations. They are ready for day-to-day interactions, board meetings, and other important events, providing timely advice and assistance. An in-house corporate secretary is always available and accessible. That is an advantage. Confidentiality and trust. Confidentiality and trust. An in-house corporate secretary becomes familiar with sensitive company information such as legal matters, board discussions, and strategic plans. So building a long-term relationship of trust and confidentiality is crucial for maintaining the integrity and the privacy of confidential information. The integrity and also privacy of such confidential information. For alignment with company culture. Alignment with what? With the company culture. Now, candidates, an in-house corporate secretary can align their work practices and communication style with the organization's culture. They become more attuned to the company's values, goals, and even expectations, thereby facilitating effective collaboration and understanding among the stakeholders. Alignment with company culture. 5, proactive risk management. Proactive risk management. An in-house corporate secretary can actively identify and mitigate governance and compliance risks within the organization because they can monitor regulatory changes, they can implement best practices, they can ensure proper documentation and also reporting, thereby reducing the organization's exposure to potential for legal or reputational matters or issues. So a in-house corporate secretary can be proactive when it comes to risk management. So these are 5 reasons why organizations might prefer to employ an in-house corporate secretary as opposed to outsourcing one. One is company-specific knowledge. Number 2, accessibility and availability. Number 3, confidentiality and trust. Number 4, alignment with company culture. Then lastly, proactive risk management. So these are 5 reasons. 10 marks. 5 reasons, 10 marks. The last part of this question reads, analyze 5 characteristics of a good resolution in a meeting. 5 characteristics. Characteristics of a good resolution in a meeting. A good resolution must be clear. Number 1, clarity. Clarity. A good resolution should be clear and unambiguous, leaving no room for misinterpretation. It should clearly state the decision or action to be taken by the organization. Clarity. A good resolution is one that is clear, leaving no room for misinterpretation. 2, specificity. Specificity, from the word specific. The resolution should be specific and focused, addressing a precise issue or matter at hand. It should provide sufficient details to guide implementation of the decision. Specificity. Alignment with objectives. Alignment with objectives. A good resolution is the one that can be aligned with the organization's objectives, strategic direction, and legal requirements. It should support the overall mission and vision of the organization. Alignment with objectives. 4, feasibility. Feasibility. A good resolution should be practical and achievable within the organization's resources and capabilities. It should take into account any limitations or constraints that may impact its implementation. Feasibility. Is it a practical resolution? Is it a resolution that is achievable? So a good resolution is one that is practical, one that is achievable, one that is feasible. 5, consensus. Consensus or majority support. Consensus or majority support. Consensus or majority support. Resolutions candidates are typically passed through consensus or majority vote. So a good resolution reflects the collective decision or will of the participants, ensuring that it has broad support among the members or stakeholders who are involved. So these are characteristics of a good resolution. And all in all, candidates, a good resolution collectively captures the decisions made during the meeting and also provides clear guidance for action and promotes alignment and unity among the organization stakeholders. So these are 5 characteristics. It must be clear, specific, aligned with objectives, practical, majority support. These are 5 points, 5 marks. So we've answered question 1 from the August 2022 sitting. The meeting, the subject is meeting, compliance and administration. Thank you for attending the lesson. In our next session, we are going to answer the second question. Bye-bye. Hello everyone and welcome back to the lesson. We will continue with the revision of the December 2021 paper. The subject is leadership and management. Today I'm going to answer the last question, number 7. Part A says, explain 5 features of bureaucracy as advanced by Max Weber. 5 marks. Part B, assess 5 stages of the project life cycle model. 10 marks. Part A, December 2021, question 7A, features of bureaucracy as advanced by Max Weber. Features of bureaucracy as advanced by Max Weber. Now, the first feature is in relation to hierarchy. In a bureaucracy, there is a well-defined hierarchy. 1, well-defined hierarchy. There is a well-defined hierarchy in a bureaucracy. That means all positions within a bureaucracy are structured in a way that permits the higher positions to supervise the lower positions, to supervise and to control the lower positions. Then that is gives a clear chain of command, which facilitates control and order throughout the organization. Division of labor. Division of labor is another feature of a bureaucracy. Division of labor as well as specialization of labor. All responsibilities in an organization are specialized so that each employee has the necessary expertise to do a particular job. Defined division of labor and specialization. That you'll find in any bureaucracy. Bureaucracy is also characterized by 3 rules and regulations. A bureaucracy is characterized by rules and regulations. There are standard, in a bureaucracy, you'll find standard operating procedures. The SOPs, standard operating procedures that govern all organizational activities to provide certainty and facilitate coordination. The reason for having the rules and regulations that govern all the activities in a bureaucracy is to ensure that there is certainty, there is predictability in the affairs of a bureaucracy. 4, impersonal relationships. Impersonal relationships. There are, in a bureaucracy, you will find impersonal relationships between managers and employees. Impersonal relationships between the managers and the employees. In a bureaucracy, managers maintain an impersonal relationship with the employee so that favoritism and personal prejudice do not interfere with the decisions. There can be no favoritism because the managers are impartial. The managers do not favor certain employees. That is a feature of a bureaucracy, impersonal relationships. You also will find in a bureaucracy what we call competence. Competence, and not who you know, is a basis for all decisions made in hiring, made in job assignments, made in promotions, and so on. And that fosters stability. It fosters the ability, it fosters the merit as a primary characteristic of bureaucratic organizations. When it comes to hiring in a bureaucracy, the employees that are hired are employees that are fit for the job. You have to be fit, you have to be competent enough to secure a job in a bureaucracy. Do you understand? Competence, the ability to do a certain job. Employees will be promoted based on merit, based on their competence. There's no any other procedure. Competence. Then we need to mention the characteristic on records. A bureaucracy needs to maintain complete files regarding all its activities. So these are some of the features of a bureaucracy as advanced by Max Weber. 5 features. 1, well-defined hierarchy. 2, division of labor and specialization. 3, rules and regulations. 4, impersonal relationship between managers and employees. 5, competence. 6, records. Any 5 points here will earn you the 5 marks. That is part A. Part B reads, assess 5 stages of the project life cycle model. Stages B. Stages of a project life cycle. The first stage is project initiation. Project initiation. Initiation means to begin, to commence, to start. Project initiation is the first stage or phase in the project life cycle model. And the goal of project initiation is broadly to define the project. The phase usually begins with a business case, or what we call a project charter. And if research or feasibility testing is necessary, one should complete it during project initiation. The second phase is project planning. Project planning. Now, the planning phase is key to successful project management, and it focuses on developing a roadmap for the team to follow. And therefore, during project planning, Project managers should organize their teams. They should set up collaborative resources. They should set up goals. At this point, the scope of the project is also defined, and the project management plan is developed. It involves identifying the cost, the quantity, the available resources, and a realistic timetable. So project plans, we can also say, includes the cost, includes the cost of the budget. It may also include what we call the baselines. The baselines are established as well as the performance measures. And they are generated using the scope, the schedule, the cost of the project, and so on. Those are baselines. So a baseline is just is essential to determine if a project is on track. So project planning, before the project begins, there has to be a plan. There has to be a budget. There has to be a schedule. There has to be project plans, which include baselines. So project planning is necessary for any successful completion of the project. It is a roadmap on how the project will be carried out. Before we move on to the execution phase, you have to plan. So because the third phase here is project execution. You cannot move to execution without a plan. Successful execution of a project depends on effective planning. During this phase, the execution phase, the team develops and completes deliverables. And the project execution, this phase begins with a kickoff meeting. There has to be a meeting before the project is executed. This is the actual implementation, the carrying out of the project. There is a plan on how the project should be done. So during execution, people embark on providing the project deliverables. The project deliverables are completed during execution. Now, the fourth obvious stage after project execution is the project performance and monitoring. Project performance and monitoring. Project performance and monitoring. Now, project performance and monitoring ensures that project results align with the project management plan. Because after executing, then you monitor or check if what was planned here, because you plan, then execute. So you compare the plan vis-a-vis the actual performance. And the reason for monitoring is to ensure that what was planned is actually being carried out. It ensures that the results align with the management plan. And project managers use what we call key performance indicators. The what? The key performance indicators to determine if the project is on the track. If the project is on track, you use key performance indicators. That's project monitoring. Then the fifth stage is closure, project closure. Project closure. You close the project. Once a project is complete, then the team must formally close it. And project managers generally hold a post-mortem meeting to evaluate successes and failures of the project. So project close helps a team identify things that went well, things that are the areas for improvement. Okay? So it's important to check when closing the project, where did the company go wrong? And what are some of the failures, so that if the same project is to be carried out next time, then improvements can be made. So the project team will evaluate areas for improvement. And once the project is complete, the managers will have the tasks, a few tasks to carry out. They will need to create a project, what we call punch list of things that didn't get accomplished during the project, and work with the team members to complete them. Then the project team can also perform a final project budget and prepare a final project report. And during project closure, the team should also collect all the project documents, the deliverables, and store them in a single place. So there's a lot that can be said about all these stages. There is a lot that goes into all these stages. These are the broad phases. All this we covered in detail in the project management topic. Okay, so these are the stages, 10 marks: project initiation, project planning, project execution, project monitoring, and project closure, 10 marks. So you can see, candidates, that was a simple question for students at your level. It was a simple one. That's December 2021. We have completed December 2021. Thank you for choosing to study with us. We continue to provide solutions to past paper questions under the subject leadership and management. Bye-bye. Hello and welcome back to the lesson. Today we are going to answer question number 4, December 2021. The subject is Information Communication Technology. Question 4A reads, highlight 4 characteristics of Internet of Things. A. Characteristics of Internet of Things. First of all, what is the meaning of Internet of Things? Now, Internet of Things refers to a network of interconnected physical objects or devices and other items that are embedded with sensors, software, and connectivity capabilities. You understand? Things. We are talking about Internet of Things. Internet of Things is a network of interconnected physical objects like devices, vehicles, and other items that are embedded with sensors, are embedded with software and connectivity capabilities. And these objects can collect and exchange data with each other and with the central systems or even cloud platforms over the internet. The question is, what are the characteristics of the Internet of Things? The first characteristic is connectivity. Connectivity. Internet of Things devices candidates are connected to the internet and can communicate with each other, enabling seamless data exchange and integration across various devices and systems. That's the first characteristic, connectivity. Number 2, sensor based. Internet of Things devices are equipped with sensors that collect and monitor real-time data from the physical environment. And these sensors can measure and detect various parameters such as temperature, humidity, motion, and location. Sensor-based. 3, data-driven. Internet of Things are data-driven. Internet of Things generate a massive amount of data from connected devices, and this data can be collected, analyzed, and used to gain insight, can be used to make informed decisions and improve operational efficiency. You understand? And these Internet of Things systems candidates often rely on advanced analytics and machine learning techniques to extract meaningful information from the collected data. 4, automation and control. Automation and control. Internet of Things enable automation and remote control. This is the remote control of devices and processes. And through connectivity and data exchange, Internet of Things systems can independently trigger actions, make adjustments, and also respond to changing conditions without human intervention. And this automation can lead to increased efficiency, reduced costs, and improved user experience. So these are 4 characteristics of Internet of Things. 1, connectivity. 2, sensor-based. 3, data-driven. And 4, automation and control. 4 marks. Part B reads, propose 4 duties of an information center in an organization. Duties of an information center. Duties of an information center in an organization. The first duty of an information center is information management. Information management. Information management. An information center is responsible for managing and organizing information sources within the organization. And that includes acquiring, storing, categorizing, and maintaining information to ensure easy access and retrieval by the users. So the first duty of an information center is information management. The second duty, research and analysis. Research and analysis. This is another duty of an information center, is to carry out research and analysis. All right? Information centers conducts research and analysis to gather relevant information and provide insight to support decision-making process within the organization. And that may involve monitoring industry trends, competitor analysis, market research, and other forms of data analysis. Research analysis. The third duty is knowledge dissemination. Knowledge dissemination. Information centers disseminates information to the appropriate stakeholders within the organization. And that includes creating and distributing reports, newsletters, and other informational materials, as well as organizing training sessions and workshops to enhance knowledge sharing and collaboration. 4, user support. Information centers also provide user support and assistance. User support and assistance. All right? This is user support and assistance to employees or users seeking information or using information systems. And that it may involve helping users to navigate databases, providing guidance on research methodologies. It may involve troubleshooting technical issues and also offering training on information systems and tools. So these are 4 duties of an information center in an organization. Number 1, information management. Number 2, research and analysis. Number 3, knowledge dissemination. And number 4, support, user support and assistance. 4 marks. 4 marks. Let us move on to part C, which says ABC Transport Company has opted to train its users before a new system is implemented. Suggest 4 benefits of training users before implementing a new information system. Benefits of training users before implementing a new information system. What are the benefits of training users before implementing a new information system? The first benefit is in relation to the adoption of the new system. When users are trained, then there is increased user adoption. Increased user adoption. Training users before implementing a new information system ensures that they understand its functionalities, they understand its features and also its benefits. And that increases user transition. It increases user acceptance. It increases user adoption, thereby reducing resistance to change and facilitating what we call smooth transition to the new system. Because when introducing anything new in an organization, such new introductions can cause employees to resist the change. So there ought to be training of the users of the system, and that training should be in regard to the functionalities of the system, the benefits of the system, and also the features of the new information system. Enhanced productivity. Enhanced productivity. Proper training enables users to effectively utilize the new information system, leading to improved productivity or enhanced productivity. And users are equipped with the necessary skills, knowledge to perform their tasks efficiently, leveraging the system's capabilities and also maximizing its potential benefits. It leads to enhanced or improved productivity. Number 3, reduced errors and support requests, reduced errors, and support requests. Training helps users understand the system's workflows, data entry requirements, and best practices. So that reduces the likelihood of errors and also minimizes the need for support or assistance, resulting in fewer support requests and more self-reliant user base. When users are trained before the system is implemented, then there will be reduced errors because they are trained. There will be reduced support requests because they would have known how to navigate or how to use the new information system. 4, improved. The fourth benefit is in relation to data accuracy. Improved data accuracy. Training users before implementing a system can lead to improved data accuracy and integrity. Improved data accuracy and integrity. Why? Because candidates training users on data input, on validation, training users on quality control processes ensures that they adhere to proper data management practices, and that promotes data accuracy and integrity, reducing the risk of data inconsistencies or errors that could impact decision making and the overall system performance. So training users before implementing a new system can improve data accuracy and data integrity. So these are 4 benefits. 4 marks. 1, increased user adoption. 2, enhanced productivity. 3, reduced errors and support requests. 4, improved data accuracy and integrity. 4 marks. That is part C. Then part D reads, outline 4 advantages of using joint application design techniques in the design of an information system. 4 advantages. Advantages of using a joint application design in the design of an information system. But first of all, what is a joint application design? Joint application design, candidates, is a structured and collaborative technique used in software development to gather requirements, to design system functionalities, and also design applications. The question is, what are the advantages? So a joint application is a collaborative, from the word joint. It is a collaborative and structured technique that is used in software development process to gather requirements and also to design what we call system functionalities. So what are the advantages? The first advantage is stakeholder, because we are talking about joint. This is what we call stakeholder collaboration. Stakeholder collaboration. JAD, that is joint application design. JAD involves bringing together key stakeholders, including users, including managers, including IT professionals, in a collaborative design session. And that promotes active participation. It promotes effective communication and shared understanding of system requirements, leading to a more comprehensive and accurate system design. stakeholder collaboration. Requirements gathering efficiency. JAD sessions allow for efficient gathering of system requirements. Why? Because by involving all the stakeholders in a facilitated session, requirements can be identified, they can be discussed and documented in real time, and that reduces the time and effort required for the traditional requirements gathering methods such as individual interviews or even surveys and so on. That's the second advantage. You have to give 4 advantages. Number 3, consensus building. JAD fosters consensus among the stakeholders by encouraging open dialogue, addressing conflicts, and even reaching agreements on system features and functionalities. And through facilitated discussions and decision making, potential misunderstandings and conflicts are resolved early in the design process, leading to shared vision and a greater stakeholder buy-in. Stakeholder buy-in, consensus building. The fourth advantage is in relation to early prototype development. Early prototype development. Early prototype development. What does that mean? Now, the joint application design or JAD often involves the creation of prototypes or mock-ups. They are sometimes called mock-ups. These are mock-ups during the design session. And that allows stakeholders to visualize the system's user interface, workflows, and also functionality. So early prototyping facilitates feedback and iterative refinement, ensuring that the final system design meets user expectations and user requirements. So these are 4 advantages of using the joint application design in the design of an information system. We earlier on, before answering the question, defined what the joint application design is, and we say that is a structured and a collaborative technique that is used in software development. The first advantage is stakeholder collaboration. Number 2, requirement gathering efficiency. Number 3, consensus building. Number 4, early prototype development. These are 4 advantages, 4 marks. We are moving on well. Let's now proceed to question 4E. Roman 1, define cell referencing in the context of spreadsheet applications. Define cell referencing. E1, definition of cell referencing in the context of spreadsheet applications. Cell referencing. What is cell referencing? Now, candidates, cell referencing in the context of spreadsheet applications refers to the use of specific references to identify and locate cells within a spreadsheet. It refers to the use of specific references. Refers to the use of specific references to identify and locate cells within a spreadsheet. All right? It refers to the use of specific references to identify and locate cells within a spreadsheet. And it allows users to perform calculations. It allows users to perform calculations. Cell references allows users to perform calculations. And not only calculations, candidates, but also it can allow users to create formulas and manipulate data. Create formulas and manipulate. It allows users to perform calculations, to create formulas, and also to manipulate data by referring to other cells' values. By referring to other cell values. These are values in other cells. So users can manipulate data, they can create formulas, they can perform calculations by referring to other cell values. That is the use of cell referencing. Do you understand? That is the definition of cell referencing. Then Roman 2, using an example, explain one type of cell referencing. Now, we are answering part 2, type of cell referencing. Using one example, the question is, using an example, explain one type of cell referencing. One type of cell referencing is relative cell referencing. One type of cell referencing is relative cell referencing. Now, in this type, when a formula is copied or filled into adjacent cells, the cell references in the formula adjust automatically based on their relative positions to the new location. All right? I repeat, relative cell referencing is one type of cell referencing. And in this type, a formula can be copied or filled into an adjacent cell or adjacent cells. And the cell references in the formula adjust automatically based on their relative positions to the new location. For example, if you have a formula in, say, cell A1, B1, all right, or in cell C1, and we copy it to cell C2, the formula in C2 can automatically adjust to the cell A2 and B2 because the references are relative to the location of the formula. And that type of referencing is useful when performing calculations that involve data from adjacent cells and need to be copied to multiple rows or multiple columns in a spreadsheet. So this is the definition of a cell referencing, and there is one type of cell referencing known as the relative cell referencing. Relative cell referencing. So this explaining this relative cell referencing, you earn 2 marks, and this definition you earn these are 2 marks again. 2 marks for definition and 2 marks for giving and explaining a type of cell referencing. We've answered question 4, December 2021. Thank you for attending the lesson. When we meet in our next session, we're going to answer question number 5. Bye-bye. Greetings and welcome back to the lesson. We, in our today's lesson, going to answer question 5, April 2023. The subject is ICT. Question 5A reads, highlight 5 objectives of an information system design. 5 marks. Highlight 5 objectives of an information system design. The first objective is to do with efficiency. The design should aim to improve the efficiency of the information system. The second objective is accuracy. That means the design should ensure the accuracy and reliability of data within the information system. The third objective is scalability. That means that the design should be scalable to accommodate future growth and changing business needs. Number 4, usability. The design should prioritize usability and user friendliness. Then lastly, number 5, security. The design should incorporate robust security measures to ensure the confidentiality. In other words, to protect the confidentiality, integrity, and availability of the information system. So those are 5 objectives. Number 1, efficiency. Number 2, accuracy. Number 3, scalability. Number 4, usability. Number 5, security. So let us put the objectives down. Objectives of an information design, information system design, information system design. Objectives of an information system design. What did I say? Number 1, I say number 1 is efficiency. 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 The design should aim to improve efficiency of the information system by streamlining processes, by reducing redundancies, and optimizing resource utilization. 2, accuracy. Accuracy, from the word accurate. The design should ensure the accuracy and reliability of the data within the information system, and that includes implementing data validation rules, error handling mechanisms, and data integrity controls. 3, scalability. Scalability. The design should be scalable to accommodate future features, should be able to accommodate increased data volumes and expanding user requirements without significant disruptions or performance degradation. 4. Usability. Usability. The design should support user friendliness, should prioritize usability and user friendliness. It should be intuitive. It should be easy to navigate, and it should provide a pleasant user experience. The user interfaces should be designed with an end user in mind, considering their needs, their preferences, and even their skill levels. Then lastly, security. Security. The design should incorporate security measures to protect confidentiality, integrity, and availability of information system, and that includes implementing access controls, encryption, and authentication mechanisms, and also monitoring tools to detect and prevent unauthorized access or data breaches. So these are 5 objectives of an information system design: efficiency, accuracy, scalability, usability, and security. 5 objectives, 5 marks. Part B of this question reads, explain 5 possible reasons why an organization may decide to replace an information system. Reasons why an organization may decide to do what? To replace an information system. 1 is technological obsolescence. 1. Technological obsolescence. Technological obsolescence. The existing information system may become outdated. It may become incompatible with new technologies. It may be incompatible with software versions or even hardware platforms, and that can limit its functionality. It can limit integration capabilities and performance, prompting the need for replacement. Number 2, lack of scalability. Lack of scalability. If the current system cannot handle the increasing data volumes or even user demands or the business growth, it may be necessary to replace it with a more scalable solution that can accommodate future needs. 3, inefficient processes. An information system may be replaced if it is unable to support or optimize the organization's core processes. And if the system hinders productivity, it may cause bottlenecks. All right? And a more efficient replacement may be sought. Inefficient processes. Integration challenges. Number 4, integration challenges. If the existing technology or information system cannot effectively integrate with the other systems or other applications or other platforms, then it may impede data flow It may hinder communication or even create what we call data silos. And a replacement with a better integration capabilities may be necessary to improve efficiency and collaboration. 5, cost effectiveness. Cost effectiveness. In some cases, organizations may find that the cost of maintaining and supporting the current system outweighs the benefit it provides. So if the system requires extensive customization, frequent repairs, or even expensive licensing fees, replacing it with a more cost-effective solution may be a viable option. It may be a viable option. So these are 5 reasons why an organization may decide to replace an information system. Technological obsolescence, number 1. Lack of scalability, number 2. Inefficient processes. If the current system is inefficient, if it cannot be integrated with other systems, or if the costs outweigh the benefits, then such a system ought to be replaced. Part B, that is part B of question 5, 5 marks. I'm now going to answer C. Part C. Enumerate 5 reasons why memory management is required in a computer system. Why memory management may be required in a computer system. Why memory management may be required in a computer system. The first reason is in relation to resource allocation. Resource allocation. Memory management ensures efficient allocation of memory resources to running programs or processes. And it allocates memory space based on their size requirements and optimizes memory utilization to maximize the overall system performance. So one reason why memory management may be required in a computer system is because of resource allocation. Number 2, memory because of memory protection. Memory management enables protection mechanisms to prevent unauthorized access or even modification of memory areas. Memory management ensures that each program or process operates within its allocated memory space and cannot access memory regions assigned to other programs, and that enhances security, the system of the security. All right. That is the second reason why memory management may be required in a computer system. 3, memory sharing. Memory sharing. Candidates, memory sharing, we can say, facilitates, we can say, in other words, memory management facilitates memory sharing. Memory management facilitates memory sharing among multiple processes, allowing them to access data or even code segments, and that improves efficiency by reducing duplication of memory resources and enabling what we call inter-process communication. So memory sharing is another reason why memory management may be required in a computer system. The fourth reason is known as memory allocation. Memory allocation. Point number 1 is resource allocation. Point number 4, memory allocation. When a process or program terminates or is no longer in use, memory management handles the deallocation of the associated memory. And it does that by freeing up memory space and makes it available for other processes or programs, and thereby preventing memory wastage and memory fragmentation. So memory management is required because of memory allocation. 5, memory organization. Memory organization. Now, memory management organizes what we call the memory. Memory management organizes the memory into logical units, such as pages or even blocks, and it does that for efficient data storage and efficient data retrieval. So memory management manages memory fragmentation, compaction, and swapping techniques in order to optimize memory usage and minimize performance degradation. So these are reasons why memory management may be required in a computer system. 1, resource allocation. 2, memory protection. 3, memory sharing. 4, memory allocation. 5, memory organization. 5 reasons. How many marks? These are 5 marks. That is C. D. Tujenge Limited is in the process of developing a new information system. A few managers are reluctant to embrace the new information system. Roman 1. Identify the most suitable method of system changeover to apply in the above scenario. Roman 2. Outline 4 advantages associated with the method identified in D1 above. So D1, D Roman 1. Most suitable method of system changeover. Most suitable system of changeover. Now the change is from, we read that is in the process of developing a new information system. The change is from the old system to the new system. So identify the most suitable method of system changeover to apply in the above scenario. We are told that a few managers are reluctant to embrace the new information system. So 1 method candidates to apply in this scenario. The scenario is that a few managers are reluctant to embrace the new information system. So the most suitable method of system changeover is to apply in this scenario is would be what we call the incremental changeover approach. The incremental changeover approach. The organization can use the incremental changeover approach. That means that the organization should implement the change in phases. The change should not be radical because more people or managers or employees may resist the change. So it's supposed to be gradual, it's supposed to be incremental. It has to be done in phases. So that would earn 1 mark. One mark. Where there is potential resistance to any change, then it's advisable to make incremental changes, not radical change. Don't initiate the changes wholesomely. Do it in phases, so that it can be embraced. The change can be embraced by all that are affected by the change. Roman 2, outline 4 advantages associated with the method identified in D1 above. What are the advantages associated with incremental change? Advantages, Roman 2. Incremental change over method. Advantages, this is Roman 2. Advantages of incremental changeover method. The first advantage is that this approach allows for a gradual implementation of new information, and that mitigates the risk of complete system failure or disruption, or as the organization can transition one module or even a department at a time. Incremental may mean that the change be effected, say, in one department. Could be, first of all, say, the finance department, depending on the nature or the level of resistance expected. If most resistance is being witnessed, say, in the marketing department, then the organization can gradually shift to departments that are likely to embrace the change. Could be, say, the finance department. If it has the finance department, the manager has no problem with the system, the new information system, then change can be initiated in that department first. So there is reduced risk when dealing with, when initiating change using the incremental changeover method. The first advantage is reduced risk. Now, this reduced risk, I've said, is mitigated when the risk is mitigated against when the incremental changeover method is used. This method allows for gradual implementation, and that kind of change can allow the members who are resisting, the managers who are resisting, time to familiarize, or time, they can be allowed time. Over time, they may embrace the change as they see that the change is not as risky as they expected. Do you understand? This approach mitigates the risk of complete system failure or even disruption, because the organization can transition from, say, one department at a time. Instead of changing all the systems in information system in all the departments, the change is initiated in a department, one department at a time. That is the first advantage. The second advantage, user acceptance and training. User acceptance and training. Now, by implementing the new system in phases, by implementing the new system in phases, users have the opportunity to gradually adapt to the changes. And this approach allows for sufficient user training and support, and thereby increasing the chances of user acceptance and reducing resistance. Do you understand? Yes. 3, continuous operation or operations. With the first approach, or with the incremental changeover approach, the existing system continues to operate alongside the new system during the transition period, and that ensures minimum disruption to the organization's operations. That means that there is continuous operations because the new system runs parallel with the existing system, and that minimizes disruption to the organization's operations, which is a critical function that can be performed. Do you understand? This ensures minimal disruption to the organization's operations. Why? Because critical functions can still be performed using the old system while gradually transitioning to the new system. 4, flexibility and feedback. Flexibility and feedback. The first approach, the incremental changeover approach, allows for flexibility and also feedback during each phase of implementation. That means that adjustments and improvements can be made based on user feedback and lessons learned from earlier phases. And that enables the organization to refine and enhance the system as it progresses, and thereby increasing the likelihood of a successful implementation. So these are 4 advantages of incremental changeover approach. 1, reduced risk. 2, user acceptance. 3, it allows for continuous operations of the organization. Then flexibility and feedback. 4 marks. So we've done the April 2023 question 5. We'll continue to revise the other questions in our subsequent lessons. In our next lesson, we'll answer question number 6. Then thereafter, we'll answer question number 7. Thank you. God bless you. Bye-bye.
Hello learner, welcome to Manifested e-learning platform. My name is F.A.M. Ngwiri, a practitioner within the financial services industry in Kenya. Today, ladies and gentlemen, we are discussing about the financial modeling and data analytics August 2023 sitting. The question that we are going to discuss is question 21. It reads as follows. Dado Limited, a technology startup, is seeking to raise funds for its expansion plans. The company's management is considering selling an equity stake to investors and is looking to determine the appropriate valuation for the company. Dado Limited operates in the software as a service SaaS industry and has provided you with the following information for its financial modeling analysis. Number 1, key components of the company's projected financial statements for the next 5 years are as follows. Year 1, revenue 5 million, cost of goods sold 2.5 million, operating expenses 23% of sales, depreciation 400,000. Year 2 to 5, revenue expected to grow at a rate of 10% per annum, cost of goods sold 50% of revenue, operating expenses 23% of revenue, depreciation 400,000. Number 2, the company plans to invest 3% of projected revenues for each year in capital expenditures to support its expansion plans. Number 3, the company will repay the outstanding loan balance in equal monthly installments over the loan term of 5 years. The loan outstanding as of 31st December 2022 was 2.5 million. Number 4, the interest expense will be calculated based on the outstanding loan balance and the annual interest rate of 15%. Number 5, the company's receivables turnover ratio is estimated to be 30. The company's payables turnover ratio is estimated to be 26. Number 7, the initial accounts receivable balance at the end of the year 2022 was 500,000. The initial accounts payable balance at the end of year 2022 was 400,000. Number 8, the tax rate will remain constant at 30% for all years. Number 9, the risk-free rate is assumed to be 12.5%. Number 10, the equity risk premium is estimated to be 7. Number 11, the beta of the company's stock is estimated to be 1.3. Number 12, the debt ratio is 0.4. Required, using Excel, perform the following tasks. A, calculate the free cash flow to firm for each year based on the historical financials and projected future assumptions. B, determine the appropriate discount rate, cost of equity for Dado Limited, considering factors such as risk-free rate, equity risk premium, and beta. C, determine the value of the firm and the value of equity. D, perform a sensitivity analysis on the value of the firm by varying the revenue growth rate between 8% and 12% per annum. Note, use appropriate Excel calculations or functions rather, formulas and financial modeling techniques to perform calculations and create the financial statements and schedules. Save and upload your MS Excel workbook. So ladies and gentlemen, we are going to work out as usual on the right of our screen where it's indicated solution right here. So as you can see, we have the assumptions given to us over here that are needed and the years, the respective years moving towards the right. So let's fill that out. We are saying that revenue, number 1, is 5 million over here, and we can be able to highlight as we update each and every item. 5 million. Projected revenues, 5 million. And we are saying that the revenue growth rate over here is going to be driven by the second statement over here, the years 2 through to 5. Revenue is expected to grow at a rate of 10% per annum over here. And we are saying that it's going to be 10% per annum over here. So you can put 10% and right over here, 10%. That. So it means it's going to be plus that one times, we open the brackets, 1 plus this 10% that is down over here. So that you can be able to get the projected revenues like that as we move towards the right here. So this is expected to remain constant like so. And so here we also say that these ones are going to remain as those values there because they are picking from this value. The previous value then we're increasing it by a factor of 10%, 10% and 10% and so on and so forth like that. Then you're saying that the cost of goods sold as a percentage of revenue or as a percent of revenue right there will be driven by this first statement. The second statement over here, the COGS or the cost of goods sold is 2.5 million right here. And we can then just put over here the 2.5 million right here. That. And then we're saying that cost of goods sold should be 50% of revenue, like that. So it's just going to be, as we move towards the right over here, because we already have the revenue values here, so it's 50%. So it's just going to be plus 0.5, or you can just put it like so, that instead of putting it in form of percentages like that. So we're going to say plus 0.5 times the revenues. It's half of revenues. But of course this one, and we are saying we're just going to reduce the decimals like that, and then control R, so that you can be able to fill out the amounts of cost of goods sold. And you can clearly see here that is half of that value, half of that value, half of the revenues there. So we are moving on very well, and we are saying that we will then need to model the operating expenditures as a percentage of revenue. So operating expenses right here, we can say that these are the values here. 23% of sales. So operating expenditures over here, we can just put 23% over here of sales, and here it remains 23% of revenue. So you can just put it over here, 23%. 23%, and we can just then just drag it towards the right there. How about depreciation and amortization? We are saying, so we've done those two. Depreciation is 400,000, and from years 2 through to 5 also are 400,000. So we just put 400,000 there. Then we just drag it, moving towards the right. With that, we move ahead and model the tax rate. So as usual, we just highlight what we've done. The tax rate can be guided based on note number 8 right here. 30% for all years. The tax rate will remain constant, 30% for all years. So we just put here tax rate 30%. Move towards the right. That. The interest as a percentage of debt would require us then to come up with a debt schedule. So here I can be able to come up, aside from the assumptions, you come up with a debt schedule. Debt schedule. And we'll walk through together how to compute the debt or the current debt there. So we're saying the debt outstanding brought down from the previous year, it can be driven or is driven by note number 3. So here up to there, just highlight that and we read it together. The company will repay the outstanding loan balance in equal monthly installments over the loan of 5 years, or the loan term of 5 years. The loan outstanding as of 31st December 2022, 2.5 million. So here 2.5 million. And you can be able to say balance BD brought down over here, and we say it's 2.5 million. So we'll have then a component of interest right over here, like so. And how do we get the interest? The interest will be based on the balance brought down. So it's going to be the percentage over here, which we're saying the percentage given to us there should be driven by note number 4 as well. So note number 3 and note number 4 can be able to can be able to be worked out together or jointly. So you can say 15%. The interest expense will be calculated based on the outstanding loan balance over here. So the interest over here will be 15%. So I can just then now put over here the interest right over here 15%. That, and we can be able to then control R like that. So it's going to be plus that value 15%, then we multiply with the balance brought down 375. So with that we can then compute the repayment. So here we have repayment. And for the repayment, we have been told something very important right here. That, note number 4, the interest expense will be calculated based on the outstanding loan balance and the annual interest rate of 15%. That's fine. Note number 3, the company will repay the outstanding loan balance in equal monthly installments over the loan term of 5 years. The loan outstanding as of 31st December 2022 was 2.5 million. So we need then to spread out the loan repayment over a 5-year period over here. So here we can term this as debt schedule. Like so. And we say that the repayment over here is just going to be given to us as the 2.5 million over here. And that one we lock it in. We lock it and then we divide by 5. That. And because this is the repayment, allow me to put a negative sign over there like that to indicate that that's going to be deducted. So the closing balance will be, we get the balance brought down and then we subtract, or we are adding. Why I'm adding is because this is already a negative sign, that value, and we get 2 million. So this one becomes the opening balance in here what? In year 2. Yeah. So we can just link it, that value like that. We say fine. So we just then autofill, control R like so. So that it picks the balance over here, picks that one there. The balance over here, it picks it like that. The interest payment, if I'm to then proceed, should be control R, that. The repayment should be based on a fixed amount of 5 years. So control R. Closing balance should be, sorry for that, should be able to pick the closing balance over here, shift, so control R, and that is what we're saying represents the debt schedule. How you can be able to know whether it actually works is because we have a zero balance right over here based on note number 3, that we'll be able to repay the loan in 5-year periods. So this is the period 1, 2, 3, 4 and 5. Interest has been computed to us over here like that, and the repayment amount is there. So with the debt schedule then, we can then proceed on with our analysis over here, or our assumptions tab here. Note number, we can proceed on with that's debt outstanding, capital expenditures. So with capital expenditures, we can then just compute the capex based on note number 2. You can see it here. The company plans to invest 3% of projected revenue for each year in capital expenditures to support its expansion plans. 3% of projected revenue. So we are saying capital expenditures, we just put 3%. So in terms of shillings, so it's going to be 3%. So plus 0.3% times the revenue. 3% times projected revenues there. So 150,000. Then we just drag it towards the right like that. We can then move ahead and model the receivables, payables, the debt ratio. So the company's receivables turnover ratio is estimated to be 30. So that's what we have up to there, and then 26 for the company's payable turnover ratio. So receivables turnover ratio, we're saying is 30, and that is now of course expected to be modeled moving towards the right, and this is 26. Control R. With that, we can proceed on as well. We've been told that the initial accounts receivable balance at the year 2022 was 500,000. The initial accounts payable balance at the end of year 2022 was 400,000. That's fine. This one we'll be able to do it once we're working out the free cash flow to farm. The risk-free rate, the equity risk premium, the beta, we'll also be able to use that. The debt ratio is 0.4. We can be able to put that as amongst our under the assumptions part here. So 40%. That 40% is the same as 0.4. So then we can then now, of course, the rest is just presentation. Just put a thick border like that, consistent with this. You can also put this just above the debt schedule. Here's 1 through to 5. You can decide to put it like that. And then now we come up with the income statement. Income statement. Income statement. So because it's bolded, Control B, use that. And now we will be able to work out what, we'll be able to use whatever we've not used before to be able to come up with the schedule now. So we start with revenues. We just pick it up from up here. And then just allow me to use, because I can't pick it up from up there, allow me to use COGS. The actual COGS. And then the gross profit. Gross profit. So we'll still have the same years given to us over here. So copy. For presentation purposes. So the projected revenues, we already worked it out up above over here. So there's nothing that we should be able to work out from there as far as the projected revenues are concerned. And we can then just fill that up. The cost of goods sold, we've already worked it out. There. The gross profit, we are saying we're just going to have plus, then we subtract that value, 2.5, Control R, we bold everything here as far as the gross profit is concerned. We put what you can call borders, proper borders, that to show that that's a total. Then we proceed on to get the operating expenses. Expenses. You're saying the operating expenses will be, we've been given the operating expenses over here as a percentage of revenue as 23%. So we're just going to get plus 23%, and we multiply that with the revenue. We have that values there, that value there. Then after getting the operating expenses, we get the earnings before interest, taxes, depreciation and amortization, what is also called EBITDA. The earnings before interest, taxes, depreciation and amortization. That of course should be bold, Control B. Which you're seeing is just going to be plus that, then we subtract that value. 1,350,000. Move it like that. Then we are saying that once we have the EBITDA, we subtract the interest expense. From down over here, I can see the interest percent as percentage of debt over here is given as a percentage. But remember, under the debt schedule, we calculate the interest expense right over there. So we don't need to really struggle so much. So we just say interest expense you're saying we're just going to get from here, just fill it up from there, pick it up from there rather. And you're saying that once we deduct the interest expense, we get profit. Did we deduct depreciation? We didn't deduct depreciation, so we're supposed to deduct depreciation first. So it's going to be, so if we deduct interest, earnings before depreciation, earnings before interest, taxes, depreciation and amortization. That. So we first of all deduct depreciation. So let me just remove this first for the time being, just a bit, guys, apologies. So depreciation and amortization. That. And you're saying the depreciation and amortization over there will be deducted or will be picked based on the amount that is right here, corresponding values, depreciation. So Control R. Then we get earnings before interest and taxes, so EBIT. That. And so this should be bold. So we're getting that minus that. Once we have the earnings before interest and taxes given to us, so that means we deduct the interest, so interest expense. So the interest expense, we already worked it out over here. So we pick it from there, or from what we call the debt schedule. With the interest expense computed and inserted in the income statement extract or forecast, we then get profit before tax. Tax. Before tax. So pack that value, then we subtract that value. Control R. Then tax. See, we have the not the tax rate, tax. Pardon me for that. So taxes. So plus, you're saying it's just going to be, the tax rate is 30% times profit before tax right here. 172,500. Do it like that. And remember, the profit before tax should be bolded and put in form of a a total. That even EBITDA should also be done the same total, like so. Then we get net earnings. This should be bolded. Control B. Then we put the borders. Double underline under. Sure that that's the final total there. You're seeing it's just going to be minus that value. Yes. So you have that. Then we shift Control R. With that, all that's left is just editing, presentation purposes. So it's good to be smart in terms of how you do your presentations. With that, we can proceed on to now compute the FCFF, the free cash flow to farm. That's what is required of us under under part A. Calculate the free cash flow to farm FCFF for each year based on the historical financials and projected future assumptions. So FCFF, we just move like so and type the formula for FCFF. So FCFF is given to us as net income. We add non-cash charges, which represents depreciation and amortization, plus interest 1 minus tax, and then we subtract fixed capital investments, which represents capital expenditures. Then we also subtract working capital investments, like that. So this should be bolded because it's a very key formula used in terms of valuation, equity experts or financial analysts. And we're saying that the free cash flow to farm is given as the net income or net earnings plus non-cash charges, which represents depreciation and amortization. Then we add interest 1 minus tax. What we're saying is after tax interest expense. Then we subtract fixed capital investments, which represents capital expenditures. Then we subtract working capital investment, the changes in working capital. And we'll arrange it in a columnar format over here, just the same way we calculated the income statement. So here we have FCFF, FCFF, like that, and we have the corresponding years, like that. So here we need to make sure consistency is key. Control B. So control bold. Yes. So here we start with net income, net earnings. Then we need to also have depreciation and amortization. We move on, add interest 1 minus tax. That then we fixed capital investments, or what you can say fixed capital investments. Allow me to use that short term, which is also called capital expenditures. Working, then we subtract the working capital investments there. Investments. So that we can be able to get the FCFF. FF. And of course this should be bold, control B. So the net earnings, we just pick them from above there. The depreciation and amortization, we pick them from above as well. After tax interest expense, remember under the debt schedule we calculate the interest expense there. So we'll just pick the interest component from the debt schedule, then we subtract 1 minus tax plus is the interest. Then we multiply that against the tax, 1 minus tax. So if the tax rate is given to us over here as 30%, so would you mind if I put it as 70%, because it's just 1 minus 30%, so you just put 70%, 0.7, that, then we do it like that. Then we get the fixed capital investments. That is now what you're seeing is the capital expenditures. The capital expenditures, let's see what they tell us here. The capital expenditure is driven by note number, that's accounts receivable turnover, note number 2. The company plans to invest 3% of projected revenue for the year in capital expenditures to support expansion plans. 3% of projected revenue. So plus 3%. So we have it. We didn't put the capital expenditures, or we already have the capital expenditures given to us here in terms of value. Capital expenditures. So just pick them there. That. And please note that we want to put it as a negative value because we're subtracting it. Notice from the formula here, capital expenditures. So we put a minus sign there not to confuse anything, but just to make sure that we're doing what is correct. So with that, then we can proceed on to work out the working capital expenditures. So we will then need to have working capital investments schedule over here. Working capital schedule. With this working capital schedule over here, then we are saying that we need the spelling. It's there. Schedule, yes, that. So what we need is the accounts receivable, over here. Then the payables, like that, and then we get the working capital investments. Working capital. Copy the same. So undo, paste special, just want the values. That, and then we control B. Control B. So the receivables is just going to be given as the revenue divided by the receivables component, because we've been told that the company's receivables turnover ratio is estimated to be 30. Payables is also going to be 26. So for us to be able to get the receivable itself is just going to be the revenue, because it's based, when you see turnover, it's going to be based on revenue. So we are saying it's just going to be given as the revenue divided by receivables turnover component, receivables turnover, that value. That's what you're saying. The payables is going to be given as the revenue over the receivables, so plus revenue over the payables, 26. And that's what you're saying we have. The working capital is just going to be the change in working capital. What's that? or it should be the other way around. Still gives us a positive value here. Because I'm seeing the payables is going to be that value. So it's going to be the, because we have the payables, just 1 second, just confirming. They were told that the company's payables turnover ratio is estimated to be 26. So the payables going to be given by cost of goods sold, guys. It's not revenue, it's cost of goods sold. Sorry about that. So we just change it to cost of goods sold, have it like that. So we are saying that receivables are driven by revenues, payables are always driven by cost of goods sold. So this is the way it's supposed to be. So we get that, then we subtract that value. That's what we're saying is the working capital for year 1. And if we were to then drag it Control R, that, so we are looking at the change in working capital. So this one, the change in working capital, because we do not have a beginning value over here, we cannot be able just to say that if you are to say this value minus the beginning value and you do not have a beginning value, then the change in working capital would not be able to be computed relatively easily. That. So if I'm to just get these values like so, Control R, that, and we look at the change. So from here to the prior year plus that one over that one minus 1, you see, we cannot be able to get any value over here because we do not have any value over here. But as we drag it like that, so we're saying it should be driven by, sorry, it should be driven by that one there like that. Of course that's the rate, but we want to know the amount. So we are saying it's just going to be given as plus that one minus the beginning value there. We'll just remain with that. Then we say plus that one minus, we're looking at the change, please guys, minus that value, we get 7,000 like that. And we can be able to just drag it like so. So you can see a change in working capital has been shown to us there. So with the change in working capital for year 1, we are saying it's just going to be these values over here, change in working capital, change. So let me put it like that, plus that one. Let me just put like that because there's no beginning value anyway. So work plus that value, then we're saying it's just going to be picking from over here because we want it in full values, in just whole numbers, integers, and just put them like that. So the free cash flow to farm, and we remember these ones should be negative because we're saying by the formula minus fixed capital investments, those ones, minus working capital investments, those ones. So those ones need to also be put negative values. So fixed capital investments plus sum Control R. So because you're getting the sum of all of this, because why I'm saying sum, because these ones are already negative, so it's just adding all of them together. We have the free cash flow to farms given to us like that. So the rest that's now that left now is for us to just sort of arrange these schedules into pleasant subtables. And once we've computed the free cash flow to farm, please allow me to use that as red. We've done that. Now we can be able to then, we've done part A. Part B, determine the appropriate discount rate, cost of equity for Dado Limited, considering factors such as risk-free rate, equity risk premium, and beta, like that.
Hello and welcome back to the lesson. Today we are going to answer question 2 of the boardroom dynamics paper that was examined in December 2021. Question 2A is examine 5 strategies that could contribute to effective board evaluation. 5 strategies that could contribute to effective board evaluation. We are going to examine 5 strategies, one being clear objectives and criteria. The second strategy is having independent external facilitator. Then number 3, we'll examine comprehensive assessment tools. Number 4, regular evaluations. And lastly, number 5, action-oriented approach. Those are 5 strategies for effective board evaluation. So we'll begin by answering part A, strategies for effective board evaluation. The first strategy I've said is clear objectives and criteria. Clear objectives and criteria. The board should establish clear objectives for board evaluation process, outlining what evaluation aims at or what evaluation aims to achieve. That is a very important strategy, establishing clear objectives and criteria. The board should also define specific criteria. We are talking of objectives and criteria. The board should do what? Should define specific criteria against which the board's performance will be measured, such as strategic planning, risk oversight, governance effectiveness, and so on. Because to evaluate candidates is to assess. And if the board's performance is to be assessed, then there has to be a criteria. There has to be a standard against which such performance is measured. And one criteria could be strategic planning or even risk oversight. Criteria could be governance, effectiveness, and so on. So that is one strategy for effective board evaluation. There ought to be clear objectives for the board evaluation process. What are the objectives? What are the aims for carrying out board evaluation process? The second strategy is having an independent. The board can consider having an independent external facilitator. Because the board can also do what we call self-assessment. But considering using an independent external facilitator to conduct the board evaluation can be as an effective strategy.